T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now and then. You sound good. Discovery Houston, negative return. Copy, negative return.
Run away, I need time to figure out. Wide awake, seeing signs of slowing down. Oh yeah, we wake up in the morning, think about the nights. Every drink we're pouring starts another fight. It's a hazard to our health, but we do it to ourselves every time. Who knew nobody can hurt me like you do? Stuck me in the dark like voodoo. Go and make your mark, yeah, I'ma love you from afar. Bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. Wanna love you from afar, baby, bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. I know where is home, where to go, what to say anymore. Cause I swear that I've done it, I wrote it, and I sang all the same shit that you've heard before. Because we wake up in the morning, think about the night, how we spend $200 on a dinner and we fight. It's a hazard to our health, but we do it to ourselves every time. Who Nobody can hurt me like you do. Stuck me in the dark like voodoo. Go and make your mark, yeah. I'ma love you from afar. Bless your wicked heart. I know you mean no harm, baby. Bless your wicked heart. Wanna love you from afar, baby. Bless your wicked heart. I know you mean no harm, baby. Bless your wicked heart. I wanna love you from afar, baby. Bless your wicked heart. We never meant for this to be so tragic. Let's go back to the way it was. Maybe you can do your quick black magic. Bring to life all that's dead with us. Who knew? Nobody can hurt me like you do. Stuck me in with your voodoo. Go make your mark, baby. Go make your mark. I'ma love you from afar. Nobody can hurt me like you do. Stuck me in the dark like voodoo. Go and make your mark, yeah. I'ma love you from afar. So wicked hard, wicked hard, wicked hard. I know you mean no harm, baby. Bless your wicked heart, wicked hard, wicked hard. Wanna love you from afar, baby. Bless your wicked heart, wicked hard, wicked hard. I know you mean no harm, baby. Bless your wicked heart, your wicked heart. I wanna love you from afar, baby. Bless your wicked heart, your wicked heart, your wicked heart. Bless your wicked heart.
When the night's getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. So when the night's getting colder, and you're needing that shoulder, these apes got your back. We got each other. All we do is we buy and hold.
Good morning, you filthy apes. Welcome to AMC and APE, where we buy, we hold, and we screw those hedgies. Screw them! That's right. This is where we like to fling poo and eat crayons for breakfast, and sometimes wake up on time. Rock strong. Good morning, guys. I believe it or not, I actually woke up on time this morning, and I had my alarm set on Monday for 5:15, which is about 15 minutes earlier than I normally get up because I had rebooted the computer over the weekend. I still had a few different programs I had to open up before the live stream, and I'm gonna do it actually right now. I'm gonna change it right now because this is gonna keep screwing me up if I don't. But every single day after, my alarm clock's been going off at 5:15 every single darn morning because I keep forgetting to change the clock back to the regular time. So I do the one thing that is like the cardinal rule that you never do is you never turn off your alarm and then roll back over and say just 5 more minutes. You never do that because that's when it gets you every time. And that's what I did today because I was like, oh, you know what? This is still too early. I forgot to change my alarm again, and so I thought 5 more minutes. I'm not that tired. I'll be okay. No, So here we go. Tank Dog says, looks like failure to delivers are really beginning to stack up. And the delivery of shares right now is actually really skyrocketing as well. That's one thing I want to talk about this morning. I was trying to get some of the guys' help last night on trying to figure this out a little bit. But I actually, offline, I figured this, the math out for this. And I'll just show you like a little quick peek into this. And don't forget, today is round 2 of Jerome Powell talking today. I'm going to kind of minimize this page here just a little bit so it's not going to blind you with a big, huge Excel page. It's got a bunch of white cells in there that are going to blind you. So it's only half blinding. But here we go. So I'm gonna actually scroll down, or actually I'm going to scroll up to current time. In column B, we have CHX volume. Now, I've told you guys before that CHX volume is kind of what I view as the indicating factor for shares that are being returned or closing of positions. Anytime they have closing of positions, I think we see that volume going through CHX, and the quantity of shares going through CHX is definitely increasing as of recently. The failure to delivers are also increasing. So kind of interesting to see that the correlation there kind of makes sense. In column, so what I did is I aligned the failure to delivers in column C with the column B CHX volume that's occurring, and aligning the dates together. So you got 37, 37, 36, 36. You can see all the way down. There are holidays in here where you're going to see some blanks in some of the reporting of the data. If it's on the CHX side, it usually means that there just was none for that day. If it's on the failure to deliver date, then it was more than likely a holiday that was in there somewhere. But you'll see some blanks. And basically what I have on the right-hand side over here in column E is the previous difference, day difference. So failure delivers are not accumulative, meaning it's not like if you have, say, for example, on 223 and you have 2.5 million shares, and the next day it's 1.83 million shares, you don't add those together and say like they now have 3.7 or let's see, 4.7 million shares to deliver. That's not how it works. It's what is due for that day. So you can't, and any given specific day is just what's due for that day, and it doesn't roll over to the next day. Every day is just what's due for that day. So the only thing that we can extrapolate from that data is the difference, the previous day difference, right? Like what did they return? Like did they meet the expectations? Did they deliver on what it was that they were supposed to deliver on, or was there exceptionally more amounts of failure delivers the next day, or lower? And that's what this column represents here. And it's just simply current day minus previous day's failure to delivers as a representation. And then you have positional close difference. And what that is that's basically taking this column right here, this previous day difference, minus the previous day's CHX volume, and it gives you your positional close difference. So this is what they returned. This is what the difference is on deliveries between the 2 days, and so this is what kind of gives you a representation of perhaps volume day over day that there's kind of moving through and closing of positions. Now, I'm going to extend this chart down just a tad bit here, and because I need to be able to put in more days here, because I think this goes to F24. Let's see. I don't know that I can get this all on the screen for you guys. Maybe I can, maybe I can't. Yeah, maybe I can. So everything between 3/7 of this month, which was yesterday, to 2/2 of last month, I calculated it out. I summed it all up here, negative or positive. What did they return? And right now, what I've got is 23,648,104 shares. That's a lot of shares in just a little over a month's worth of time. The next portion to this is I took about the month before. I went from, let's see here, F25 is going to be to F48. So then I took from 2/1 of last month back to 12/30, so basically another month's worth of data, previous month, and it was only 10,348,552 shares. So the difference here is double, right? The amount of shares that they've been returning this month compared to last month is double. When you consider how many shares are, being returned here right now, it is pretty massive. And I don't really think it takes a rocket scientist to see this. Oh yeah, I forgot I could minimize this part up here. Thank you, Danny. It's pretty massive. I gotta pin it back up if I want to. now I can't drop it back down. See, now I gotta blind you guys. I like having it up though. Anyways, they're returning more than two. Probably, it depends on which date span you take exactly, but they're getting anywhere between 2 and 3 times the amount of shares returned right now. There is a massive rush to try and deliver a lot of shares right now. And so we're seeing really low amounts of volume, but we're seeing huge amounts of inventory going through here. If you were to normally just add that inventory to our total daily volume, which it is part of our total daily volume, but if you were to put that into the lit market, we would see so much more price movement than this. There's just a ton of delivery of shares right now. So somebody's positionally closing. And I don't know. That's what I'm kind of gathering from this information, is that somebody's positionally closing, and they know that the jig is up, and you can see it. You can see it in the data. So that's what I got for you, and then it's closing. Jason not covering closing. And price is going down. So is what you're saying, but it's actually kind of it's actually kind of rising. Price is actually, I know it seems like it's going down right now, but that's only because you're looking at it at this moment in time. We're on an upwards trend, and since they've been closing, we've been on this upwards trend. So I wouldn't agree with what it is that you're saying right there. You're looking at it from a 1 or 2 day, maybe even 3 day perspective. So you have to look at it from a bigger picture. If you come out, because I just told you over the last month that's what's been happening, and if you look over the last month what's been happening to price, this is what's been happening to price right here, and we've been rising in price over the last month. Over the last 3 or 4 trading days, we've been kind of trading sideways. There was a couple down days that we had in there, but for the most part, we are trending upwards. So yeah, and the quantity of shares here, by the way, that are being delivered, when you consider the total amount of shares that are being required to be delivered, while they are delivering some more shares than what's due, it is so small in the contrast of 190 plus million shares that they need to recover, which is what on loan amount was. So yeah. Jason, not initially. Not initially, and I get this question all the time. People always seem to think that when there's closing of positions that you see price movement upwards right away, and I disagree. I wholeheartedly disagree. Never ever do you see price movement right away. Whenever you see closing of positions, it's usually delayed, and sometimes it's delayed to up to about a half a month. And I've mentioned this on several occasions when I say there's a 15-day counter that I usually put on when I see returning of positions on loan positions being closed out. And it could be up to as much as a 15 trading day difference, which when you consider 15 trading days, that's 3 weeks. So it could be 3 weeks out before you ever see the price improvement. So I disagree wholeheartedly. Marvin says, are we still on the threshold? Well, I got to go through the numbers because I haven't done it yet. So let's go ahead and take a look, and we'll find out. Let me take you guys over to the other screen, so I'm not going to be able to see with what it is you guys are writing. So hold those personal thoughts, comments, questions, or concerns until after you see the big tramp back up on the screen again. Well, let's take a look at these numbers here. Two-factor authentication. If you don't have it, you may want to get it, as somebody could potentially get into your account and screw you up real bad. If you don't like it, get rid of it. But it is good to have that extra level of protection. And when you're setting it up, if it allows you to have a secondary device to be able to access your code, good idea to put that in as well, as you never know if something's going to happen to your primary phone. I'm also asking people to please do not submit your control numbers for the whole interwebs to be able to see, because if you do that, you may be able to have somebody may be able to change your vote. So don't put that out there when you put pictures up. And lastly, take pictures of your portfolio daily or video and save that in a folder someplace, so that in case something should happen with your broker, you'll have evidence or proof of what it was that you held prior to any kind of effery that may happen to your account at any given point in time. So yeah, definitely protect yourself as much as you possibly can. I'm cleaning my glasses. I'm almost done. Yep, those look clean. All right, let's see what we got going on. Starting with price predictions yesterday. I had a price predictions from 650 to 950. Eric had 710 to 7 to 10. Apex had 630 to 930. Einstein had 610 to 910. We ended up finishing $1.76 on Ape. And 601 on AMC. 777 was our total price close. Everybody gets a price prediction point. Eric even had a little bit of breathing room, even with his high prediction. Happy hump day. Jerome Powell, we're going to get him up here talking again just a little bit. Let's see here. Short exempt volume from yesterday. 244.5. For AMC. For Ape, let's see here. Give me a second. I gotta pull the report. $86.7 thousand shares. Yesterday, AMC was down 3.84%. AMC was AMC was down that much. Ape was down, was up 0.57. Utilization. Utilization on AMC. We have 100% still being reported. We're looking at about, that's day number 37 now. 37 straight trading days of 100% utilization. And the date is correct on that for March 7th. And let's see here on Ape, utilization is 84.66. Big, excuse me, hold on. Big jump on that one. 84.66. Big jump. Sounds like they may have loaned a bunch of shares. We'll look that up here in just a few minutes. Max Payne. I'm trying to think back to yesterday whether or not we had a bunch. We did have a bunch of volume kind of starting to kick in on 650 and 5. I think it was, what was our high amount of volume yesterday? Yesterday, high amount of volume on puts was at 5.5. I'm gonna go with it might be 650 today. I'm gonna go with 650 for Max Payne. Let's see. Nope, still 7. Max Payne is still $7. Total combined amount of volume going through off exchanges and EDGX for AMC yesterday was 55.7 through off exchanges. EDGX was 8.83. The combined total on that 64.53 when I expect to see about 64% on a normal day. So that was right kind of on par for a normal day. Our CHX volume yesterday was only 0.43% of the total daily volume, which came out to 69,000 shares. Nice. The 30-day average is 2.13, which means that CHX volume for the first time, well, we actually had 2 days last week, I think it was, but is back down again to what I would consider to be like normal ranges. But volume was super, super low yesterday too. So it's kind of starting to die off on that CHX volume there. We'll see if we get like 1 or 2, maybe even 3 days in a row of that, we could see us fall off the threshold list. Somebody asked about that, by the way, and let me look and see again here. Yes, we are still on the threshold list. Let's see here. Moving on to Ape. Off exchange volume was 54.89 and EDGX was 6.32. Grand total on that 61.21%. We're looking at 2.8 million, or 2.8% rather, lower than I think an average day for us. CHX volume is starting to kind of spike a little bit here. It was only 0.07, but we've been seeing much lower numbers on Ape, and 30-day average was 0.06. On GME, CHX volume was also spiking as well. 0.87 of the 30-day average, or for the day yesterday, and then 30-day average is 0.33. So it was definitely spiking yesterday. Taking a look at institutional ownership. Yesterday it was 133.892 million. Today it is 133.892 million, no change. On options, highest amount of call volume right now, still at a $10 strike, same as it was yesterday. There was 37.8 thousand contracts yesterday. There's an open interest. There's now 38.2. On puts, highest amount of open interest is stacked up at a $5.50 strike, which is down from 6 from yesterday. Excuse me, yesterday at 6, we had 37,000 contracts, and it's now 29.6, which means they closed out a bunch of put positions yesterday at a $6 value. But on puts for today, like I said, yesterday was 37,000 open interest for 6. Today at 5.5, there's 31.2. So the market's suggesting a closing price this week now somewhere between 5.5 and 10. They are lowering the bar. Let me take you guys over to the other screen, and I will give you guys a little bit of music here while I pull up the rest of the data. Okay, so we've got this wedge here, this kind of wedge pattern on price movement, and you can see that we've broken this lower rising level of support that we have here. We have a secondary rising level of support. The more current one comes from from our last previous down point to a touch point that we've had more recently. We've not really broken down past this. We still are holding support right in this between that gap and the two Fibonacci's that I have at 766 and 783, and there is a rising level of support in here. I'm still going to continue to hold this box here. I think that we haven't seen price being done with moving up just yet this week, so I have a feeling this is still going to be applicable here. So I'm going to leave that there, and then I think we are getting really close to a potential break to the top side here, but I'll show you why that is in just a little bit. Taking a look at the Ortex data. Today, the short share interest of the free float's at 25.01%. Here's our utilization at day number, I think it was 37 I said. Yeah, 37 straight trading days of utilization being 100%. Let's zoom in on this a little bit here and see what we did day over day. I gotta erase my board real quick. Alright, let's see what we got going on here. On loan amount, day over day, decreasing. And this kind of coincides with the idea that what I've been talking about, over this last month, we've been seeing a little bit of decreasing of positions. I think we'll probably see it in the short interest going forward. We'll probably be seeing a dip here, because if I show you the exchange reported short interest, for the last month we've had nothing but rising numbers, and I think you're going to start to see a trend where it starts going down a little bit. So you're going to have well, right now, as it stands, we're down about day over day in loan amount. Ooh, this actually moved quite a bit here. On loan amount going from 189.98 to 183.8. So we're looking at 6.18 million shares having been returned. Ortex is probably going to estimate that that's probably about 2.06 million shares probably in short interest returned. Let's check it out and see. Ortex is stating that let me zoom back in on this just a tad bit here. I like to see a little bit closer. Short share interest of the free float dropped from 25.41 to 25.01. So we're looking at 0.3, 0.4 rather, sorry. I think I did the math wrong on this here. Yeah, that's right. It is actually, that's exactly what it is. I did the math wrong. I didn't put an extra zero in there. But that is what Ortex is estimating. They're estimating about 2.06. It's exactly what they're estimating is 2.06 million in short interest closed. Remember, guys, it's just an estimate, and what I found is that they usually take a third of any of the loan positions being closed out is usually short interest is what they estimate by. I think. I'm not sure how they come up with their estimates, but that's what they're going on. On loan average age per day is starting to rise, so we did find a bottom here. It's went from 100.63 to 101.5. This is when we need one more day of rising number on this for me to start my 15-day counter for a big price increase to come. Security lending volume day over day remaining close to the same from let's see here, 17.16 million shares to 17.89 million shares. On Ape, short share interest of the free float at 6.15. There's your utilization spiking on Ape. Going from 77.81 to 84.61, almost getting really darn close to a 10% increase there, which is pretty hefty in a single day. On loan amount increasing. They borrowed, they went from 24.84 million shares to 31.64. So we're looking at 6.8 million shares, new shares loaned. For those of you guys who haven't been noticing lately, but I kind of feel like I've been seeing it quite often, we're seeing kind of exact opposites of AMC and Ape. So if brokers believe that something is going to happen with a position, they might start trading between each other in like kind. So if AMC and Ape are in like kind, there's a chance that they may be trading shares in such a fashion to where they may be trading between Ape and AMC. And if you notice, we had 6.18 million shares having been returned on AMC, and then 6.8 million shares borrowed on Ape. So they may be preparing for the inevitable, and this is they may be finding some shares here to borrow through Ape. So short share interest of the free float should be heading up with this. It went from 5.73 to 6.15. On loan average age per day dropping like a rock from with all those new loans being taken on from 41.26 down to 32.56. Security lending volume pretty high yesterday. We were at about 1.03 million shares in security lending volume, now at 12.62. Orders by Fidelity customers, AMC, Ape, and GME are the only three I'm looking for. I doubt that I'll see any of the three on the list here, but I'm going to look anyways. It may only be the last 4 minutes of data that they end up providing me here, in which maybe we'll see some large last 4 minute orders that went through on one of those three stock tickers. Let's see what we got. Yep, it is definitely the last 4 minutes of the day yesterday. I do not see any of the three on the list. SSR trigger price for AMC is at $5.41. Ape, I haven't done the math yet. Give me 1 second. 1.584. And let's see here. 250,000 shares available to borrow as of right now. Looks like earlier this morning, skipping around here. Earlier this morning, there was about 1.2 million shares, so they borrowed almost all of those. We're looking at about 95,000 shares, and they borrowed at least that much out of the ETF. So I'm just going to call it a cool million shares borrowed so far this morning. And then as of yesterday, it was about 900,000 shares, so really close to the same numbers. Fees are currently at a 102.5%. We have 161.9 thousand contracts out of the money on the calls versus 16.6 thousand contracts that are in the money. 129.4 thousand contracts are out of the money on the puts versus 69.9 thousand contracts that are in the money. Futures on the market, as of right now, are looking down, anywhere from marginally to about 1.1%. We do have the Russell 2000 is up 0.1. VIX is showing up 0.65 for the futures. Yesterday, markets were down anywhere from breaking even to as much as 2.35%. There were some markets that were up. The ones that were up were only up by about anywhere from 0.18 to 0.1 or 0.3. So yeah, I'd say more red than green internationally overnight. Ethereum Classic showing down 2.16. DXY, or the US dollar. Ooh. Yesterday was up like 1 point something. I saw it just before I changed it. Today is up right now 0.04, which is so it's kind of confirming the idea that the market may be heading down at market open. SPY currently, though, in the pre-market is up 0.04. VIX Sorry, not VIX. Tesla is down 1.53. Amazon is up 0.1. Cinemark is up 1.05 in the pre-market. Doge is down 0.99. Bitcoin is down 0.86 at 22K a coin. GME is up 1%. HYMC is up 0.3. Hood is up 0.48. CS is down 0.4. Ape is up 0.28, and AMC is up 0.83. Inflow versus outflow for the day-to-day on AMC, we have approximately, from yesterday rather, we had approximately 700, we'll just call it $700,000 more inflow than outflow so far this morning, and this is after the pokey stick of volume because I kind of got to this a little bit late here, but we've got about 64,000 shares having been traded so far on AMC, even with our pokey stick of volume, which was 52,000 of that 64. It's extremely low volume, super low volume, guys. You're going to see this crawl to a just absolute crawling pace for the day to day. They're shutting this thing down. They're done. They don't want to trade anymore on this, and you can tell that brokers are kind of shutting down any kind of transactions. They are grinding this thing down to a halt because they know that a change is coming. A change. Maybe I should play that on like Monday next week. They can tell that a change is coming. Let's see here. We've got 10 to 30 million. I can't predict anything higher than that in volume. On a 4-hour time interval, we have more selling pressure than buying pressure with an RSI of 41.31, which is below average for RSI. And 1-hour time interval, we have more buying pressure than selling pressure with an RSI of 41.18, which is below average. On a 30-minute interval, equal amounts of buying and selling pressure with an RSI of 49.35, which is average. And on a 5-minute interval, more buying pressure than selling pressure with a divergence in the last 15 minutes. And RSI is at 65.6, which is above average. On Ape, there is approximately $500,000 more outflow than inflow. 31,000 shares, even after our pokey stick of volume here, which, hold on a second, let me find it, came in right here and was a total of 24,000 of our 31,000 shares. So again, I'm almost hesitant to even predict. I'm actually going to go 5 to 25 on Ape. I'm hesitant to even do, because yesterday I said 10 to 30 million on Ape, and we ended up hitting 11.3. Very good chance we're underneath 10 today on Ape in volume for the day. Very good chance. So let's see here. Looking at inflow versus outflow yesterday, there was approximately $400,000 roughly more outflow than inflow. 4-hour time interval, there's more selling pressure than buying pressure, with a little bit of whipsaw kind of action going over the last day here on this on the longer time interval. But currently, there's more selling pressure than buying pressure with an RSI of 39.36, which is below average. On 1-hour time interval, we have more buying pressure than selling pressure. Again, more whipsaw kind of going on here. RSI at 47.3, which is slightly below average. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 49.33, which is average. And on a 5-minute interval, there's more buying pressure than selling pressure with an RSI of 50.74, which is average. So a lot of what's the word I want to use here? A lot of indecisiveness about which way this is going to break to, and this is kind of part of the reason why I think, when I'm mentioning to you guys that we're about ready to break up, I think that we're seeing that the massive amount of consolidation on the spring, about ready to launch this up forwards. When you see this much volume compression, something's going to break. It's usually not just a subtle like, oh, okay, now I'm going to start moving. It's usually like a let's go kind of thing. It's never weak when you see this much volume compression. And then taking a look at the 1-hour time interval for the Ichimoto here. Let me write down my numbers for Ichimoto. Let's see what we got going on here. It is not Dana's birthday today. I have to erase that off my board. Let's see here. On Ape, on a 1-hour time interval, Lagging line is right below price line. Conversion is just below base, and price is just above the base. We are at a green cloud. Price likes to move up through red clouds. So I mean, it's not quite here yet. You know, we're real close. You can see we're really close on a 1 hour time interval here. That this it wants to break up. It really, and you can see from the amount of downwards pressure that we had from the last cloud, and the compression of volume over the last 2 days. When you consider some of the volume that we had from the past, it is compressing down hard. It should probably be a pretty big, fast, quick drive on this next run up. Excuse me. So buying pressure for the day today is going to be at the top of the cloud for Ape, which is going to be $1.82. We're at 177. It's not that far away. It's really like right within our grasp. But like you can see it, you can smell it, you can smell it. On a 4 hour time interval here, we've got lagging line below price line, conversion below base, and we are compared to some of the thicker portions of the cloud, we have thinner portions right now that we can break through on this. The buying point for this signal would be around 227. So that's going to be my secondary buying pressure point. That if we remain above 227 for about 4 hours, you should see some pretty hefty volume kind of kicking in and buying pressure kicking in. So big red cloud here. On AMC on a 1 hour time interval, we have lagging line below price line, conversion below base, and same exact setup as Ape. Same exact setup. Like there is no. If I showed you these two charts here, it's almost very difficult to see the difference in the cloud formation, where you've got this like 1 day green cloud kind of situation. There's just really no difference. And actually, the 4 hour might even be the same too. Let me check that. Nope, 4 hours different. But on the 1 hour for AMC, the buying pressure kicks in today, probably around 632. We're at 608. So you can almost bet your bottom dollar they will try to keep the price away from 632 as much as possible, because they know that once it breaks that, it's all hell will break loose. So they're going to keep away from that as much as possible. So for price prediction for the day, for me, I'm going to probably just guess sideways and say $6. For AMC, I can almost feel it. It'll probably end up being like five. Actually, you know what? I'm going to change it. I'm going to say they're going to go 558 on us. Watch. Or not 558, 598. Sorry. This is gonna be the 598 day. And then let's see on a 4 hour chart here. The buying pressure for the conversion's below base, and lagging line is below price line. We have the buying pressure kicking in today at about $7.34. I don't expect that we're going to hit that unless some huge amount of volume just kind of kicks in all of a sudden out of nowhere. We did print a TD9 and are starting to see price moving back up. Let me pull up a Bollinger Band on this. Yeah, we may start seeing price moving up here. Now, the red portion of the cloud doesn't start until next week for this, specifically on the later portion of Monday. But I think we may be starting that process, especially printing a TD9 on a 4 hour chart here. We may be seeing that process of slowly starting to rise back up, but I'm pretty sure they're going to try and keep us under 632 for the day. But I've already got 598 as my prediction. I have a feeling they're going to try and push for that as much as possible. This is going to be the slowest sideways trading day ever, probably. And then let's see here. I got to figure out Ape, though. Where's Ape going to go with price? What's my price prediction on this going to be? Pretty much the same thing. Sideways, boring as hell. Wear people down kind of day. And probably... I'm going to go 180. How much of an increase would that be? 0.5% for every penny. So that would be 2.5% up. Yeah, it might be two. Let's go 178. All right, let me math here. I think I'm coming up with 776, which is a penny less than what we closed at yesterday combined. Yeah. So I'm going to go 626 to 926 on my price prediction for the day today. Which is about 24 cents lower than what I was at yesterday. Looks like we've got Einstein coming in here at 598 to 898. And let's see, did Apex? Let me look over here real quick in the comment section and see if Apex came up with numbers here. Give me 1 second while I go back to my screens and add my Bollinger Bands and take away the Chimoto cloud and put this back on. All right, let's see what we got over here. Set up. Yeesh. Yeah, that's this, all of this right here. This, I wouldn't doubt it if today ended up looking exactly like this almost. You know, all this very normal trading that you have going on over here on Ape. Just go ahead and imagine that being today. The market's waiting for the news. They're waiting to find out. I know that's what they're doing. You can see it in what they're doing. They're winding everything down. They know there's a change going to happen, and as soon as they figure out what that change is going to be and when it's going to occur, then you'll start seeing the trading happening. Apex says today's a tough one, but feeling a bit green on both of our favorites. Combined closing price of 798, AMC 617. It's a little bit higher than I've got by about 19 cents, and Ape at 181. I wanted to go 180, but I kind of lowered a little bit just because I feel like it's a little too high, but we're close. We're really close. So you got 648 to 948. Let's see here. So you're actually going greener than you were yesterday by about 18 cents. MCon says, so Adam Aron's tweet won't increase volume today. Yeah, Adam Aron decides to talk about, you know, what it is. Everybody says, oh, he's not talking about it. You know, he talks about it, and it's not going to change anything. You know, like magically, like just because a CEO talks about something that it's going to cause something to happen. It's not. It's not going to cause anything to happen. Let me see here. Let me pull up because I know you guys are talking about his tweet, so we will talk about it because I think that it's important to acknowledge the fact that you know everybody keeps putting out these false narratives about Adam Aron never talking about this stuff, and he talks about it all the time, and I don't understand where it comes from, but. He says many of you are aware, or many of you and we are aware that AMC Entertainment has on the threshold list for 3+ weeks, indicating a number of failure to delivers. Some of you may be pleased to learn that we have contacted both FINRA and the NYSE, asking that they both look closely at the trading of our stock. It doesn't matter, guys. If the sheriff is already paid by the bandits, you know, it doesn't matter what a CEO says. Go ask Patrick Bryan how he feels about that, because he knows exactly that you know you have to kind of take action in your own hands. Jason says so. FINRA changes margin requirements, delaying MOASS 6 months. Then in 6 months they will change the rules again. I heard they delayed a change on some of the margin requirements. I haven't actually confirmed it or gone through the data. I just read it someplace. So 2024. Is that how far they extended it out? Yeah. Let me make sure I've got this set up right here. So real quickly, because I just noticed into the top left-hand side, you'll notice there's this little gray box up here in the top left. On a 1 hour chart, I think it is, today would have been the day, or yesterday would have been the day that I had kind of a breakout possibility. And I had mentioned to you guys on several occasions that the volume profile on this, not volume profile and price profile, were indicating a downwards push out of this wedge. And indeed, we got that push. Yesterday, it was a little bit earlier than what I had suggested. I was putting in a prediction of like 15:30 or end of day yesterday, but it actually started in pre-market, the push down through this wedge here. So we did get the breakout going down, but it was just a little bit sooner than I anticipated. But we are moving towards a much bigger box that I've got over here for on a breakout for upwards momentum. Now, this is the part where if you're only watching price on a temporary basis, I said that completely wrong. If you're watching the time intervals on small intervals, and you're looking at price and saying we're going down. No, yeah, well, guess what? You kind of zoom out a little bit. You have to kind of look at things from a bigger perspective. And really, we've just been consolidating from one of our last big moves. So if you look at when we hit 439 and we bounced off that Fibonacci retracement that I've got on this board here, you saw price massively drive up here, and then you see consolidation starting from 222 going forward. You see a little bit of a spike up here. A little bit, one last big kind of push, but then came back down and consolidated at that range that we hit starting around like 222. And we've been consolidating in that range for the most part, most of the time, other than this one big spike and this up and down from last week, where they caught a lot of option contracts out of the money. But I'm expecting to see another big breakout coming up here, where I've got this next big gray box that's kind of coming up here. So that's going to be going into next week, and perhaps around Tuesday. So yeah, that's we did get the breakout going down, and the reason that I call this a breakout going down was this. If you look at the regression channel for this period of time when I was calling it, I think it was right about here. Come on. It doesn't want to drag. Come on. There we go. The regression channel was showing upwards price movement, and then you've got falling volume. So you've got rising price, falling volume, that's bearish, and then the regression channel itself is pointing towards the top side of the wedge, which all three of those different things added together tells you that you're probably going to have a breakout to the downside. So we got that breakout to the downside. Now I think now we've got this much bigger box to deal with here. If I take the regression channel for that same time frame, or from that time frame currently going forward, we have upwards price movement, and we have from here we have a kind of a almost a bell-shaped curve of volume. So volume's it's mostly up. If you compare it to from the past, volume is definitely up from the past within this channel. So you have upwards price movement, you have upwards volume from the past, same time period. Like if you look at the same time period from before, you can see volume is up. And what that typically means is that you're going to get a break to the top side. The regression channel does point towards the top, which usually indicates a downwards momentum swing in price. But in this particular case, the price and volume movement, and for me, are more important in indicating that you have bullish volume and price move. So I think that the breakout will be to the top side here, and I don't think that we're going to be heading back down towards that 430 range at all. I don't see, because I think 439 was actually our double bottom from before that we needed at 377. I'm pretty sure that was our double bottom, and so we don't need to see that hit again we just need to see support somewhere midway between $6 and $4.30. We need to see some support around $5.42. As long as we don't move below 5.42 and we just kind of hover on this top half of this wedge, we should get that breakout going into next week, going upwards. And you can see as of right now, like everything that I've got showing in volume on this page here, maybe you can see, maybe you can't because I don't have it on the right screen. Everything that you see in the volume profile over here, you can see that the point of contact, or the highest amount of volume, is exactly where we're trading at. We're just slightly lower than it right now. So as long as we stay closer to that volume point of contact there, and we don't cause it to lower, and you can see the next support point for volume is actually going to be at about well, there's not really a big, huge support volume anywhere other than where we're at. The next lowest one would be at 596, which is we're right there. I mean, and we're at it. So we have a lot of volume support where we're at right now, and I think we're just kind of consolidating, kind of in between 563 and this descending level of support, or resistance rather. Sorry, descending level of resistance. And when we see that push through, it should break to the top. I don't need this regression channel. It's too much. Get the Bollinger Bands back up. Jay says break time. Thank you, Jay. I appreciate it. I'll go for a couple more minutes. But Donkey Kong says, I think CEO's words can affect stock price. I do too. But I don't think the words that I don't think the specific words that he's saying will affect it though. Yeah, please don't, Corey. I appreciate it. And it's gonna happen. I mean, that's what the market's made to do. It's made to smash people. it's there to try and pick that low hanging fruit. Andrew says it's way too early to be craving sushi, right? Hey, whatever floats your boat, man. Gary says, had to search you by name. Normally you're on one of my top channels. Oh, we have a birthday today. Hold on a second here. You just reminded me by saying that. Oh, no. This is tomorrow. It's tomorrow. Never mind. Cuddy Cut says, good to see you, Cuddy Cut. Good morning. Question for the Ape conversion vote. Do you need one AMC and one Ape to vote? If only need Ape, how is that fair to AMC holders? No, you need, for every AMC share that you have and every Ape share that you have a vote. And the interesting thing about that, Cuddy Cut, that it doesn't make any sense to me about the argument that it's not fair is that shareholders who held AMC shares got the dividend, right? And so if you got the dividend and you sold it, that's your fault. That's nobody else's fault other than your own, and you gave up your ability to be able to vote your Ape share. And because your Ape shares hold just as much voting power as your AMC shares do, because they were issued to you as a shareholder. So it makes no sense to say that that it took away shareholder rights, because it actually gave them double their rights. And then some people mistakenly, because they didn't know and they probably just didn't understand what was happening, sold off their Ape shares, and when they did that, they sold off half their voting rights. Yeah, we looked at it yesterday, Tank Dog. It does look a little bit like a Head and Shoulders, but the problem is it's already well past that Head and Shoulder point. Let me look at it real quick here. Are you saying on AMC only? Yeah, we looked at this. We actually looked at it on a much smaller time scale. I think it was 15 minutes is what we looked at it on yesterday, and it did. It does look like this portion right here does kind of look like a Head and Shoulders. The only problem that I had with it was the two problems actually. The trailing shoulder was higher than the leading shoulder. That's not a good thing because it signifies that price is rising when it should be falling. And then the other side to that is that if there was going to be a dropout in price, a significant dropout in price, then it should have maintained the full time frame that it should have on this side over here, and it actually started falling beforehand, and is kind of supporting right now where we're at. So um, I don't think so. But we did look at it yesterday. I think it was on a 15-minute time interval right here. But the problem is that you've got um, I would argue that this is probably the head over here, or right about here. Was it 60? Should be about 66. Was it 66 bars? I think is what I had yesterday. So your time span that you would have had on your shoulder would have been 66 bars as well, and that would put you about right here. And we did get the breakdown a little bit beforehand for the wedge, but we didn't see like a massive breakdown. Usually when you see like a Head and Shoulders like this, you'd see price drop down to like a previous supported level, so you'd be looking at like 550 more than likely. And we didn't have that happen, and it wasn't within the time frame that we would have seen either. Richard says, next week, are you going to open the big tramp up during the day? Yes, I am. I'm actually going to do it. I was going to do it this week, but we had Jerome Powell talking. So starting tomorrow, actually, I'm going to do it. Right around, probably around like 10 a.m. to 2. Kind of thinking like a 4-hour time frame. Kind of get the lunch people in there. I know I'll be on break during some of that. Because that is kind of one of my. Actually, I might go a little bit earlier. I might do like I might do 9 to 11. That might actually be a better time for me to do. 9 to 11. Open it up, and we'll do it every Tuesday and Thursday. Uh, or how about the other way around? So the interesting thing that you're saying right there, Cuddy Cut, is you're saying like if they bought Ape and then they have, you could say you can make your argument both directions, right? You could say, well, what if they just bought AMC? Their effective their vote affects Ape. It is the same thing, Cuddy Cut. If you're buying Ape, you're buying AMC. It's the same exact thing. So it doesn't matter which way you make the argument. If you're saying I bought Ape and it doesn't give me the same voting rights, then you're wrong because it's actually the same voting rights. If you bought AMC and you said it's not fair because it doesn't give me voting rights over Ape, it does. It absolutely does give you voting rights. It doesn't matter which way you buy the shares, you have equal voting rights. So, the argument is invalid. Doug's Doug says, and I know you said this to Donkey Kong, but I'm reading. He says, I used to think the market was like a casino, but the last few years has shown me the market's not like a casino. The market's fraudulent. I would say, rigged, and it's just rigged, just like a casino. Oh yeah, Captain Awesome says, "Who's ready for 50 basis points?" I haven't looked at it yet this morning, Captain Awesome. Yesterday night when I went to bed, it was like 69%. I was like, nice. I think it was actually. Oh, I have a picture over here. Hold on a second. I have a picture. It was the last picture that I sent out was 66.1% on chance at 50 basis points. I'm gonna pull it up right now and see what it says because I am kind of curious what that's gonna be. Let's see here. We've got 14 days, 5 hours, 23 minutes, and 15 seconds before our next rate hike. It's, you won't believe me. I can't just do trust me bros here, but we have a 74.9% chance at seeing 50 basis points. We're at 450 to 475 is our current target rate. Now they're talking jumping it up 50 basis points to 500 to 525. 70 basically a 75% chance, three quarter chance that it's going to be 50 basis points now. I love this. This is kind of cool to watch happen. Quite honestly, though, I still feel like they should do like 150 basis points. Just rip that band-aid off. Come on, Jerome Powell. Rip it off. Just rip that band-aid. Really force the markets to do what it is that they got to do, and that's stop spending. I know all gaps don't fill, but do you think they'll use this low volume opportunity to go fill the gap around the 550 area before we see big rise in price action? Let me check it real quick here, but I don't think there's a gap there to fill. So I'm looking at daily volume here, and I don't see the gap that you're talking about. I mean, if you're talking about this as being a gap in here, between, I guess it would be somewhere between 555 and perhaps maybe like 590. I don't see that as a gap. Hmm. I mean, do you see that as a gap because the data that we have filling that gap back here is not valid because it's too old? Like it's back from December. I mean, because there's plenty of price movement in there in both in December and also in November of last year. There's plenty of price movement in there to fill any kind of gap that there is. So I don't know. In my opinion, we done filled gaps. You can see there's quite a bit of volume in here, anywhere from 503 all the way up to about 665. So for me, I would say no. With an terabyte, how many shares do they have, Jathan? How many shares? Raleigh says, Casey, am I right to assume Ape to AMC conversion would yield you higher value overall unless Ape reaches a price above AMC, which likely won't happen if that makes any sense? It would be the other way around. It's the other way around from what it is that you're saying. So, if you're saying that Ape is going to increase in value, then I understand where you're coming from, and that would be true. Um, I guess the best way to say it, Raleigh, the best way to say it, actually, you're right. The best way to say it is look at market cap. Whatever the market cap is, if Ape's market cap is lower than AMC's, then value will increase for those shares. No, Cuddy Cut, that's not what I'm saying at all. I'm saying what you're saying is is if you have 10 AMC and 10 apes and you buy 1 million apes, your vote affects you, right? But if they buy 1 million AMC shares, that vote affects you. It doesn't matter which way you buy, the vote affects you no matter what, right? So what I'm saying is that there's equal voting rights on either side of the aisle. It doesn't matter which way you want to lean on this. If you want to lean towards saying that the ape shares affect your votes, the AMC shares affect your votes just as much as the ape shares affect your votes. There is no difference. The voting is determined by our custodian on the pro. No, that's not true. I'm sorry, Stuart, but that's not true. He works on he's I'm trying to think of the actual terminology and I can't think of what it is, but he's aircraft radar. I can't remember the exact words. I'll have to ask him and then I can tell you tomorrow, but it's essentially it's aircraft radar repair. You're not going to get me to agree on it, Sam. I've been seeing Aron saying all kinds of stuff this entire time, and it's just like people are cherry picking when they want to listen and when they don't want to listen. Thank you for reminding me about that, Maccabees. And Maccabees, if you wouldn't mind contacting me in a private DM someplace, I'm actually looking to fill. I have one spot left to fill on my list of people who I'm trying to contact in regards to this. And so I have a little quick update on this real fast for those of you guys who are curious. And because I haven't talked about it as of yet, but the update is that so far now we have everybody for the most part have received uh, their proxy. I have at least one person saying that they received their proxies through each one of those brokers when we didn't that necessarily wasn't necessarily the case before. So BMO Investor Online, we now have received but had to call. Cash App was slow but received. Somebody it said it took 2 weeks up to 2 weeks to get an email. Or no, they received the email 2 weeks ago, so people may need to be checking how they're receiving their proxy votes. RBC received but had to call. CIBC is received but had to call. Scotiabank iTrade was received via email. If you didn't have your Scotia iTrade email set up correctly, then you may have not received the email or you may have received it in a junk mail. TD Canada is received but had to call. Questrade is received but had to call. And Wealthsimple is received but had to call. Most of these are all received but had to call issues now. So the next step that I'm taking is I've got a list of participants who I'm taking uh, who are going to help send me information in regards to their correspondence with their brokers and then we're going to take that correspondence and I'm going to contact personally the companies and ask them for blanket statements and we'll issue those statements for the public to see and if they don't want to talk about it that's going to look bad on them. So we're going to put a big old spotlight on these guys and really kind of hammer it in home that they need to really start acting the way they're supposed to act. So, but yeah, that's thank you for reminding me on that, Maccabees. I don't have somebody yet for BMO Investor Line. If you wouldn't mind participating in helping me out on just letting me know if when you contacted them, what they said, what the correspondence was between you and them, and yeah, that would be awesome. I appreciate it. No, I don't think it's sus, Sam, at all. In fact, I think he's really kind of hammering it in there and letting them know that he sees exactly what's going on. Everything that you're saying, Cuddy Cut, can be reversed the other direction. Everything that it is that you're saying can be reversed in the other direction and said the same exact way. And so that's how you know that it's fair. Because all of your scenarios can be flipped to the other side and say, okay, well that's guy B or guy A, it doesn't matter which one it is, they hold AMC. After a conversion, it doesn't matter. They still hold AMC shares. No, he's actually addressed failure to deliver a long time ago, Sam. And you may not remember this, but he actually said that he was working with SEC and reviewing and looking into the failure to deliver. So it's like you guys are cherry picking, and you're not even listening to what he's saying. He's literally said before, he's talked about how he's working with the SEC to identify some of the market failure to delivers that are being seen in the marketplace. And it's insane to me how people are just cherry picking. MG Toast says, "Hey Casey, voted yes because hedgies deserve peace of mind. We'll log back in Monday and switch to a no vote because life-changing money is still the first reason I'm here with all my shares." I hear you, man, and I want you to remember, MG To, that I feel like people keep turning this into a polarized vote, and I feel like people are missing a third option, right? There is a third option that's out there, and a lot of people aren't really acknowledging that. You don't have to vote no, and you don't have to vote yes. You could abstain on both the yes or both of the proposals, and on the third one, give the option to be able to change your mind later. There is that option too. But yet everybody's only making this. It's always been this black and white picture for everybody is that they it's either a yes or a no, and that they're not recognizing the fact that there is another option. Well, Simple said they will be sending me an email for voting. I also spoke to them. If they lend out my shares, they said they do not lend them unless you ask. Thank you, Steve. I appreciate that. Have to call in for control numbers for my other accounts, though they only provide my main cash account shares. I don't really think so, Thomas, but I think most synthetics are well, I don't want to talk about it. There are certain aspects to this play that I'm just not willing to talk about yet, but I will say that it has something to do with international. Casey, did Intera just buy a FK ton of AMC shares? I've been out of the commission the last few days. I've heard that plague, but I haven't looked. I heard and I read something someplace about I think it was 500,000 shares or something like that, but I haven't actually gone and looked at the documents last night. I've been really focusing My time this week is dedicated to these votes and the people who are not getting them. All my time has been spent on that. So I don't really care about what Antera is doing. I really just don't care. I'm not focused on that. I think it's more important to focus on getting people their votes, and that's where my focus is. Yeah. All right. Break time. Let me put up my message real quick here, and let's see, where am I going to put it at today? I'll put it at the top. Kind of already gave my price prediction for the day today. I got 776 combined. And yeah. Preacher says call IBKR to check if they can lend out my shares. I'm too poor for that, under the limit for share lending amount. Yeah, 10 shares is difficult to loan out, Preacher. Thanks, Andrew. Appreciate that. Woo! Protein. All right. Probably more coffee, if anything. All right. I'll see you guys in a little bit.
primary control of critical vehicle functions.
First flight of the orbital Discovery, and the shuttle has cleared the tower. Discovery's 4 computers now have primary control of critical vehicle functions.
Okay, I'm back, and I'm looking right now at the futures, and as of right now, it looks like the futures are showing for a green opening this morning, anywhere up from zero point 0.1 to zero point 0.2 or 0.05 to 0.25, a quarter of a percent. And VIX is showing up as well, though, at 0.4. We've seen this oftentimes where the VIX is saying I'm going up, and the market's saying I'm going up too. Now the VIX is actually showing 0.14, so it's actually reversing now. So it is coming down. That's at least they're in unison now. But let's see, DXY should be going down if that's the case, and it is. It's down to 0.02 down for the day today. But we are trending on DXY up this very long. What I think is going to end up being a long ascending parallel channel before we see a little bit of a breakdown potentially in the future, but after we hit about 106. So that's where I'm kind of seeing DXY heading towards. After yesterday's move, I could expect to see maybe a little bit of downwards momentum here, which would mean that the market would probably be moving up during that. I'm trying to decide if I want to adjust my price predictions to try and get a little bit closer. I'm pretty confident that my current price prediction is going to be well within range of where price is going to move to. Like, in other words, I have 990. I think it was 9. The top side of mine is 926, and I don't think that there's any chance that we're going to see a combined price over 926. So I think numbers wise, I'll be okay. So I'm probably not going to change it, but as it stands right now, Ape is at 176, up 0.57% for the day, and AMC is up 0.83 at 606. Apex says that's the PPP pre-Powell pump. we'll get Powell back up here to Powell's bowels, back up here to or choose how you want to say it. Powell's jowls, Powell's bowels, doesn't matter. We'll get him back up here, Mr. Grunty, and listen to what it is he has to say today. Vivian, good morning to you. Let's see here. Captain Awesome says AMC 1 is at 777. I'm feeling lucky. That was yesterday's closing price combined. Pam the Trader, good morning to you. Powell's bowels needs towels. Oh, man. I feel like we need a little bit of a Bobblehead Ross moment here. Let's see what Bobblehead Ross has to say. Bobblehead Ross, what do you think about Chairman Powell?
Anything that you try and you don't succeed, if you learn from it, it's not a failure.
Oh, okay. I mean, that actually really is that is good advice, I think, for Chairman Powell. If you tried and you didn't succeed, at least you learned something. We got about 10 more minutes here before market open. Hold on one second. So earlier this morning, I pulled up the probability rates for the rate hike, and they're just absolutely through the roof. So 0.75% chance at 50 basis points. I'm pulling it again right now just to see it's still rising. We were at 74.9% chance earlier this morning. We're now at a 77.9% chance at a 50 basis point hike for March 22nd. And that's 14 days, 4 hours, 39 minutes, and 12 seconds away from now. So, yeah, it's really looking strong towards a 50 basis point move. More hawkish. Hawkutch. Highway Frog, yes. That's Highway Frog's bringing up a point here that I think that a lot of people have kind of been missing a little bit. So you know how everybody's been getting dual proxies for your AMC and your Ape share votes. The reason that you're getting a dual proxy for that is because ComputerShare is actually going to take hold an ownership of all the positions that are in existence for the conversion, and will be redistributing those shares so that only the shares being redistributed for AMC and as they're converted and then reverse split are going to be issued. So and that's kind of a really important thing to note because there is something there. I don't know exactly what. I don't really want to make any claims because I don't know for sure how that's going to how that's going to work out. But that may end up revealing some things that would be kind of interesting. So we'll see what ends up happening on that. But Bobblehead Ross says it's transitory. Yeah, Salty Dog said it too. Inflation is transitory. Trust me, bro. Right? If first you don't succeed, at least you've learned something from it. Tricky Dick. Good morning to you. Yeah, so you're kind of on to something a little bit there, Highway Frog. In my personal opinion, I tend to think that there is something to be, because normally just handle it in house. They would prefer that, right? They would prefer to be able to just transfer on their books and alter their books in such a way that doesn't involve another party documenting what's actually happening on their books. So that means that they're not going to be able to just magically make things disappear. They actually have to send back in shares and get them converted and reverse split and then sent back to them. So there's a little bit of a mechanic there that I think a lot of people are kind of missing as an important factor. Otherwise, normally in and of itself, a QSIP change I don't think would really do anything. But the actual having to deliver of shares that you're stating that you hold, and then having another institution counting those, verifying them, and then converting and reverse splitting is going to, I think, add some stress to the market. You said all shares, right? No, not all shares, just Ape shares, just the Ape ones. Just the Ape shares. All of the Ape. If I said all the shares, I meant just the Ape shares. They're going to be they will have to send in all of the Ape shares. Well, that would only happen, Highway Frog, after a vote. It wouldn't happen before. Apex, if you type in AMC plus Ape, that's how you get the combined ticker of the two. Yeah, my bad. If I said all shares, I meant all Ape shares, not all shares. That's why I started off with saying that there's a reason why you have a proxy for AMC and Ape. When I was talking to in reference to all shares, it would be just all Ape shares. So this is how you do it, Apex. If you're looking at the screen right here, when you type in your symbol search, all you're going to do is you're going to put in AMC and then a plus sign and then APE. If I could type, and then just hit enter. Don't even don't pick anything. Don't pick one specific thing. Just hit enter, and it'll give you the combined price of the two. Don't try to look for something. Just hit enter, and you'll get it. Tech We Love says Max Payne for next week went down to $9. It's fully possible. Let me just check it and see real quick here. Indeed it did. Indeed it did. Sweet. Awesome. I knew you'd get it. It's the fact that you just, you're probably looking for the combination of the two, and you're going like it, which I totally understand. I think I want to say that when I did it the first time, I was probably doing the same thing. Yeah, you just got to know that you just got to hit enter, and you can do that with any two. You can add any two together like that too. AMC and Ape. Yep, it is. It's about time to get this market opened here. So let's get this show rolling, shall we? We'll see you guys on the other side of market open.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, boost ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward leg now and then. Okay, you sound good. Discovery Houston, negative return. Copy, negative return.
Run away. I need time to figure out. Wide awake, oh wide awake. Seeing signs of slowing down. Oh yeah, we wake up in the morning, think about the nights. Every drink we're pouring starts another fight. It's a hazard to our health, but we do it to ourselves every time. Who knew? Nobody can hurt me like you do. Stuck me in the dark like voodoo. Go and make your mark, yeah, I'ma love you from afar. Bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. Wanna love you from afar, baby, bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. I know where is home, or where to go, what to say anymore. Cause I swear that I've done it, I wrote it, and I sang all the same shit that you've heard before. Because we wake up in the morning, think about the night, how we spend $200 on a dinner and we fight. It's a hazard to our health, but we do it to ourselves every time. Who knew? Nobody can hurt me like you do. Stuck me in the dark like voodoo. Go and make your mark, yeah, I'ma love you from afar. Bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. Wanna love you from afar, baby, bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. I wanna love you from afar, baby, bless your wicked heart. We never meant for this to be so tragic. Let's go back to the way it was. Maybe you can do your quick black magic, bring to life all that's there with us. Who knew? Nobody can hurt me like you do. Stuck me in with your voodoo. Go make your mark, baby, go make your mark. I'ma love you from afar. Nobody can hurt me like you do. Stuck me in the dark like voodoo. Go and make your mark, yeah, I'ma love you from afar. So wicked heart, I know you mean no harm, baby, bless your wicked heart. Wanna love you from afar, baby, bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. I wanna love you from afar, baby, bless your wicked heart. Your wicked heart, your wicked heart. Bless your wicked heart.
When the night's getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your it's all in your head. Those hedges are dead. So when the night's getting colder, you're needing that shoulder, these apes got your back. We got each other. All we do is we buy and hold.
Good morning, you filthy apes. Welcome to AMC and APE, where we buy, we hold, and we screw those hedgies. Screw them good. That's right. This is where we like to fling poo and eat crayons for breakfast, and sometimes wake up on time. Rock strong. Good morning, guys. We have round 2 of Powell's Bowels talking to us today, so we'll see him getting up here to talk a little bit. And so we are on a downwards trend right now on AMC. We're at 595, down 0.93%. I would expect that they're going to probably try and close out as much put positions as possible under a $5 strike. When those do close out, you end up seeing bullish price movement following that thereafter. One thing that I see a lot of you guys saying, really low volume this morning, and it's not a surprise. It's really not a surprise. All you got to do is go to the 7 a.m. Pokey Stick of Volume every single morning, and it tells you exactly what volume is going to do almost on, I want to say like 80% of the time, it's like really good at predicting what the volume is going to do for the day today. And I was telling you guys, this is going to be a very, very boring volume day today. Super, super boring. But remember, when you have falling price and falling volume, that is bullish. Those do not coincide with the idea that's actual downwards momentum in price movement. Normal price movement down should be on high volume, because that's what happens when you have downwards price movement is selling. When you see unnatural price movement downwards, you have consolidating of volume. You have compression, right? When you have a compression situation happening, you're seeing volume get compressed down into this nice tiny package. And I've referred to it much like combustion in an engine. You're compressing your gas and your fuel. I say gas, that is your fuel. You're compressing your fuel and your air together, and that's your compression. And then you're going to have an explosion of price discovery based off of that compression of those gases, right? Both the air and fuel mixture. So this is compression. You're seeing compression right now. This will blow up because it's moving the way that it is, and I don't know exactly when that's going to happen, but when it does explode, you will see violent amounts of volume, and you will also see violent amounts of price movement when it does. But today is round 2 fight for Semiannual Monetary Policy Report. So Jerome will be speaking today to the House, and we will put him on here in about 20 minutes, I think, from now. And I want to talk about real quickly here about kind of where we're at in about. I should probably talk like the Canadians do. We're going to talk about. I can't talk like they do. I got to get one of you guys to come on and talk about these brokers: BMO, Investor Line, Cash App, Royal Bank, RBC, CIBC, Scotiabank, TD Canada, Questrade, Wealthsimple. We've got them all to giving out proxies to individuals in some form or another. But it's going to take some. If this is your broker, if any one of these is your broker, you're going to have to do some work to get a hold of that as of right now. Now, my hopes is before the end of the week we're going to change that. But for as of right now, this is where we stand. Contacting them will get you what it is that you need to vote. For BMO Investor Line, they received their proxy but had to call in order to get it. Cash App was slow. They did receive their proxies a couple weeks ago, but it was through email. So make sure you're checking like your junk email if you have Cash App. Make sure you're checking your junk email. If you can't find it anywhere, contact Cash App. Later today, I'm going to be giving out phone numbers for these. Or contact emails for these brokers in case you're not sure, you don't want to put in the work or whatever it is for getting it. I'm going to be putting out the information for this. RBC is a received but had to call. CIBC is a received but had to call. Scotiabank was received via email. Some people have mentioned on Scotiabank that there's a setting that will allow you to get your. Can I go back to this other page here? Hold on a second. Let me look and see what this looks like. Yeah, that's okay. That works. There's a particular setting set up. There we go. That works. That if you didn't change it, you wouldn't have received the email, which normally you shouldn't have to change it, but apparently something's changed with Scotiabank where you need to click on something to activate sending your proxy material to you. So again, reach out to Scotiabank. TD Canada, Questrade, and Wealthsimple are all received but had to call. So this is a good start. I think in 2 days' time, we've accomplished the ability to saying that nobody's received any proxies through any of them other than the last three, I believe, which were receiving but had to call. And now have received some kind of proxy material either through some kind of communication with the broker on every single one of these now. So this is a good start. Today is the day where I'm going to start. I'm eliciting help for each one of these brokers, and those individuals are going to be reporting back to me what it is that the communications that they had with their broker. And I'm going to be reaching out later to those brokers to find out what they have to say for comment, and see if they want to comment on why they have not delivered the materials to their to their investors, their clientele. And we're going to kind of hold their feet to the fire here and see what it is that they have to say. So we'll get that done, and then hopefully by the end of this week, people will just start receiving them normally without even having to call. That's my goal. I would love to see that. Just knowing that people have been able to receive proxies through contacting their brokers is a good start for me. But I want to take this to completion here and try and get as many of these brokers forced into actually sending out the information versus just when somebody calls in. So we'll get there. Hopefully. I'm trying. It's a slow process, but I'm trying. All right, well, there's our down move for the day today. 594 was the bottom on AMC. We are back up to 601 now. Up 0.17% for the day. Ape had its downwards move to 174 and currently at 176.1 and up 0.28% for the day. So it's gonna be a slow one today, guys. It's gonna be a real tearjerker. Oland, I don't know. I don't know if I don't know what he can and cannot do in regards to actively helping the community out in regards to getting their proxies. I mean, he already told people what to do. If you're not getting your proxy information, you need to contact DF King after you contacted your broker. So there may be limitations on what he can and cannot do there. Olin says mine was mailed with a QR code to vote. You used to have it emailed. Andrew says, I see why earlier today you said the word international earlier pertaining to AMC tomfoolery. I won't. I can't talk beyond that, Andrew. There's certain reasons why I've decided to stay out of that. But there is some stuff going on there. I can't. There's just certain reasons why I can't talk about it, unfortunately. Because trust me, I would love to. But I feel like, I guess what I can say is this. I personally want to see retail win. If retail could potentially be hurt by something, I want to let retail know as much as I possibly can. But if it's also hurtful to also let them know of what it is that they're, that's possibly hurting them, that's dangerous too. That's as far as I can go. I can't go any further. It's saying quite a lot. It's saying quite a lot, way more than I probably should have. Be careful. No, I'm going to add to it. I'm going to add to it. I feel like I got to add to it. If you're an international investor, be very, very careful. If they're not allowing you to vote on this, there may be a reason why. So consider that. Know that what you think you may hold may not necessarily be what it is that you actually hold. And I know that so many of you out there think very highly of your brokers internationally, but I'm out here to tell you that they are not on the up and up, and it's not a good thing. So just be careful. Be very, very careful. Marvin says, are you still waiting to cast your vote? I'm probably going to be casting it before the end of this week is over. I'm taking Friday off. I'll probably be casting my vote on Friday. Apex says you're like Hagrid from Harry Potter. I shouldn't have said that. Yeah, pretty much. Pretty much. Yeah. But just be careful, guys. Know that there's got to be reasons why some things are happening the way that they're happening, right? Like it doesn't make sense. It should, if you truly and honestly own a real share of something that it is that you hold, then you should be awarded or benefited the right to be able to do whatever it is that a real shareholder holds. And if you're not being afforded that right or that ability, then what does that mean? Question it. Wonder why. Cuddy Cut says, thank you for your patiently answering my earlier question. My smooth ape brain hadn't had coffee yet. I think I understand. Even if guy B had ape, it would become AMC, so in the same boat. Yeah, exactly, Cuddy Cut. It doesn't matter which way you flip it. Guy B could buy 1 million shares of ape, and he would still have 1 million shares of voting power. Or he could buy 1 million shares of AMC, and he would still have 1 million shares of voting power. There is no separation in one being stronger or less strong than the other, because they were issued in like kind. In other words, ape was AMC, and everybody who received a dividend received 1 share. So anybody who bought above and beyond that 1 share was just additional buying pressure into AMC, because ape is AMC and AMC is ape. There's no, I mean, there's only a distinction in one ticker versus the other ticker, but it's still the same company. There's no difference. Guys, give me a second here. I know Jerome Powell's going to be coming in here real quick here, but I think just mentioning his name so many times has got my bowels going here. So I got to go hit the restroom real quick, and I'll be right back. And then we'll try to cover some numbers before Powell's bowels comes in here. I don't think I can take all the excitement with him talking. So I'm gonna go relieve myself beforehand. I'll be right back. Oh, much better. All right, we got Powell's bells coming on here. I just got rid of mine, so I'm ready to go for Powell. We'll take on Powell's bells here. Let's see here. Hold on one second. Let me adjust my screen here just a tad bit. Einstein says the DTCC has contempt for American retail investors. Wonder how they feel about foreign investors in U.S. markets. Oh, Andrew says stay. If you read your last name really fast, Andrew, it's almost like feces. Stay on the potty, Casey. That was the funny part. It's Francis. And then Jason says, Casey, what do you think happens when AMC gets 10 times the votes as shares in existence? I don't think that's going to happen. You're welcome. You're welcome, Cuddy Cut. Andrew Feces. It was funny. It was funny. It was like I don't know why, but my brain wanted to change that. It kind of. Sorry. It's Francis, right? Francis. Yeah, whatever. Andrew says, another Andrew Morgan says, if ape voting power is the same as AMC, the judge would have looked at the fact alone and said nothing nefarious is going on. Okay. Why? Failure delivers and naked should make it happen right. No, I don't agree. So much like the voting system in the United States, if you look at the actual turnout of voters, let's pull it up here. Let's see what the last elections was. So it looks like, and I'm not 100% certain on this, but it looks like it's stating in 2020 that there was 62% turnout for presidential election. 62% turnout. I don't know if this number is accurate or not. I'm pulling this off of Wiki. It seems like it's pulling it off of Wiki, and it seems like that number is actually a little bit high. I feel like the number is usually lower. It says, and here's another one called fairvote.org. It says in recent decades, about 60% of the voting eligible population during presidential election years, and about 40% votes during midterm elections. So here's the deal. Let's just assume this is the most important vote for our entire nation, and 60% of our total votes were actually being casted. Maybe at those kind of numbers you would see more votes turning out than we're supposed to be in existence. But the problem is Jason, is that people don't turn out like that to vote. We're lucky to see 10% tops on turnout. So you would have to see greater than 10 times that amount in order to get a vote. Your float would have to be, the outstanding shares would have to be over 10 just to get the outstanding amount of shares out there in existence. So I just don't see it happening. And here's the other part too, is you have in total, you have about 1.4 billion shares in existence for voting during this vote. And so when you start adding up the numbers, it's 1.44 billion, right? And when you start adding up the numbers, if you were to assume, I think the estimates right now are around 3.5 million eligible voters. So we'll take that 3.5 million. We'll divide that by the total amount of. Actually, we'll take 10% of the 3.5 million first. Let's do that. Or 350,000. We will divide 350,000 divided by the one. Actually, I should probably do the other way first. 144 billion shares divided by the 300 or 3.5 million shareholders. That's 411. That means that the average shareholder, if the entire float was owned, that means the average shareholder would hold 411 shares. Now cut that into a 10%, right? So we're looking at 41 shares. If you had the float 10 times over, then you'd be looking at 411 shares voted for by each person. I don't see any way where you get more votes than what you have outstanding in shares. It just doesn't. It seems impossible to me. Wade says the markets just went wet red. Well, we have Powell talking probably. Hold on one second here. Probably got to pull him back up. Hold on one second. I'm getting there. It says will begin shortly, so it hasn't started quite yet. While we're waiting for this to get started, I'm going to go ahead and try and start running through the numbers here real quickly. I don't know how much of the numbers we'll get through. Jason, it's even when there are votes out there that occur where they have more votes than they're supposed to be, it doesn't do anything. One thing, Jason, Cinemark right now, if you pull up, and I want you to understand, I want you to realize what it is that you're hoping for is ridiculous. You need to stop hoping on things that aren't going to cause anything to happen, and realize that the way that this market is designed is to allow for more shares to be in existence. It's meant to be set up like this. So when you pull up institutional ownership on Cinemark, our direct competitor, institutions hold long 129,496,006 shares, which is 109.23% of the total outstanding shares. Stop trying to focus on there being more shares than what they're supposed to be. It does not matter. This market is designed to trade like this.
All members will have 5 legislative days.
Stop placing hopium in the idea that the existence of more shares is going to cause something to happen, because there is already, I promise you. We already know that there is. So stop trying to focus on that. That's not going to help us.
I now recognize myself for 4 minutes to give an opening statement. Thank you, Chairman Powell, for your testimony today. This week, you stated that the Fed will, quote, stay the course until the job is done, and that is to restore price stability. This is positive, but you know as well as I do, you're facing a very strong headwind from the political left. Democrats are pressuring the Fed to stray from its narrow mandate. It's a page out of their same old progressive playbook. When they don't have the votes to achieve something here in Congress, they turn to regulators. And now, Chair Powell, they're looking at you and the Federal Reserve. President Biden's kowtowing to the far left is what got us into this inflationary mess. I urge you to reject the ideologues who put their social agenda ahead of economic prosperity. High prices continue to eat away at workers' wages and retirees' incomes. Since President Biden took office, we've experienced inflation at rates not seen since the late 70s and early 80s. Inflation rapidly accelerated after Democrats passed their so-called American Rescue Plan, which poured nearly $2 trillion of inflationary fuel into the economy. By June of last year, the Consumer Price Index showed inflation skyrocketed from below 2% to nearly 9%. And personal consumption expenditures, the Fed's preferred measure of consumer prices, ballooned to 7%. Instead of being rescued by Democrats, Americans were punished with pain at the grocery store and sticker shock at the pump.
Come on, stop making this
While
partisan.
inflation is now it is now below its mid-2022 peak, it is persisting at rates well above the Fed's target. It remains broad-based and continues to hammer Americans' pocketbooks. In fact, a recent Gallup poll shows half of the respondents say they are worse off financially than a year ago. It's clear that there's still a long way to go in the effort to bring down costs. I look forward to hearing you reaffirm your commitment to that work today. Republicans also want to hear from you regarding some concerning developments at the Federal Reserve on the regulatory front. Recently, the Federal Reserve's Vice Chair for Supervision announced a quote-unquote holistic review of bank capital in the Fed's regulatory regime. However, it seems that only a small group within the Fed knows what this means, what it entails, how much review is being vetted by the full board, and the type of quantitative analysis the Fed is performing. The Fed shouldn't operate in the shadows, especially when the regulation in question can have broad and significant economic effects. It's also unclear the motivation for the Fed's holistic review, particularly when so many board members have stated that the banking system is very well capitalized, and any review of capital standards should be targeted. It also appears the Federal Reserve Board is laying the groundwork for climate policy to be implemented through the Fed regulation with an opening salvo to quote-unquote scenario analysis. Addressing an issue like climate change is important, but a policy that should originate here in Congress by the elected representatives of the people, not the central bank. As you said, the Fed needs to stick to its knitting. I agree. There is concern from many that the Fed is picking up new needles and knitting partisan sweaters. At such a precarious time for our economy here at home and the global economy, that would be a mistake. Thank you for being here today. I look forward to your testimony and the questions by our members. The chair now recognizes the ranking member of the committee, Ms. Waters, for 4 minutes for an opening statement.
Thank you very much, Mr. Chairman. Good morning, Chair Powell. Since your last visit, our country, under the leadership of President Biden, has made major progress to improve economic conditions, including adding a record 12 million jobs, reducing unemployment to its lowest rate in 54 years, while also reducing the deficit by $1.7 trillion.
I don't like this whole bipartisan crap, right? But I just want to mention that it's almost like she's not even understanding the concept of what it is that the feds are trying to do here. She's literally saying that Biden's created 12 million jobs, and the feds are literally saying we need to reduce jobs. We need to drop the labor force down a little bit to stop inflation. So what she's saying is that Biden is working directly against what it is that the feds are trying to accomplish. It doesn't really make sense. I'm not even sure if she really even understands what it is that she's saying here is in direct opposition of what it is he's trying to accomplish. But you know, and this is not I'm not trying to be partisan on this at all. I'm just simply saying like this is the mindset of somebody who doesn't understand what is truly happening. When you make a speech or you read a speech, and you say we are directly doing a great job at defeating what it is that we're trying to accomplish, and it's rough, man. It's rough for me to hear this because I don't care which side of the party you're on. I want you to help the American people. I don't want you to screw people over. And she's literally sitting here saying like we're fighting against the feds on what it is they're trying to do to reduce inflation. And I don't know, man. Like, help the people. Help people out. Stop trying to stick to the indicators that help you to say we're making things better when you're making things worse.
Unfortunately, many families are still struggling to afford basic necessities because of inflation. What's more, interest rate hikes are making borrowing, especially for mortgages, outrageously expensive. Since I raised this concern for you in a November letter, the rate hikes continue to have an outsized impact on housing costs, which are, as you know, a primary driver of core inflation. But, Mr. Chair, I think that you will agree that Congress also has a role. That's why I'm somewhat disappointed that after 2 months, Republicans have taken no serious action to address inflation. By this time last Congress,
neither side has. Neither side has, and that's the problem.
House Democrats had passed the American Rescue Plan to provide relief from the ongoing pandemic, which included our committee's efforts to provide $70 billion for homeowners, renters, businesses, and first responders. If Republicans are looking for ideas, committee Democrats have put forth additional bills, like the Build Back Better Act, to bring down costs for Americans, especially housing costs.
Bringing down costs cause people to continue to spend. Continuing to spend causes inflation. It's not what we need.
Even more concerning, we're just months away from an economic catastrophe beyond what we have ever seen, including spiking interest rates, massive job losses, and global instability. I'm talking about the threats by Republican leadership to force a default on our nation's debt if we don't agree to their demands to cut Social Security, Medicare, or other critical programs. You've urged Congress to take immediate action to raise the debt ceiling. But rather than focusing on this very real issue, the first bill that committee Republicans brought to the floor instead suggested that Social Security and Medicare are socialist threats to America. Since then, we have considered legislation related to deregulating securities and banking laws and countering threats from China, but Republicans have completely ignored the biggest economic threat to businesses, consumers, and our economy, defaulting on our debt. Last month, I wrote a letter to Chair McHenry urging him to take this matter seriously and hold a hearing, but I'm still waiting for a response. I hope Republicans will listen today to the real consequences that even the mere threat of a default would have for everyone in this country. And finally, I'm so pleased that we're finally making progress on diversity and inclusion for key positions at the Fed, including last year's historic confirmation of Dr. Lisa Cook to serve as the very first Black woman on the Federal Reserve Board, with the board's vice chair and Kansas City Fed president positions vacant. I think President Biden and Kansas City Fed Board should build on this progress by seriously considering diverse candidates for these positions. With that, I yield back the balance of my time.
The ranking member yields back the balance of my time, asking unanimous consent to submit for the record my letter to Secretary of the Treasury Janet Yellen from February 28th, asking for an update on the ex-date for the debt ceiling. I also ask unanimous consent to submit for the record the latest CBO long-term budget outlook on the unsustainability of our debt, most recently released. And without objection, so ordered. I'll now recognize the Chair of the Financial Institutions Subcommittee Chair, Mr. Barr, for 1 minute.
Thank you, Mr. Chairman. And Chairman Powell, thank you for being here today to discuss the Federal Reserve's monetary policy actions in a time of economic uncertainty, mixed economic data, historic inflation that continues to plague families and businesses around the country. It is paramount that the Federal Reserve remain vigilant on reducing inflation, anchoring inflation expectations, and restoring price stability at the Fed's 2% target. I also look forward to discussing the Fed's regulatory and supervisory activities. As the Fed reviews the bank capital framework, it needs to consider the impact to the real economy and our global competitiveness when raising capital requirements and sidelining capital would work at cross purposes with monetary tightening, constraining the supply side when we need more, not less, investment to fix supply chains and reduce inflation. Tailored regulations are required of the Fed by law, and a one-size-fits-all approach would be the wrong path to take. Finally, I urge the Fed, in your words, to stick to its knitting and not attempt to be a climate regulator. I yield back.
Gentleman's time has expired. We'll now recognize the ranking member of the Financial Institutions Subcommittee, Mr. Foster, for 1 minute.
Thank you, and thank you, Chair Powell, for being here today. Today is the 15th anniversary of when I was first elected to Congress and placed on the Financial Services Committee.
This guy, I'm just saying, I don't even know who he is, but damn, he's got a smooth voice. I want this guy to read. I want to. If I was going to listen to books, I'd take this guy. He can read books all day long.
Just as the economy was about to collapse. And so that was my trial by fire, the emergency response to rescue the economy and the legislative response, the Dodd-Frank Act, that successfully stabilized our financial system. So 15 years later,
Mr.
as I take my place as the ranking member on the Committee of Oversight over U.S. banking and monetary policy, I recall the solemn oath that I swore to myself back then to make sure that this kind of calamity never happens again. The monetary policy report that we're receiving today is largely a narrative of a return to normal. Lead times to manufacturers are back to pre-COVID levels. The job market retains supernatural strength, and inflation is responding more or less as predicted to the usual measures. And by far, the largest threat on the horizon is a repeat of the 2011 default crisis. Congress has the power to avoid that, and we owe it to the American people to do so. And I yield back.
Today, we welcome the testimony of Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Chair Powell was reappointed, and sworn in for a second four-year term as chair on May 23, 2022. Chair Powell also serves as chairman of the Federal Open Markets Committee and the system's principal monetary policymaking, which is the system's principal monetary policymaking body. Chair Powell, we thank you for taking the time to be here. We will recognize you for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made part of the record. Chairman Powell.
By the way, George William Foster was that last U.S. representative for Illinois. For those of you who are wondering, 11th Congressional District since 2013. He's a U.S. representative for Illinois, 14th Congressional District from 2008 to 2011, and he is a Democrat. Not that it matters. I really don't care.
You're recognized.
Chairman McHenry, Ranking Member Waters, and other members of the committee, good morning. And I appreciate the opportunity to present the Federal Reserve's Semiannual Monetary Policy Report. My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we had seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with the revisions to the previous quarter, suggest that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above our longer-run objective of 2%. The 12-month change in total PCE prices has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, there is little sign of disinflation thus far in the category of core services excluding housing, which accounts for more than half of core consumer expenditures. To restore price stability, we will need to see lower inflation in this sector, and there will very likely be some softening in labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. The activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remain very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historic lows. Turning to monetary policy. With inflation well above our longer-run goal of 2% and with the labor market remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past 2 meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If, and I stress that no decision has been made on this, but if the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Chairman Powell. I'll now recognize myself for 5 minutes for the purposes of question.
I recognize
Chairman
myself.
Powell, there's been a lot of discussion over the last 24 hours about the effect of rate increases on the economy, a lot of debate about what you said yesterday in the Senate. But no one asked you this directly. We have a March meeting coming up, Open Markets Committee meeting coming up in 2 weeks.
2 weeks.
How do you think about the March meeting? What's your approach to that? What are we likely to see?
Is he going to say it?
Thank you. So I won't repeat what I just said in my testimony, but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up, data to be analyzed. One of them came out at exactly 10 o'clock. That would be the JOLTS report, which of course I haven't seen, being sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week. So those will be important and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received and of the overall direction of the economy and of our progress in bringing inflation down. And we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher longer. Is that still the case?
Yeah, so, and as I said in my testimony, we look at the data since January and also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is likely to be higher than we'd expected.
What are those economic factors?
So going back to January, as I mentioned, the softer inflation readings of November and December were revised up. We got a very strong inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending, strong manufacturing data right across the board. And as I pointed out, some of that may have been affected by the very warm January weather, but nonetheless, all of it pointed in the same direction.
Okay, let's move to regulation. Chair Powell, in January, the Federal Reserve put out a policy statement noting that digital asset custody is a permissible activity if done in a safe and sound manner. However, if a bank can demonstrate to the Fed that it can conduct that activity in a safe and sound manner, the capital impact of the SEC's staff accounting bulletin effectively precludes banks from offering digital asset custody service at any scale. Are you aware of this staff accounting bulletin by the Securities Exchange Commission and its impact on custodial services?
I am aware of it. Of course, it's an SEC accounting bill. This is SAB 121, I think, and
that's right.
Certainly aware of it, and we do follow general accepted accounting principles in our
Yes.
capital regulation.
Okay. Well, without objection, I'll submit to the submit for the record my letter to the bank regulators about this. So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done. Next question is certainly about bank capital standards. You got questions about this yesterday. Chair Barr has announced a holistic review of capital requirements. As I said in my opening statement, there are a lot of questions about this process. And previous statements by members of the Fed governors about the adequacy of current capital standards. And so while the Vice Chair for Supervision has announced that the Fed will engage in a holistic review of capital regulation, is that Fed staff? Is that done at the, at the governor's, the board level? What is the process? There are a lot of questions that people have about his statements. And so we want to understand why it's necessary for the Fed to conduct a holistic review and what that process is. So, my general question is, do you still agree with your previous statements about the adequacy on a generalized basis of our financial system? Or are we to read into this that we're not adequately capitalized and there's a high level of risk in the system that we're unaware of at this point?
Thank you. So the why really just is that as a new Vice Chair for Supervision, Vice Chair Barr has launched into, he's taking a fresh look at everything, including capital. That actually is typical of the last two people to have this job. So that makes a lot of sense. In terms of the process, it's certainly conducted under Vice Chair Barr's leadership with input from the staff and discussions with governors on that committee, and I'm kept broadly apprised about what's going on. But the bottom line is nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on. I think discussions are going on, meetings with industry and that kind of thing. When we get to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal, and that proposal will go out for comment, and we'll solicit comment from any and all commenters, and we'll look very carefully at that. So it'll be a wide open process in the sunshine.
Thank you. I yield back. Now recognize the gentlewoman from California, the ranking member, Ms. Waters.
Thank you very much. Chair Powell, I agree with what you said on February 1st, that Congress must raise the debt limit because of what you described as the highly risky consequences of failing to do so. You are perhaps the most important expert on the debt limit, which is why I find it very concerning that your recommendation to raise the debt limit in a timely manner is being ignored by my colleagues on the other side of the aisle. I'm also concerned that the consequences of this brinksmanship are imminent. Fitch Ratings said this week they may seriously look at downgrading the U.S. debt based on the escalating brinksmanship they are observing, even if Congress ultimately addresses the debt limit at the last minute. This is history repeating itself. Standard & Poor's downgraded our debt back in 2011 when Republicans last controlled the House and threatened default. The Bipartisan Policy Center later found that the 2011 debt limit debate cost us $18.9 billion in higher borrowing costs, even though we never defaulted. To put that into perspective, that could have been leveraged to provide up to $200 billion in loans to small businesses through the State Small Business Credit Initiative, or to provide hundreds of thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee, had no qualms about paying our debts when Trump was in office. 3 times they addressed the debt ceiling in a timely manner without holding our country hostage. But Republicans are ready to tear down the hard work of Americans everywhere to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk you see if Congress continues to delay action on the debt limit, both for our economy and for individuals and families?
Let me start briefly by saying that we have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the 2 things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. 2 really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here. But no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
Thank you very much. I don't want to miss what you said. I somewhat quoted you when you said that Congress must raise the debt limit because of what you described as a highly risky consequence of failing to do so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again, these are fiscal discussions, and we don't want to be a part of them, and really they're between elected officials.
But you are an expert on the subject.
Well, I spent a lot of time on this, as you'll recall.
As an expert on this subject, you are concerned about the high risky consequence of failing to do so. Is that correct? Did I correctly quote you?
That's correct.
Thank you. And so, again, let me just go a little bit further. The chair mentioned that he had either written a letter or maybe even had some conversation from Janet Yellen about the time limits that she had attempted to describe. is it your understanding that she said she could maneuver and kind of manipulate things so that she paid the bills that were coming due, but this could only last until about June? Is that your understanding?
Honestly, I would really have to not try to interpret the Secretary's words for you. That's really up to her to do.
Can she keep us afloat until about June?
I don't, honestly, that's not for me to say. These are really questions for the Secretary. I'm sorry, Ms. Waters.
Have you had any conversation with her about the statement that she made about being able to manipulate the debt and pay bills that were coming due out of another account, et cetera? Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get you
Gentlelady,
in a-
time is expired.
I beg your pardon?
The gentlelady's time is expired.
Did I have equal time with you?
You sure did. He went over time.
If I did, thank you. I yield back.
I now recognize the Vice Chair of the full committee, Mr. Hill of Arkansas.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being with us. You're welcome anytime. Don't wait till we ask. If you want to volunteer and come, we love having your views on many topics. Thanks for talking about your commitment to price stability. You know, we've had this discussion last June between us of, I do think that's the primary mission of the Fed, and I think it should be the only priority of the Fed is price stability, because it's the legislative branch and the executive branch that really are responsible for, quote, full employment and having that policy environment and making sure that that's right. So your commitment to price stability is welcome by this committee. Yesterday in the Senate, you suggested that you supported a regulatory framework, a broadly regulatory framework for digital assets. Is that right?
Yes.
And is it your view that if we had a regulatory framework here in the United States for digital assets, that there'd be more transparency and rules of the road for both consumers, investors, and developers?
Here it comes.
And would it, if we had those rules of the road for business seeking to use and develop blockchain as a potential new technology in their business and tokenized payments, that again, that would be beneficial to business to know how to go about that?
Yes, and to assure that it's all done in a safe and sound manner when we're talking about banks.
Right.
Can I throw in a question here, please? Mr. Hill, please, can I throw in a question? And Jerome Powell, Mr. Powell, Chairman Powell, do you think that with a digital currency that we could potentially have the ability to be able to create more spending and higher debt ceilings and print more currency that we can track everywhere that it is that it's going? Would you also agree with that, sir? Wait, I gotta rewind here, like 10 seconds.
And then
that didn't work.
If we had those rules of the road for business seeking to use and develop blockchain as a potential new technology in their business and tokenized payments, that again, that would be beneficial to business to know how to go about that.
Yes, and to assure that it's all done in a safe and sound manner when we're talking about banks.
Right. And then my next point would be exactly that, to help banks, investment brokers, custodians understand how they could even participate in that market in a safe and sound manner. You agree that a regulatory framework would help on that?
Yes.
And then finally, we've grown up in our country, and it's unique in the world, that we have a dual banking system, and due to a quirk here in Congress over 100 years ago, we have insurance is regulated exclusively by the states. So would you believe that that regulatory framework would also have to preserve some sort of role subject to safety and soundness, for states to play some role in that regulatory framework for digital assets?
Let me just say, I think that it certainly works in banking and insurance. I have no problem with those.
Right, but you think it could? You consider it possible that it could also work in digital assets?
Certainly possible.
Yeah. Thank you. Turning to a topic that's been a subject here for nearly 4 years, central bank digital currencies. Article 1 of the Constitution reserves
coins and money issuance to the Congress, and we've in turn delegated that to the U.S. Treasury, which has, since 1912, engaged the Federal Reserve as their fiscal agent. You've testified here many times before that to issue a central bank digital currency, that would have to be authorized by statute by Congress. Is that still your testimony?
So that is absolutely the case as it relates to a retail CBDC. There are potential forms of a wholesale CBDC that you would need to look at. It's less clear. But we've always been talking about retail CBDC, and that's something we would certainly need congressional approval for.
And what would be a parameter on something that's not a retail CBDC where you think that could be issued in some form or fashion without Congress's direct statutory authorization?
It would be, for example, it would just be something between banks, so it would look an awful lot like a bank reserve. And you might ask, well, why would we need it? And that's a really good question too.
Yeah.
But just something that's literally within a wholesale market.
But that speaks that you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside yeah.
Yes.
So that leads me to FedNow, which is supposed to be up and running, I think, this summer, somewhat behind the scene there. I would like to ask you to formally have this full committee briefed on that by the Federal Reserve. I know the chair of the Kansas City Bank was involved. She's now left. And I think the committee has a lot of questions about FedNow, how its interoperability will work, how it's going to roll out, and also just a question that we've been asked that why the Fed wire system isn't up 24 hours a day, 7 days a week now to benefit consumers that are using Venmo. Do you have a thought on that?
I'm not sure why we're not 24/7 on that, and we, of course, be delighted to come up and brief the committee on FedNow.
That'd be good. We'll take you up on that and the right person from the Fed. And Mr. Chairman, I yield back.
Gentleman yields back. We'll now recognize the the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Thank you. Mr. Chairman, I want to thank you for bringing to our committee's attention several years ago the importance of tough legacy LIBOR, some $16 trillion of instruments where the creditor wouldn't know how much the debtor was supposed to pay. This committee, we passed legislation over a year before the LIBOR hit the fan. You issued regulations 7 months before the absolute deadline. I hope we do this in other areas, and it's my understanding that with those final regulations, we're done, and we've solved the LIBOR issue. Is that correct?
That's my understanding as well.
Good. People talk about inflation, and they somehow say that it's a matter of the personalities and politics in the United States. Others argue that the entire world is hit by inflation because Ukraine and COVID. I think we've got the answer to this question in that inflation is considerably higher in the Eurozone than it is in the United States today. And it's very hard to say that Joe Biden is responsible for inflation in Germany. I commend the ranking member for bringing up the debt limit and the harm that's already done to our economy. If we solve the problem tomorrow, we had less investment than we would have had yesterday. And I would say that I commend the president. He's going to issue a budget plan tomorrow, and perhaps in their time, one of our Republican colleagues can tell us when the Republican budget plan will be released. We are all eagerly awaiting it. Housing is a huge part of inflation, and we've left it to local government, but the permitting process there guarantees scarcity, which guarantees high housing costs. Mr. Chair, we've talked back in 2001 and several times even before that about wire fraud. And having just bought a home, I saw the process up front. Everybody's very nervous about one thing, and that is, will the buyer of the house be tricked into wiring their down payment to the wrong account? Or will the seller, the buyer be tricked into, or the escrow agent be tricked into sending the money to someone other than the seller of the property? We talked about this back in 2001, where I urged you with your FedNow system, which I'm glad is on track to move forward, to have what the Brits have. When you send the wire, you identify not only the number of the account you're sending it to, but also the name of the person or entity that's supposed to receive that. At that time, back in 2001, you said that payee matching is not the best way to do it. There are other ways to do it, and that you'd be happy to get back to me as to how you're going to make sure that an email from a Nigerian prince does not get the wired funds, particularly in a housing transaction, wired to an account number that turns out to be in Lagos. What progress do you have? When can home buyers have a system where they're sending it to a named payee as well as to a number?
So I hope we did come back in a timely way to you on that, but it's a problem you've brought to our attention. You're right, over many years, and we continue to focus on that.
Well, the bureaucrats who are working on this don't want to do what the Brits did. They've proven it can be done. You said you were going to accomplish the same goal in some other way, and it has been a while, and it's not solved, nor are you aware of any solution. I would hope that you would go back and say, we don't want to add this anxiety to every real estate transaction. We go back to the drawing boards, follow what the Brits have done, and have payee matching. Finally, as to crypto, cryptocurrency says what it means. Hidden money. That's what it means. And if we impose know your customer and anti-money laundering statutes to it, it won't be crypto anymore. What crypto wants is to have part of its ecosystem above the waterline, visible and subject to know your customer, and then have the rest of the iceberg below the waterline.
Gentleman's time's expired. I will now go to the gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Chairman McHenry, thank you very much. Chairman Powell, thank you for joining us today. We appreciate not only your professionalism, but your direction at us. Chairman Powell, I know that the Fed considers divergences, and you talked about it as you spoke in your opening statement about consumer price index.
Guys, I'm sorry I don't have that that cool Southern drawl that this Mr. Sessions has here. I wish I did, because it's cool, but you can enjoy his.
Personal consumer expenditures, inflation, GDP, and all these things are talked about in your report, monetary report, March 3, 2023. Thank you. A couple days ago, I had an opportunity to see that an economist, Arthur Laffer, produced a report that spoke about literally this country doubling GDP. Now, I know we're putting CPI, PCE, inflation, all these things into a mix. But he said that if we made changes in health care to efficiencies, we could double the current GDP rate. My question to you that I hope you can answer is, what do you think about that? Is that something that is in this document that I have missed? And it's seemingly to a person who follows this, as Art Laffer does for 50 years, what do you think is an important way to look at efficiencies in healthcare? Thank you.
So no, that's not in our monetary policy report. I'll just say one thing, and that is we do spend something like 17 or 18 in that range % of GDP delivering healthcare. Other similarly wealthy countries spend 10%. So it's the delivery system. It's not that the benefits are incredibly rich or anything like that. It's just that the delivery system is very expensive. That's $1 trillion a year that we spend and get nothing for it. This is fiscal policy, but I'm responding to your. So I would think that he may have meant that if we had a delivery system that saved that $1 trillion that doesn't really get us anything, then that would be great for the economy, which I would agree with.
So you've spoken of supply chain disruptions because it in fact is an inhibitor or an accelerator as we gain that advantage. You just talked about some seemingly which would offer some validation to Mr. Laffer as he spoke about the huge importance of this. Is that something you should start paying attention to where policy people, not only at the Fed, but your Fed banks around the country would start looking at and start putting pressure on us to gain those efficiencies as a result of a global view?
So on supply chains generally, they have suddenly been tremendously important in inflation, as you know, for the last couple of years, and for the first time really have been something that we've had to study carefully. In terms of healthcare delivery, that is strictly a question for you and for the parts of the government that are charged with it. The Fed does not have a role to play and does not seek a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence. You've got a role in education. You've got a role in who's in the workplace. You've got a role. Interest rates, and yet my point is, it's such a staggering number that impacts us. Just love to have you go back. Perhaps we from this committee need to give you some direction on that. But I think your testimony today, it recognizes the staggering impact on that. I don't think it's political. The answer may be political, but I think the actual numbers are not political. It's an inefficiency that is happening across the country, not a regional matter. And so I wanted to get your take on that, and I appreciate you being here as always. Thank you for your confidence and your hard work that you give this country. Mr. Chairman, I yield back my time.
Gentleman yields back. We'll now recognize the ranking member of the Agriculture Committee, Mr. Scott of Georgia, for 5 minutes.
Thank you very much, Chairman, and welcome back, Chairman Powell. Now, Chairman Powell, listen to me very carefully here, because I think we're on the verge of making a terrible mistake. Back in 2008, if you recall, Barney Frank then and Ms. Waters asked me to take a look and kind of work with you and the Fed. You were a board member in 2008. And we came to the conclusion that we needed a more equitable playing field between our large banks, like Goldman Sachs, Citigroup, and our regional and smaller banks, like Truist and our community banks. And we changed that. But now I hear that the Fed and the FDIC plan to drop a new rule which seeks to apply the long-term and higher capital requirements that were created, and you and I did this back in 2008, and you remember, that were created for the Goldman Sachs and for them. And now we want to apply these rules to the regional banks. There's a big difference, and we've omitted this difference if you proceed in this manner. I think it's very misguided. It works, and you and I worked on this. You recall this. You were a board member. And we saw that we needed to have a better playing field to protect. And if you all go along with this, it could put many of our regional banks and small community banks out of business. So I want you to reverse this. First of all, tell me, am I speaking the truth? Are you all planning to all of a sudden here put these smaller and regional banks under the same heavy or financial load as your large worldwide banks? Tell me.
No, we're not planning that. We believe strongly and always have in tailoring to address the different size and risk characteristics of financial institutions, and certainly nothing like that for the regionals. They won't have anything like what the very large, most systemically important banks have in terms of overall regulation.
Yeah, because I remember clearly you and I were back, I think we were on this side then, talking about this in this same committee room. And you worked with us on that. I'm glad to hear that. Where is that coming from? I mean, it's a concern. It's just a rumor. Have there been any discussions about removing the playing field and the guardrails we have here, the differentiations in the requirements between the regional banks, community banks, and your larger global banks? So there's nothing to that?
Well, I would say this. We're required by the law now, and we're doing this. Dodd-Frank actually required us, suggested that we should tailor, and then the S-2155 then required it. And anything that we do will reflect appropriate tailoring.
All right, so that's off the board. We're not going to change and put the smaller and regional banks under the same financial obligation role as the large banks. We got that right from you, correct?
Yeah, that's right.
All right, good. Now let me turn to China. I'm really worried about China, and right now people may not know it, but China is the world's largest economy in terms of purchasing power. Now, at our last meeting, I talked about this move where we didn't blow the balloon up. And this is an example of what I was pointing out.
Gentleman's time's expired. We'll now recognize the chair of the Science Committee, Mr. Lucas of Oklahoma, for 5 minutes.
That poor guy, Mr. Scott. Mr. Scott had so many more questions that he wanted to ask, but he couldn't spit them out fast enough. He spent more time just trying to get out his questions, and I think than he really like. I felt like he had probably like a list of a couple more questions he had there. He wanted to get out. Whew, that was tough to make it through that. All right, next.
Thank you, Mr. Chairman. Chairman Powell, I'd like to follow up on the topic of capital standards. One of those things we've discussed many times together. As you know, commodity markets have seen significant volatility in the last few years. And during times of tremendous economic uncertainty, like we've seen, end users turn to the markets to hedge risk, particularly those in the agriculture and energy sectors. And I know that the Fed is early in the review process of potential changes in capital requirements. Can you, well, I'll ask anyway. Can you commit to ensuring that these changes will not increase the cost for banks providing those commodity derivatives to end users?
That's a really specific, can I go look at that? I mean, I'm not actually sure that the work even addresses that. So
fair point.
Happy to come back to you on that.
And that particular response makes me feel better, because after all, those products are very important to my folks and make a great deal of difference in how they're able to address their issues. So, as you discussed earlier, and as you've consistently assured, the Fed's not a climate-making policymaker. You and I have talked about this issue, again, many times in the past. However, I'm concerned that the Fed could be heading in that direction and could be laying the groundwork for climate-related stress tests that would reduce access to capital for entire sectors of the economy. This would also open up the Federal Reserve potentially to political pressure and force the Fed, in fact, to make policy decisions related to climate change. We've seen, for example, this administration turn to regulators to impose climate policy as an alternative to the legislative process. Chairman Powell, how careful are you in ensuring that the Fed does not place itself into the climate debate? And how can Congress ensure that the Fed's regulatory toolkit is not, shall we say, warped into creating climate policy outcomes?
So I think we do have a narrow but real role there, which is around bank supervision, making sure the banks understand and can manage their risks over time from climate. I think my colleagues and I all understand that it's a tightly circumscribed role that we're playing, and that we're not looking to move into an area where we're actually becoming a climate policymaker. I would completely agree with you, though, that over time that border needs to be very carefully guarded, and I will tell you that I will do that as long as I'm at the Board of Governors.
I very much appreciate that, because again, it's a very important issue to the 3rd District of Oklahoma. Traditional production agriculture, oil and gas, and the actions that the Fed takes have a significant impact back home. So it's vital that we resist the demands to do that sort of thing now or in the future. And I very much appreciate that response. And with that, I'll yield back the balance of my time.
Gentleman yields back. The gentleman from Massachusetts, the ranking member of the Digital Asset Subcommittee, Mr. Lynch, is recognized for 5 minutes.
Thank you, Mr. Chairman. And thank you, Mr. Chairman, and for your willingness to come here. And last week, the Treasury Department announced that leaders from Treasury would begin to meet regularly with leaders from the Fed and from the White House to discuss a possible CBDC, central bank digital currency, and other payment innovations. In the statement, it was mentioned, and I'll quote from it, it said that the Fed is encouraged to provide periodic public updates as it continues its research and its technical experimentation on central bank digital currencies. I was wondering, first of all, when you might be expecting to share some of these public updates. What's the timing on that?
So we did go out for comment in general on a CBDC a year or so ago, and I do expect we'll go out. I can't give you a date, but we'll certainly go out and engage. We engage with the public on an ongoing basis.
Yeah.
We're also doing research on policy and also on technology. That's what we're up to.
I'm aware of the Boston Fed has a partnership there. The Hamilton project over there with the folks from MIT Media Lab, they're doing a great job. But it says here that the discussions would include technical experimentation. I was just wondering, at what level are you talking about? Making decisions on architecture for a CBDC, a retail CBDC?
We're not at the stage of making any real decisions. What we're doing is experimenting in kind of early stage experimentation. How would this work? Does it work? What's the best technology? What's the most efficient? We're really at an early stage but we're making progress on sort of technological issues. The policy issues are equally important, though. We haven't decided that this is something that the financial system in the country want or need.
Right.
So that's going to be very important.
Right. Well, I think I speak for the chairman as well. Would love to have more dialogue with the Fed on that, and maybe bring in the folks from MIT as well, and just make sure that Congress and this committee is as up to date as others. Let me switch over to Fed now. There are some champions of digital currency and stable coins in particular that continue to cite the need for faster payment systems. However, as was earlier mentioned, the Fed Now is a service that the Fed is working on to finalize that will allow for instant payments between bank accounts. And the Fed has a target release date for Fed Now between May and July, which is right around the corner. Do you see any reason why cryptocurrencies would provide faster payments than the Fed Now system? And would this offer, with the transparency of Fed Now, would it offer distinct advantages over some of these stable coins that are touting faster payments?
What Fed Now will do is it will enable all the banks, any bank in the United States, not just the big ones, to offer instantly available funds and real-time payments to their customers. That's what it will do. So that's a great thing. A CBDC, I think you're asking whether a CBDC would serve some of that, but a CBDC is going to be years in the evaluation, and I think we can get this into the hands of the public very quickly, and I think we'll have real-time payments in this country very, very soon, and so that's a good thing.
It is. I do have an overriding question, and that is, before the greenback, everybody had their own currency. You had rail companies, you had coal companies, you had state banks that were authorized to issue their own currency. But when the greenback came out, all of those various currencies went to zero because everyone had, because the greenback had the full.
I hope he's about ready to say what I think he's going to say here. I hope he's leading into this to saying like what's going to happen to current currencies, especially cryptocurrencies that are in existence. This is going to be a very interesting question here because this is going to be. I hope he's leading into this.
Faith and credit of the United States behind it. I'm worried about a lot of these stable coins and other cryptocurrencies. Do they go to zero when we come up with a CBDC that has the full faith and credit of the United States behind it? And we've got thousands of these out there, and you've got people investing millions and millions of dollars in these, trillions right now. And I'm just thinking if we had those advantages built into a.
So here's my thought process on this, guys, because I've been kind of thinking about the future and on how they would issue, a CBDC here in the United States, and they would not want to have other cryptocurrencies that are competing with it. They would want to be able to control all of it, and so there's a couple different lines of thought that I have on how they would go about doing this. And one of them is that likely what they would do is they would probably give like a one-time buy-in type deal where if you wanted to transfer your cryptocurrency, they would honor that value on a one-time purchase rate, and then allow people to kind of transfer over. And then after that, they would say, you're on your own, and whatever happens with this cryptocurrency, and then basically they just shut it down, and it would end up going down to zero. My second line of thought process on this is they would probably just straight up outright just ban it altogether. They would not want to have any kind of competing cryptocurrencies with the United States crypto CBDC. So that's my thought process on this. I'm kind of leaning on I'm not really sure which way they're going to do it. It seems most fair that they would offer people a one-time chance to be able to switch over. But I would lead you to think about things like healthcare. When the government tried to take over healthcare, how do they do that? How do they force people into a government-run healthcare system? In regards to a CBDC, it's the same exact thing. You slowly implement it and you force people into using it. And so that's really, truly, and honestly the answer to the question. And so you got to keep that in mind here. I'm glad he's asking this question, this Mr. Lynch. If he wasn't asking, I'm really curious to see what Powell's going to say here.
A CBDC, wouldn't those alternatives go to zero if they did not have the transparency and the full faith and credit that we enjoy?
So certainly unbacked cryptocurrencies that don't have any intrinsic value but nonetheless trade for a positive number, those are understood the valuation of those. Stable coins are actually, many of them are really, they're drawing on the credibility of the dollar. They have dollar-based, they're dollar denominated mainly, and they have dollar-based reserves, although we don't know what's in the reserves because there's no regulation.
Gentleman's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes. The chair.
He didn't get there. Oh, I wanted to hear that answer so bad. I mean, I think I can kind of read into what Powell's saying. He's basically saying, like, look, there is no security in what, in a decentralized currency. And so the idea behind that, or what he's essentially saying is that we can't back that. There's no way we can back that. It's on its own, and more than likely they'll probably just want to try and devalue it at all costs. and make it something that is unusable.
Of the National Security Subcommittee.
Thank you, Mr. Chairman. And thank you, Chairman Powell, for being here this morning. The reserve currency status of the dollar to the U.S. has enormous financial and national security benefits. In the wake of Russia's unprovoked invasion of Ukraine, the Fed took action to prevent the Kremlin from accessing more than $300 billion in reserves, roughly half of Russia's reserves. However, this led to an accelerated effort by countries like China to de-dollarize their official foreign exchange reserves. Just last week, there was an article in the Wall Street Journal titled, "Russia Turns to the Yuan," in an effort to ditch the dollar. Not only that, but China's President Xi Jinping pushed for the settlement of energy trades in the Chinese yuan at a summit with Arab leaders in December. The question is, are you concerned about these actions by Russia and China to establish different reserves and conduct transactions in non-U.S. dollars?
Okay, so this is a great follow-up question right here. I don't know if they planned on doing this. I'd have to look up these two representatives and see which side of the aisle they're from here. But these back-to-back questions actually here bring up a really interesting point. And one of the things that I've been talking about for a really long time is that Russia just moved back to a gold standard. And if the U.S. wanted to devalue the ruble, then essentially what they would do is they would say, okay, well, we're not going to value gold the same way that we used to. We're going to move even further away from gold, and we're going to move to this digitalized central or CBDC, centralized digital banking currency. And when you do this, and you get the rest of the world to conform to what it is that you're doing, then you've basically forced out any kind of gold valuation, period. And so now you've bankrupted the country. This would be bankrupt Russia 2.0. And I hate calling it Russia because, whatever. I mean, it's whatever. Or I think I was going to say USSR and I said Russia. I said it right, but I meant to say it wrong. This is bankrupt USSR 2.0. And not only that, but not only would it be a bankruptcy of the ruble, but it would also be the bankruptcy of the yen as well, because China is also trading on gold. So they moved their currency to a gold system. So this is a direct global attack on value of currency. And you guys, I hope this is well and above and beyond what AMC is related to, but this has a major impact on us on going into the future here. And I really hope you guys see that this is what the next war is going to cause, the next world war to kind of ensue, is when you start threatening bankruptcy of, when you're attacking another country, another country's monetary system, you force them into a corner. And you either are saying you have to either do what we're doing or we're going to bankrupt you, and they don't want to do that. And so this is where you get into this did I say it's yuan? Did I say it wrong, Glenn? Yen? Is it yen? Sorry, I said yuan. Did I say yuan? Yen? Whatever. Who cares? But this is what they're trying to do here, and I think he meant yuan. Yeah. So you get what I'm saying here. Ignore my bad saying the wrong words, but you understand where I'm going with this. And so really what we're kind of pushing towards here is seeing a destabilization of gold as being the gold standard, right? We're trying to move as far away possible from the gold standard to bankrupt them. Sorry, yeah, I know. Lyndall Brown says yen is Japanese case. I know. I don't know why I said yen. I don't know why I said it. But yeah, so you guys, this is important stuff. This is really, really, really super important stuff here. And so what this guy's asking Powell is like, are you afraid of what, the idea of what Russia is doing with their money? Is that how is it going to impact what it is that you're doing with trying to do with like a digital CBDC?
So the U.S. dollar is the widely accepted and really the only serious candidate for the world's principal reserve currency, and that's That's because of our democratic institutions, our liquid markets, the rule of law, and all those kinds of things, and also the fact that the dollar has held its value over time. So other countries who are competing on other playing fields may want to establish different currencies, but really the dollar is the one that's going to be used more broadly in international commerce because we have those aspects and other countries don't.
Well, that's true to now, but my question is, are you concerned about the actions of these countries? Because if they see themselves being challenged or are concerned, for instance, if China would invade Taiwan, as Russia invaded Ukraine, there were some sanctions put on. And I don't disagree with the sanctions. The last time you were here, though, Mr. Chairman, I asked a question because it's an instructive moment for us from the standpoint that knowing that we put sanctions on Russia, all other different accounts, as well as the oligarchs from that country, are we thinking about doing the same thing to China when they invade Taiwan? And your answer at that point was no. We passed a bill out of this committee last week to ask the administration, basically, to start thinking about that in those terms. What kind of situations can you come up with? Are you talking to allies, begin to talk to them, to start putting together a list of how you would go about sanctioning the different individuals, the different accounts, things like that? So have you started thinking about that at all yet?
Well, let me say, the business of sanctions is entirely in the hands of the elected government and the Treasury Department. We are an implementer as it relates to banks. That's it.
Yeah, but we're going to take your advice on different aspects of this, Mr. Chairman.
Sorry?
We're going to take your advice on the different aspects of this.
Well, I mean, honestly, when the sanctions were being put in place, Treasury was doing it. We weren't doing it.
Okay.
Yeah, I mean, that's the way it works.
Next question. There was an article again in one of the political newspapers yesterday, I guess it was, and it talked about the problem that we have here with the Fed's balance sheet. It says it now appears similar to a hedge fund whose long-term assets are financed by short-term borrowing, and the bottom line is that it's going to cost money. The Fed now has a negative income as a result of having to do this. And so it says here that the Fed will simply borrow the money to pay the bills. Is this true? That we're having the Fed's losing money right now as a result of the way you've got these debt borrowings that you've purchased structured?
The place I would start is that the Fed has, we always turn over all of our earnings in every year. We turn them over on an ongoing basis, and we've turned over something like $1.2 trillion in earnings just in the last, decade or so. So we always know that when we raise interest rates,
okay,
you're going to lose money. And
okay,
of course,
but you agree with the point that we have a negative income right now.
That's
and
right.
This makes my point to my next question, or my concern is, the CFPB gets their money to be able. The CFPB gets their money to run their agency from the Fed.
That's right.
So basically, there's no money for the Fed to pay the CFPB's bills if this is the case, unless you continue to borrow, which is basically what's going to happen now. Is you're going to have to borrow money to be able to pay the CFPB's bills. Is that not correct?
No, we don't borrow money. We issue, basically, yes, we don't shut down the Fed when we have negative income.
Okay.
We can pay our bills and we can pay.
So my follow-up question then is, do you do any accountability or assessing of the CFPB's spending of these dollars at all?
No, we don't.
So they just get a blank check. You just told me they just got a blank check. They send you a bill, you send them a check. There's no accountability for them.
No, I think there are limits built into the law, which I don't have in the front of my head.
I have yet to see a limit, Mr. Chairman. I'd love to see what the limits are because I don't think that they've ever agreed that they have that. But I see my time is up. Mr. Chairman, I yield back.
Gentleman's time has expired. We'll now go to Mr. Foster, the ranking member of the Financial Institutions Monetary Policy Subcommittee.
Thank you. And just a quick comment. I think it's a mistake to imagine that you can completely hide from the macroeconomic effects of technology in your scenario planning. We just talked briefly about healthcare costs. Obesity, half of our healthcare costs, and there are treatments in these GLP-1 receptor agonists that look like they're just a home run against obesity. And so these will be near-term impacts which will have macroeconomic effects. So just a comment. I hope you have a certain fraction of futurists in the room when you're talking about your scenario planning, because a lot of that future is like now. Okay, back to economics. So we have this historically low unemployment rate, 3.4%. And historically, this would be considered to drive runaway inflation. Your predecessor, Alan Greenspan, repeatedly referred to dangerously low levels of unemployment. And yet we see inflation is coming down. So what is going on here? How can we have these historically low levels of unemployment without having inflation take off? Is it possible that we simply have less frictional unemployment in our system, due perhaps to the fact that people get their new jobs online and have a job lined up before they quit?
So inflation is coming down, but it's very high is the thing. And some part, I've never said all of it or most of it, but some part of the high inflation that we're experiencing is very likely related to an extremely tight labor market. Wages affect prices and prices affect wages, so I do think that's part of it. More to your point, though, there was a time when there was a tight relationship between inflation and unemployment. In other words, the Phillips curve was steep, and that went away over the period of the Great Moderation. And really, in our thinking, that's because people came to expect 2% inflation, and we had 2% inflation, and then people just stopped focusing on inflation, and it stayed very low. So there was really no relationship, or very, very tiny relationship. We could have very weak economic growth or very strong economic growth, and we wouldn't have inflation respond very much. That was before the pandemic, though.
Okay. Well, I hope you don't overlearn, some of the lessons there. It's one of my worries that there have been a number of exogenous shocks to the system here, and it'll take a while to go through them. And if you want to be careful there. Now, in a related issue, when you say refer to the totality of factors, you're looking at a mixture of leading and lagging indicators when you look at this totality of factors. And my question, if perhaps you might be paying too much attention to the lagging indicators and not enough to the leading indicators. The example that's referenced in your remarks and is in more detail in the report about the difference between using current rental payments versus the amount that you pay for a new rental contract, and difference in how much they lag. Had you paid more attention, for example, to the leading indicators like current rental contracts, then you probably would have picked up inflation earlier. You would have been, not gotten so far behind the curve on that. And secondly, there are policy implications going forward. If you look at current rental prices for new contracts, we're much farther along in fixing inflation, and that you can take your foot off the brake. And so what's your thinking on that, and whether you may perhaps be systematically not paying enough attention to leading indicators versus lagging ones?
So we've had our eyes on the whole housing inflation thing from the very beginning, and right now what I would say is that every forecaster is baking in lower rent increases. That's a big part of why people think inflation is going to come down in 2023. I think the thing with transitory was it more had to do with goods. And it had to do with the thought that these supply-side disruptions would go away much quicker than they would, that the labor market disruptions would go away much quicker than they did. And in hindsight, it just took much longer for those disturbances to go away.
Yeah. So with hindsight, and if you allow yourself to Monday morning quarterback yourself, you probably would have gone up to 4% earlier, and not had such a big problem with inflation. And so, what is your are there structural things you can contemplate, or even after action reviews, to say what would have happened if we would have paid more attention to the leading indicators, or improve the in engineering term, improve the bandwidth of your feedback regulator? This is something, if you want to get the best result, you need a high bandwidth feedback in the system, even when there's averaging on the back end.
So this is something we only think about during waking and sleeping hours, as you can imagine. It's really hard to know what the lessons are. We really thought things would. Nobody had seen the supply chains collapse. No one had seen labor force participation plummet. We didn't know, or unemployment go to 14% and higher than that, really. We didn't know how long it would take to go away. And if we ever see this pitch again, we'll know how to swing at it. But it's been
we'll now recognize
a bunch of firsts. Sorry.
Gentleman's time has expired. The gentleman, his time has expired. We'll now go to the gentlewoman from Missouri, the chair of the Capital Markets Subcommittee, Ms. Wagner, for 5 minutes.
Hi, thank you, Chairman McHenry. And Chair Powell, welcome. Thank you for your service and for being here today. Yesterday, I was pleased to hear you discuss how inflation is severely hurting the working people in America. In your testimony, you also state that strong wage growth is good for workers, but only if it is not eroded by inflation. And that is key. Inflation is a tax, a hidden tax on every American. If the Federal Reserve were to shirk its mandates to stabilize prices, leaving inflation alarmingly high, what would it cost America's hard-working families in Missouri's 2nd Congressional District and beyond?
So I think the costs of failure to restore price stability would be extremely high, and while there will be costs to success, the costs of failure will be much higher. You'd be looking at an extended period where people learn to expect and live with high and volatile inflation, and it's very, very hard to have rising real incomes during such a period. So it'd be a bad thing for the country.
Can you reassure the committee that the Fed remains committed to bringing prices down for our constituents?
Yes, I do.
Thank you.
I hereby assure you.
And changing topics here a bit, as China's economy reopens and about 18% of the world's population resumes its consumption of oil and other key goods, what sort of inflationary impact will we see here in the United States, sir?
So a stronger, a faster reopening of China, which it looks like we may be seeing, it does have the potential to put upward pressure on commodity prices, but it also would mean a faster sort of unraveling of the problems in supply chain. So those would be offsetting effects. I think sitting here today, we don't expect the net effect to be big. For the United States, it might be bigger for other parts of the world, but we think it ought to be moderate overall.
Well, China is one of the world's top oil importers. And do you expect any inflationary effects on global energy markets as China's oil consumption returns to their previous levels?
So I think oil prices could be affected, and I think that's a big concern in Europe, for example. We have our own domestic oil, and we've got a lot of natural gas as well.
We sure do. I wish we were actually harvesting more of that liquid natural gas. Chair Powell, you, Vice Chair Barr, and many others have recently identified that the banking system is well capitalized and strong. Bank capitalization remained robust during the shock of the pandemic and related shutdowns of economic activity. Capitalization of large financial institutions weathered severe stress testing mandated by the Fed. And despite all of that, as also previously mentioned by Chairman McHenry, Vice Chair Barr insists on conducting a review of capital rules. I'm concerned that this review is being conducted in a silo, and that the findings will not be made fully available to the public. Taking such an approach in the context of this holistic capital requirement review would make it impossible to conduct a transparent rulemaking process, denying the public information necessary to consider and to comment. I think this is just simply not appropriate in this situation, and I'm concerned by the lack of clarity, I think is the best word, perhaps at this point, by the Vice Chair. A couple questions. You've served on the Fed board for over 10 years since the financial crisis regulatory framework has been put in place. And over that period, have you seen any real-world evidence that America's banks?
So American banks are strongly capitalized, and I believe Vice Chair Barr has said that as well. But
Yes.
The point is there haven't been any real proposals to evaluate yet, and when there are, that will be done in a highly transparent manner.
I hope so. I'm glad to hear you say in a highly transparent manner. Do you agree that excessively high capital levels constrain banks' lending capacity with spillover effects on jobs and living standards for Americans?
So I think it's always a balance, right? More capital means more safety and soundness and more ability to withstand terribly stressful periods. but it also, it's more expensive. Equity capital is more expensive. U.S. banks have competed incredibly well around the world.
Yes,
with
they have,
high levels of
internationally.
capital. But, so that's a trade-off that you're always going to be making when you think about capital.
Gentlewoman's
My
time
time
has
has
expired.
expired. Yes, thank
We'll
you.
now
Ranking
recognize the gentlewoman from Ohio, the ranking member of the National Security Subcommittee, Ms. Beatty. Ms. Beatty, for 5 minutes.
Thank you, Mr. Chair, and I like that title. To Chairman Powell, thank you for coming and being such a good colleague and friend. I have a couple questions I'm going to try to get through quickly. Chair Powell, in a press conference last month, you stated, quote, "There is a lot of spending coming into the construction pipeline, both private and public, and so that's going to support economic activity," end of quote. How do you think the strong pipeline of funding from what the Democrats put together in passing the Inflation Reduction Act, the Infrastructure Investment Jobs Act, and the CHIPS Science Act will do to have economic activity this year and moving forward?
So I guess I was making the point that there are a lot of sources of demand that we can rely on, even though demand has been relatively increasing at a relatively modest rate. Part of it is.
Will this help in that demand?
Yes. I mean, there is state and local governments I mentioned are about.
So would you say this is a great thing that we've done coming from the left over here?
Not for me to judge the merits of what gets done, but I'm just saying there's.
But it will
demand
contribute.
there that will support economic.
And support
activity.
it.
Yeah.
So I'm going to assume from that that's a positive. Let me go to the second question. Chairman Powell, the Federal Open Markets Committee is projecting that unemployment will increase to 4.6% by the end of the year. And those costs, as we know, won't be borne equally. If we look at the ratio from the last time unemployment was 4.6% and compare it to our numbers now, it would mean that white unemployment would go up to about 0.9, but black unemployment would go up by 2.3%. Does that sound somewhat accurate to you?
Yes.
Can you address the disparity impact with that? And before you answer, let me go to the book, and thank you that was put at our places together. You made in this book with your signature on, it is stated, however, while disparities in unemployment have largely returned to pre-pandemic levels, there still remain significant disparities in absolute levels of employment across groups like African Americans and Hispanics. So can you address that?
I can. So right now, to your point, actually, African-American unemployment is, I think, 5.4%, which is just about as low as it's been since we started tracking it in 1972.
But differential from majority by?
I'm going to say, so that's 5.4, whereas the overall is 3.4, and that includes blacks, so that means for whites is well lower than that. What happens is, so there's a persistent gap between black and white unemployment, and also, when unemployment goes up quickly in a recession, it goes up much faster for African Americans. When the economy grows again, it comes down faster. So that's just that's somehow embedded in our economy. We don't really have the best thing we can do is achieve stable prices so that we can have long expansions. And what happens in those long expansions is that the labor market gets tight, sustainably tight. And we have historic lows in unemployment, including for African Americans.
Let me say thank you, and let me also, again, thank you. As you know, in the 117th, I was the chair of the D&I committee, and let the record state that you always pushed for making sure that you understood and respected that. And in that, this is very minor and certainly personal to me. In this report, maybe those who helped you author it, I would like to see the areas that talks about unemployment not under a title of special topics, but something that draws a little more attention to it as some of the others, just very minor. Last question I have. Can you tell me if the Feds is committed to working with the other agencies like the FDIC and the OCC to finalize a rule soon on CRA? Certainly that's something of great interest to many of my colleagues. So can you give us any updates on it or how the process is going or what we can expect?
Yes, with Governor Brainerd's departure for the White House, I've asked Vice Chair Barr to take the lead in moving it forward. I would characterize it that there's essentially agreement between the three banking agencies on the changes to be made. That's all being written up and vetted, and at a certain point, members of the Board of Governors will be briefed on it. We'll vote on it.
Is there anything we can do to help with that?
No, I think we're hard at work on it, and it's going to take some months, but I think we're nearing we can see the airport, and we'll be landing in a few
Gentlewoman's
moments.
time has expired. The
Thank you.
gentleman from Kentucky, the Chair of the Financial Institutions and Monetary Policy Subcommittee, Mr. Barr, is recognized for 5 minutes.
Thank you, Chairman McHenry and Chairman Powell. Economic data are mixed, as you know. On the one hand, low unemployment, robust hiring, strong consumer spending, and persistent core inflation, and a CPI that's still more than 3 times your 2% target suggests more aggressive tightening is warranted. On the other hand, because the Fed misjudged the inflationary impact of Democrats' overspending, kept interest rates too low for far too long, and failed to end quantitative easing soon enough, the Fed has been forced to raise the Fed funds rate 450 basis points in just 11 months and reduce the M2 money supply at the fastest rate since the 1930s. As a result, wage gains have slowed, credit card debt is at an all-time high, the housing market is in a slump, and the yield curve is inverted. I agree with you that the historical record cautions strongly against prematurely loosening policy. But what would you say to those who caution about the lag effects of monetary policy, the precipitous decline in liquidity? Will the economy have to suffer a recession in order to bring inflation down to 2%?
We are very well aware of the lags with which monetary policy affects economic activity and inflation. Those are long and variable, and I would stress highly uncertain. There is really no agreement on exactly how long they are, but we know that slowing down the pace of rate hikes this year is a way for us to see more of those effects as they come in.
In December, most Fed officials expected to lift rates this year to between 5 and 5.5%. Is that still your estimated terminal rate, or does the data suggest that the terminal rate could be higher than 5.5%?
My colleagues and I will write down new forecasts and release them to the public on March 22, but as I mentioned in my testimony, the data we've seen so far this year suggests that the ultimate level of rates will need to be higher. But we still have some more data to come in between now and the meeting, but as of today, it suggests a higher level than that.
Let's go to Vice Chairman Barr's review of the capital framework. A lot of questions for you on that. When Governors Brainerd, Quarles, Clarida, Bowman, and Waller made up the board under your leadership, major changes in policy were addressed following board consensus and not when there was significant dissent. Will you commit to not implementing a new capital framework following this holistic review or the Basel endgame if there is considerable dissent from the board?
I can't really commit to that. We are a consensus kind of an organization, and that's what we'll work toward. But ultimately, we
Would that be a break from your prior practices? You're a consensus builder, Mr. Chairman. You pride yourself in that, and we credit you for being a consensus-oriented chairman. Will you commit to continuing that practice and not allow major changes to the bank capital regulatory framework to be made by one person?
Well, they can't be made by any one person, but I do commit to that, and I commit to doing everything I possibly can to bring people together in consensus, to have something that can be broadly supported.
Thank you. Earlier this year, you said, and I quote, "We are not and will not be a climate policy maker." However, in the Fed's draft principles on climate-related financial risks, one proposed principle suggested that boards of directors or of a financial institution should consider making changes to its compensation policies to align with values in the context of supposed climate risks. It appears then that the Federal Reserve, through regulation, wants to begin implementing climate policies. So which is it? There seems to be a disconnect between your statements publicly and the rules that the board is putting forward for comment.
Well, I feel strongly that Climate change is an important issue that needs to be addressed by elected people. It's just not something that we've been charged with by Congress, clearly. So we do have a narrow role, and that role will be around making sure that banks understand and can manage the risks that they're running, and that's going to be it. And I, as I said before, we don't want to drift into becoming a climate policymaker, and we'll have to guard that border very carefully.
Regarding the Fed's climate scenario analysis pilot program, did the board vote to approve the creation of that pilot program?
I have to check, but I don't think so. I think it was already authorized.
And this is a concern that I have. I am concerned that one governor acting unilaterally to implement major policy changes without board consensus is a problem. And so I would urge you and your colleagues on the board to continue a consensus-oriented approach, and I yield.
Gentleman's time has expired. We'll now go to the ranking member of the House Intelligence Committee, Mr. Himes of Connecticut, for 5 minutes.
Thank you, Mr. Chairman, and welcome, Chairman Powell. Thank you for your careful conduct of monetary policy, independent of the many political desires that circulate in this building. Independent monetary policy is a bedrock of a solid economy. I want to reflect for a moment on another bedrock of the American economy, the full faith and credit of the United States government, which is now being put at risk by the Republican majority. My Republican friends know how very dangerous a game they are playing. They know that salary payments to our soldiers are at risk. They know that their irresponsibility will raise mortgage rates for new home buyers. But they say this is the only time we focus on spending in the debt, which of course is baloney. It's a pernicious form of baloney. The time to focus on the deficit is when you are voting for the spending and the tax cuts that create the deficit. When you're voting for the Trump tax cuts, which the CBO said would add $2 trillion to the national debt, that's the moment to consider whether you want to do that. Not when the good name of the United States is hanging in the balance. This stuff gets a little complicated, but the American people really need to understand what's happening here. The Congress sits down to a huge 10-course meal of tax cuts and spending and more defense spending and expansion of this program and stimulus, all of which we vote for collectively. First course, second course, white wine, red wine, 4 servings of dessert. And then the bill comes and my Republicans say, whoa, wait a minute, hold on, look at this bill. This is irresponsible. Do we really want to pay this bill? That's not the moment for the consideration. The moment is when you're ordering 4 helpings of dessert. That's when we should be talking about it and taking responsibility for the choices that we make without putting the full faith and credit of the United States at risk. Now here's where the hypocrisy comes in. My Republican friends like to point the finger at this side of the aisle and blame us. But Chairman, as you know, fully 1/4, 25% of today's United States debt was accrued in the 4 years of the Trump administration. This country's been around for 246 years, and fully 1/4 of the United States debt was accrued under President Trump. By the way, speaking of hypocrisy, in the 4 years of President Trump, the debt ceiling was raised or suspended 3 times. I didn't even notice. But now, of course, we have a different president, and so the calculus is different. Now, Mr. Chairman, I don't think I'm going to persuade the majority to act responsibly here. I actually think the markets will persuade them. And you'll recall, because we were watching this closely, September 29th, 2008, the Republican House of Representatives voted down the Great Recession Rescue Package. As the vote was going down in the House of Representatives, the equity market dropped 7%. $1.2 trillion lost in people's retirement accounts. Now, Congress sobered up, and a couple days later, we passed the Rescue Act. So, Mr. Chairman, there is a question here, and the question is this. You and I both watch the markets pretty closely. Treasury tells us that on June 5th, that's just 3 months away, on June 5th, the Treasury runs out of money. So my question to you, Mr. Chairman, I know I'm asking you to be a little speculative here, but what should we watch for? What market signals could indicate that the markets are getting fed up with the manifest irresponsibility around this? Give us some things that we should be looking for.
And I'd love to, but I'm going to limit myself to what other Fed chairs have said about the debt ceiling, which is that it does need to be raised by Congress in the end. There are no rabbits in hats, as I mentioned, and also that no one should assume that we, the Fed, this is the Fed's business, is to protect the economy from various events. And you know, I wouldn't assume, no one should assume, that we have the tools to protect the highly uncertain effects of that kind of an event.
So monetary policy is obviously very concerned with interest rates. If global capital markets begin to decide that we're really serious about hurting ourselves this time, is it possible that we could see interest rates rise more because borrowers of United States debt decide that we're actually a little risky? Is that possible?
I think that and many other things are possible. The thing is, we've never crossed that line, and if we cross that line, we're going to find out, and I think it's highly uncertain.
Okay, so that's possible, and you know I don't like pressing you on these things, but you said this and many other things are possible. You want to elaborate on what might be in the category of many other things?
Rather not, actually.
Okay, I figured. All right, thank you, Mr. Powell. Again, I really thank you for your really responsible conduct of monetary policy, and there's a reason that you are insulated from our political desires, and I very much appreciate that, and yield back.
Gentleman yields back. We'll now recognize the chair of the Small Business Committee, Mr. Roger Williams of Texas.
Thank you, Mr. Chairman. And Chairman, it's good to see you. Always good to have you here. In past congressional testimonies, you've repeatedly stated that you support protecting the state-based system of insurance regulation, which is the most effective and competitive in the world. In my home state of Texas is the world's 7th largest insurance market, proving the success of this system. Now at the International Association for Insurance Supervisors Conference in November, there is the opportunity to have the U.S. state-based aggregation method become formally recognized as comparable or equivalent to the insurance capital standard. We should not be following the European model that has increased regulations and less competition, and we should prioritize a model that encourages deregulation, competition, and less government involvement in pricing. So my question is, Chairman, can you highlight the benefits of the U.S. state-based aggregation method compared to the European model regarding market resiliency and systematic risk? And can you confirm that you will push for aggregation method to be deemed equivalent by the IAIS?
I can say this. I do think that our insurance regulatory system has proved itself appropriate and adequate and gotten the job done for a long time, and we don't need to be copying other countries or other regions' insurance regulatory system. I'm a little rusty on the details of the capital requirements, but that sounds right.
But our bottom line is our side works, the other doesn't. We need to stay where we are.
Our side works.
Yeah, thank you. Also in the past, you stated that banks were well capitalized. We've talked about that today, but now there have been increased conversations about raising capital requirements. Numerous economic studies have found that raising capital requirements for banks will increase borrowing costs for their consumer and commercial customers, and I'm somebody that's owned 50 years. I've never had a day I wasn't out of debt, so I'm concerned about this. And implementing additional regulatory capital requirements will slow economic growth and limit financial institutions' lending ability. So do you believe that raising capital requirements would raise the cost of borrowing and add cost to our economy in Main Street America?
Well, it depends on which banks experience higher capital requirements, and there isn't any proposal to evaluate right now, of course, but it's always a trade-off. You know, higher capital is good in a sense because it keeps banks able to lend during bad times. That's really a good thing. Too much capital, though, probably limits credit availability, so we're trying to strike that balance always.
And this has been touched on a little today, but let me come from a different angle on it. But the Reserve was created to act as a nonpartisan entity that remains separate from party politics. Talked about that. And unfortunately, throughout recent years, the Fed has gotten caught up in politically charged issues like economic inequality, gender and race discrimination, and climate change. Recently, the Federal Reserve Board proposed guidance on managing climate-related risks for large banks, further proving that the Fed is giving in to some political pressure and operating outside its intended purpose and responsibilities. So our country's financial leaders, in my mind, should be focusing on addressing runaway inflation instead of worrying about the financial institutions are doing to monitor climate change. So, and we touched on this a little bit, but how can the Fed ensure that they're not placing undue regulations and guidance on banks by forcing involvement in partisan green politics? And how's the Federal Reserve ensuring they remain separate from political influence?
So I think it's absolutely critical that we do. I mean, our independence is partly founded on the idea that we will stay out of stuff that you have not assigned us to do. And if we're going to wander all over and take on the hot issue of the day, our case for our independence is dramatically weakened. On climate change, I think we do, you mentioned the guidance, and then there are also the stress scenarios, and those are the two things that we've done. We tried to keep those tightly focused on the banks, understanding and being able to manage the risks that they'll run over the longer time periods on climate, and not slide into a broader sort of policy-making role on climate change. And I accept that could be a slippery slope and a moving border. And I just want to say, and I think my colleagues feel the same way on the board, that we're going to guard that border carefully, and we're going to stick to our role and not try to be policymakers the way in many other countries the central bank is out there in the lead with the support of the public doing climate policy. But that's not where we are in the United States, and we're not going to pretend that it is.
I've got some time left, and I'll yield back, but I just want to say, as an auto dealer, I'm looking for the first day of that rate cut. Done with that? So, thank you for being here. We appreciate it.
Gentleman's time has expired. We'll now go to the gentleman from California, Mr. Vargas, for 5 minutes.
Thank you very much, Mr. Chairman, and again, thank you for holding this hearing. Chairman Powell, a pleasure to see you again. I've said it before, and I'll say it again. It's always great to see you, because I always think of the old Republicans, the ones who are very noble, did the right thing, didn't play chicken with the economy, very forthright. And so anyway, I appreciate you being here very much. Like some of my colleagues on the other side, I'd say the same thing about some of them, and I appreciate you. So we heard today that the inflation is Biden's fault. So what is the inflation rate in the European Union today?
It's high.
It's high. Is it 10% possibly?
I think if you're talking about headline, I don't have this figure in my head, but it's very, very high from a headline standpoint. Yeah. And they've had core inflation move up too.
Yeah. So are they following Biden's then policies? Is that what caused the inflation? Because it seems to be Biden's fault.
So I think inflation is everywhere, and it must have to do with a common factor, and that common factor has to be the reopening of the economy after, and the things that were done on COVID. On the other hand, each country has a little bit different case, and I think you have to be careful. We had much more of a demand-oriented issue than they did. Now they have their inflation looks a lot like ours did a year ago.
Right. Yeah, I just had to bring it up because, again, Mr. Sherman brought it up, but it's interesting every time I hear inflation is caused by Biden, I wonder why is it all over the world? I mean, it's not because of the pandemic, of course, or, Europe's at war. I mean, that wouldn't cause it, of course. It'd have to be Biden's policies. That's ridiculous. And I think the voters saw through it last time. So I haven't been here 15 years as my good friend, Mr. Foster. I've only been here 11. But when I first got here, the boogeyman, and I heard it all from my friends on the other side, was Dodd-Frank. Dodd-Frank was going to be the end of banking. And in fact, some of my colleagues would almost scream how horrible this was. And then we got the bankers up here during a real stress test, which was the pandemic. And we asked them, has it been helpful to have Dodd-Frank? And you know what they said? Do you know what they said?
I don't.
Oh, they said it was helpful. In fact, it kept the banks capitalized. It was fascinating. Now, to be fair to them, they did complain about some of the smaller issues, but not Dodd-Frank in general, the bill. Then it seemed that CFPB, that became the next boogeyman. But they're starting to seem to fade on that, and I think the reason for that is the CFPB has actually helped so many people that now a lot of their own constituents now are getting helped by the CFPB, so all of a sudden there's not quite the energy. So now they're attacking ESG. ESG, and they're saying that you and everybody else is somehow conspiring to make sure they don't buy their oil or their coal. Are you conspiring to do that? Are you conspiring?
I don't believe we're conspiring.
No. Now, I heard it was supposed climate risk. Is there risk in the climate change?
Yes.
There is? Could it affect the bank?
Certainly, in the longer run, yes.
Yeah, of course it can. Do you think insurance companies take this into account?
Yes, actually, I believe they do.
They absolutely do.
Who write long duration liabilities, they certainly do.
Of course they do. I mean, they're very concerned with it. Weather is a big deal. I was a vice president of Liberty Mutual in their corporate legal department, and I can tell you weather and the changing of the weather, we used to have what we call catastrophes. And these catastrophes happen every 25, 50, 100 years. Now those 25, 50, and 100-year events happen every 5 years, every 2 years. So of course it is. I mean, it's ridiculous not to take a look at these ESG factors. We have to. And again, I'm glad that you guys are taking a look at it because it's real. I'm glad that the president's taking a look at it. And it's sad that my colleagues on the other side just want to stick their head in the sand and say, no, climate change is supposed climate change. No, the reality is it's real climate change, and it's costing billions and billions of dollars. And if you don't believe it, go ask all those poor people in Florida that had those huge hurricanes come through and wipe them out. So again, I appreciate very much the work that you've done. The only thing I hope is, as you said, if we ever see this pitch again, we'll know how to swing at it. And I hope we don't get the pitch of defaulting, because I'm not sure we'll know how to swing at that one. So thank you again, Mr. Chairman. Thank you for being.
Thank you.
I yield back.
Gentleman's time, gentleman yields back. Gentleman's time has expired. We'll now go to the Chair of the Oversight Subcommittee, the gentleman from Michigan, Mr. Huizinga, for 5 minutes.
Thank you, Mr. Chairman. I'm going to move quickly, and good to see you again, Chair. I caught a little bit of the Senate hearings yesterday, and you had a lot of pressure to keep the sugar high going. And frankly, if the Fed and many of our colleagues had listened to what many of us were saying, we should have been weaned off that artificially low, cheap money that kept the party going, and frankly, we wouldn't be in this position. To reference Chair Greenspan's punch bowl analogy, not only did no one have the courage to remove the punch bowl, you had people cheering on the pouring of another bottle of 151 rum into the punch bowl. And here you got folks wanting to do the exact same thing. Let's spend more. And now here we are. You have an impossible decision to slow the economy or let everyone get crushed by inflation. And we know tightening means a slower economy. Slower economy means fewer jobs. Fewer jobs hit those who can least afford to lose a job. And so in short, the lower rungs of the economic ladder will suffer more than the rest of the ladder. So that's the state of play of where we're at. I have to hit a couple of quick issues here. I wanted to start off by discussing climate, especially given the Fed's announcement in January that it was going to conduct a pilot climate scenario analysis exercise. The Fed, along with the OCC and FDIC, have each issued proposed climate risk management principles for banks that you are attempting to finalize those by the end of the year, and the requirements don't stop at the border. The UK and the EU central banks are moving to require significant ESG disclosure regimes as well. I know the Fed is taking a look at commodities capital charges in the holistic review, but even though the Fed isn't forcing banks to encompass climate analysis in their stress tests, there are many initiatives at the Fed that are going to make it more costly for banks to finance traditional fossil fuel companies. So I want to ask you a very specific question. Will you commit that you will withhold support for a new capital rule that increases capital charges on bank activities in traditional energy companies?
You know, I can't sit here and promise what I will and will not vote for, because I don't know what's going to be in the proposal, but that's not the kind of thing I think we're looking at.
I'm sorry, it's not the kind of thing?
So this isn't about, this is about overall capital levels more than anything else, I think, rather than the specific thing you're talking about.
Okay. We're going to follow up on that because we need to have a real-time conversation about what that is going on there. I want to quickly switch topics and go in a different direction for this next question. I want to ask you about two opinions issued by your legal staff in November of 2019 and December of 2020 to the asset managers Vanguard and BlackRock. Mr. Chairman McHenry, I'd like to submit the two letters for the record.
Without objection.
Thank you. These opinions appear to outline the parameters of both how both Vanguard and BlackRock can operate without being deemed a bank holding company. In addition to the legal restrictions outlined by the bank holding company, these opinions listed out here in quite detail list out commitments that the companies would need to take to avoid being viewed as having, quote, control. These opinions also appear to provide assurances that the Federal Reserve Board staff would not recommend that the board find the asset managers to be bank holding companies. Further, it is unclear whether the board will take any steps beyond a periodic self-certification by the asset managers to monitor compliance with the condition that they, quote, not take any action to control a banking organization. As some asset managers play a larger role and clearly strive to influence policy in companies across the free market, we need to remain vigilant. So, Chair Powell, is the board taking any steps to assess or monitor whether Vanguard and BlackRock are complying with the commitments made in November of 2019 and December of 2020, respectively?
I would have to check and get back to you on that.
Okay.
Familiar with the issue.
I appreciate that, but that says to me that doesn't sound like there's an assessment that's taking place ongoing or scrutiny of that. Is somebody reviewing that, or is someone in charge of reviewing that?
Honestly, that's a very specific, narrow question. I'm quite familiar with the issue.
Well, it's specific and narrow to two companies, but not to an industry. I mean, that's what we need to be driving at. And I guess we need to find out whether there's somebody proactively reviewing these activities and these commitments that the companies have made as well as the Fed has made. So how often do you think they should be reassessed? Annually, monthly, biannually?
This is a very narrow set of questions. I can get you great answers really easily, but I don't have them in my head.
I look forward to those great answers, and I yield
We'll
back.
now go to the gentleman from New Jersey, Mr. Gottheimer, for 5 minutes.
All right, let's do numbers. I haven't even done numbers yet once today, so I feel bad about not having done numbers here just a little bit. So let's get to them. Let's see what we got going on here. I have been actually running the numbers in the background, so I kind of know where we're at here. But let me log into my broker here real quick, and we'll go through these numbers. Actually, I don't have to log into my broker. I already did not too long ago. So I'm going to take you guys over the other screen. I'm not going to be able to see what it is you guys are writing. All those personal thoughts, comments, questions, or concerns until you see the big tramp back up on the screen again. And let's see what we got going on here. Alrighty. First things first. Starting with we're going to start from the get-go here, because I never actually got to do any of the numbers at all. So going into happy hump day, by the way. Going into hump day, we have a tie, four-way tie with the price predictions. Einstein's got 2, Eric's got 2, I've got 2, Apex has 2, and I have a price prediction of 626 to 926. I'm targeting 776 for the combined price. I kind of think AMC is going to close around 598 and Ape's going to close around 178. So far, well, the combined price right now is 764, so it's a little bit lower than my expectations, but I think we're going to see a little bit of a run up here in the later portion of the day, and hopefully I can point out to you where it is that I think that's going to happen at. But let's take a look at what we got going on. What else numbers wise? Short exempt volume for the day is very, very low. Whenever we have really super low volume, we're going to have super low short exempt volume. We have AMC at 244.5 thousand shares, Ape at 86.7 thousand shares. Utilization was 100%, day number 37 for AMC. Ape is at 84.66%, which was a big drive up from, I think it was like 77% yesterday. So we're looking at like a 7%, a little over 7% increase in utilization overnight, and then mainly because that was about 6.8 million shares that were taken on in loans overnight. So let's see, day-over-day price increase yesterday was a decrease of 3.84% for AMC. Ape is 0.57%. Max pain for the day today is $7. I thought we might see it go down to $6.50 from some of the options from yesterday, but it stayed at $7. And then let's take a look at off exchange volume. For AMC, by this time of the day, I would expect to see about, what would it be by this time of the day? I'm so used to just reading the numbers throughout the day. 62, 64, 3, yeah, 62% combined between off exchange and EDGX as it stands right now. AMC's got 61.82% going through off exchange. EDGX is 12.04. Those numbers are extremely high at 73.86%. It's about 11.86% higher than it should be. So a lot of price suppression going through those exchanges. CHX volume is only 0.15% of our total daily percentage of volume. with a 30-day average of 2.14. So it's very, very, very low. It seems to me like they have finally completed, as of yesterday, the failure to delivers that they needed to get in because the CHX volume is dropping like a rock. So my guess is that we'll probably, starting from yesterday's numbers, actually 2 days ago's numbers, will probably see us drop off the threshold list after 5 days from the 6th. So 7, 8, 9, 10. We'll probably drop off by the 13th if we continue to see low volume going through CHX. That would be my guesstimate. Taking a look at Ape, we have off exchange at 54.06%, EDGX at 9.78, grand total in that 63.84%. We have that's about 11.84% higher than it should be. So a lot of price suppression going on Ape as well. CHX volume is non-existent. On GME, CHX volume is 0.09% of the total daily volume with 30-day average of 0.33, so very, very low. Taking a look at institutional ownership. Earlier this morning, it was 133.892 million shares. It is currently at 133.892, no change. We're kind of in that dark period right now between reporting, so we may not see a change on that for a while. Taking a look at options. Highest amount of volume so far for the day today, and I've been taking the numbers for most of the portion of the day today. Most of our volume has been coming in for calls at $6.50 strike, and it actually moved up on puts day over day from $5.50 to $6 for the puts for the strike price. As of right now, though, at a $6.50 strike, an hour ago there was 9.4 thousand contracts in total volume. It's now 11.3. On puts, highest amount of volume as of an hour ago was 9.4 thousand contracts. It's now 12.7. The market is indicating a closing price today somewhere between $6 and $6.50, which is kind of interesting because we're kind of lower than that right now. So I am expecting to see a rise in price before the end of the day on AMC. If we take a look at the combined totals, actually, hold on a second here. I want to before I take you over to the other page here, I want to move over the Ortex data real fast because I normally cover that at least once a day in detail, and we didn't do that yet earlier, so I'm going to move that page over real fast. So let's see what we got going on here. Combined price of AMC and Ape. We did break out a little bit earlier than I would have anticipated of that trend. We did it today instead of tomorrow. Actually, today. We did it yesterday instead of today, is what I meant to say. And then we're kind of finding some support right here on this ascending level of support that you're seeing, this white line here. The total price combined between AMC and Ape is at $7.62. We did trade back down through that zone, that dead zone between the two Fibonacci retracements that I've got in here. So we'll see if we get a bounce off this or if we continue to break down through this. We shall see. I'm going to probably extend... No, I'm just going to leave that where that's at for right now. Taking a look at Ortex. So far for the day today, we've had, well, I should say an hour ago we had 1.18 million shares having been borrowed. It's now a return of 636,000 shares on Ape. Or AMC rather, and that's going to cause our short share interest, the free float, to drop to 24.97. Cost borrow min is at 1.04, average is 256.83, and max is at 293.32. Shares on loan for the day today is decreased day over day by 6.18 million shares. Ortex is estimating that about 2.06 million of that was in short interest that was closed out, leaving us at 183.8 million shares on loan. Let's take a look at what some of these numbers look like day over day on the chart here. Here's our utilization, 37 straight trading days since our last little dip there that we had, that real tiny one. But on loan amount day over day, this is at 6.18 million share drop from 189.98 to 183.8 million shares. And then what you're going to notice here is I'm going to tell you that Ape actually increased by 6.8 million shares, so you got a little bit of a flip-flop going on here. And Ortex estimated short-term interest, the free float dropping as a result from 25.41 down to 25.01. On loan average age per day as a result of this is moving upwards. This after we've been on a decrease ever since February 22nd. This is the first day of upwards momentum on this value where we went from 100.63 to 101.05. If we get another increase on this tomorrow, I'm going to tell you guys that we start our 15-day counter for a significant increase in price incoming. Security lending volume day over day is up from 17.16 million shares to 17.89 million shares. So slight increase there. 40,000, so not a whole lot of activity today. No borrowing going on, only 40,000 shares having been returned. They are just absolutely just stopping all kinds of any kind of movement on Ape whatsoever right now, and it's almost like the banks are just kind of wrapping it up, and they just wanted to just not do anything, it seems like. We have short share interest of the free float at 6.15%. After having seen 40,000 shares having been returned. I will state that earlier this morning when I was documenting, no, I didn't change the number. Earlier this morning when I was looking at it, there was no change to Ortex, so there's really just not been a whole lot of anything happening. No borrows, so obviously CTB max and min and average are all NA. Here's our utilization day over day, heavily increasing because of the 6.8 million shares that they borrowed day over day. And it went from 77.81 to 84.66. Here's that on loan amount increasing, 24.84 to 31.64. Then we've got our short share interest of the free float rising because of that from 5.73 to 6.15. And the on loan average age per day is going to absolutely tank when you see this happening because there's a bunch of brand new loans coming in. Went from 41.26 days on loan to 32.56 average days per loan. Security lending volume obviously increasing from 1.03 million to 12.62 million. Orders by Fidelity customers. I don't expect to see AMC, Ape, or GME on this list here. I'd be very surprised if they are due to the low volume that we're having for the day-to-day. But let's check it out and see where we're at. Not on the list. Not surprising. Trigger price for SSR for the day-to-day on AMC is at $5.41 for AMC. Ape is at 1.8 or 1.584. Shares available to borrow. Looks like since earlier this morning they've only returned shares. So far for the day-to-day they've borrowed about 1 million shares, and fees are currently at 104.6. There are currently 172.9 thousand contracts that are out of the money on the calls versus 5.6 thousand contracts that are in the money. 99.8 thousand contracts are out of the money on the puts versus 99.5 thousand contracts that are in the money. NASDAQ is up 0.25, Dow Jones is down 0.44, and the S&P 500 is down 0.02. We have currently 3,451 decliners to 2,935 advancers. The market is currently declining. Taking a look at Ethereum Classic, it is down 3.13. DXY, or the US dollar, is currently showing up 0.02. WTI, or oil, is currently showing down 1.67. Mortgage-backed securities are down anywhere from 0.04 to 0.07. SPY down 0.03. And let's look at the SPY and see if it's on high volume, low volume. What's going on here? What kind of volume are we at? We are inside that box that I've got written in here, and I think that we may see that breakout to the bottom side here coming. I don't know if it's going to make my time frame here, but we are trading at 398 on the SPY. We are on what appears to be kind of lowish volume, but not trading for the most part sideways right now. So not a whole lot of anything going on right now today. It's a dead market. VIX is up 0.65. VBR is down 0.18. VB is down 0.21. Tesla is down 2.97. Amazon down 0.15. Cinemark is down 0.08. Doge is down 1.19. Bitcoin is down 0.46 at 22K a coin. Actually, it's almost 22.1 a coin. GME is up 0.06, HYMC is up 0.33, Hood is up 1.96, CS is up 0.17, Ape is up 1.17, and AMC is down 2.91. Inflow versus outflow for the day on AMC, there's approximately $150,000 more. Actually, it's $160,000 more outflow than inflow for the day. 9.78 million shares traded so far after 165 minutes worth of trading. Puts us on a pace for 23.11 million shares traded by the end of the day today. In pre-market, I suggested somewhere between 1 and 30 million shares. Looks like we're going to hit that. On a 4-hour time interval, we have more selling pressure than buying pressure with an RSI of 34.92, which is below average. On a 1-hour time interval, there's more selling pressure than buying pressure with an RSI of 27.06, which is signaling oversold. On a 30-minute interval, there's more selling pressure than buying pressure than an RSI of 24.9, signaling oversold. And on a 5-minute interval, more selling pressure than buying pressure than an RSI of 31.9, signaling oversold. Let's see here. Taking a look at Ape, we have approximately, let's just call it $400,000 more inflow than outflow. 5.33 million shares traded so far for the day today after 166 minutes worth of trading, putting us on a pace for 12.52 million shares traded by the end of the day today. I wanted to go 10 to 30 million shares, but seeing from the volume yesterday and what we were getting pre-market this morning, there was no way I was going to be able to say 10 to 30 million. So I said 5 to 25 million shares were in that. I'm glad I went down because the pre-market volume was definitely suggesting that was going to be the case. On a 4-hour time interval, we have more selling pressure than buying pressure with an RSI of 42.38, which is below average. On a 1-hour time interval, we have more selling pressure than buying pressure with an RSI of 50.86, which is average. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 51.85, which is average. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 44.25, which is below average. Actually, slightly below average. Taking a look at Ichimoto, because we haven't, again, this is my first run through on the numbers today since market open, and I usually like to kind of go through these numbers with you. But on the Ichimoto cloud here, we are getting on Ape very, very clear indications of a potential break to the top side starting tomorrow. And of course, we are up 0.85% right now. Conversion and base have actually merged, and we have lagging line just wanting to break out here. A break above $1.82 today would mean some heavy buying pressure, but that's going to be the same. It's going to actually be really close to the same value going into tomorrow. I think we could definitely see Ape starting to run tomorrow, as we are seeing some of the leading indicators of potential turnaround in price here. On a 4-hour chart, same kind of deal here in regards to, like, there's the thinning portion of a red cloud is forming here, and there is some potential to see a price move upwards here. $2.27 is what it would take to get above the cloud for the day today, but that's obviously going to be moving down and becoming more realistic as time moves forward. So we may, whatever is going to happen with Ape, it does seem that it's going to run for a hot few minutes when it does start breaking this cloud, as it's been a pretty extended long cloud here. Taking a look at AMC, oops. On a 1-hour time interval, there is sorry, I lost it. It happens, guys. I just lose it. It's just like sometimes, like, my brain just says, okay, turn it off. Goodbye. It's just like gone. Lagging line is below price line, conversions below base, and price is moving down here. We have a red cloud forming going into tomorrow. I think this is going to be a temporary drive down to try and close as many positions as possible before moving back up again. I don't think that we're going to continue to see this dropping much further than where it's at right now. In fact, I've got a Fibonacci retracement of 583, which is where we're at right now, and I'm expecting to see kind of a bounce off that fib and potentially seeing price starting to head back up into the later hours of the day today, or maybe even going into tomorrow. Conversion line is below base and lagging's below price, so it's not really pointing that out, but a strong buy number for the day today would be about $6.32. But going into tomorrow, it's going to be more around 637. On a 4-hour chart, we've got price having gone through the thinner portion of a green cloud. Going into the early next week, we have red cloud kind of forming, very, very thin red portions of cloud forming. I am expecting to see some price movement upwards on that. We have lagging line below price line, conversion below base, but once we move price above that, it would turn into a strong buy. Unfortunately for the day today, though, we're not going to probably see the 734 that would be needed to get above the cloud and get some heavy buying pressure. We'll probably see this going into AMC is probably going to get a little bit of a late run. We'll probably see a little bit of that beginning upwards momentum going into tomorrow, but the actual big push coming Monday morning, perhaps. So we'll probably go green tomorrow on AMC, and as we all know, the chances of having a green day on a Monday after having had a green day on a Friday is very, very high. The one thing to watch out for, of course, is going to be those options, guys. There's tons of gamma ramp for next week, and they're going to be loading into that, and that the market's going to probably try and collect on that. Don't watch out for those poop holes, man, guys. Don't step in those poop patties, because they are out there to capture your money. So be very, very, very careful going into next week, because I can almost guarantee you that narrative is going to be pressed on you over this weekend. Be careful. Ownership of shares is always more preferred in a squeeze play than options. So just be careful. It's your hard-earned money, guys, and I want to see you be successful. So be careful. I think that's it. That's all I've got for you guys in regards to where price is moving. We're still kind of in this. We haven't really even broken out of this, but we're getting right down. It's very rare for them to hit my trampoline right dead on like they are. We may get that explosive move to the top side here. Let me get rid of the rest of this info. Get the Bollinger Bands back on. Pull up take the Ichimoto off. All right. We'll see. We didn't get the bounce off the 583, 584 range that I was hoping for, but I mean, we're moving down on low volume, so I don't think this is going to last forever. I'm just not sure how many positions they got to close out here before this is going to start heading back up, though. We shall see. I think that's it. That's all I got for you guys. We did get the breakdown initially on Ape, because I was expecting it back here. It's a little bit late, but now it's starting to kind of get some more volume and starting to head back up here. So we may be seeing this turnaround here, maybe coming up real soon. Alrighty. You guys went onto some really weird topics here. I'm like reading through the notes, the chat. I am Yucca Frida says, every YouTuber says that. It's a generic script. It's your hard-earned money. I want you to be successful. Do they? I don't. I guess. I don't know. I guess I haven't heard it. Let me bore you guys back to sleep here. Casey, do you have the fib support at 570? No, I don't. I don't. The next drop point that I have would be where SSR is going to be at 563. So 563 is going to be my my bounce point here, which is going to be SSR. That's what I got. Oh, 541. Never mind. 558 is going to be. I forgot to move my SSR drop points. 541. I didn't move these this morning, and I should have. Let's see. 541 right there. 558 is going to be the next bounce point that I've got below 584. And then let me pull up because I know I didn't change. If I didn't change it on AMC or AMC, then I probably didn't change it on Ape either. Yep. And the number is 1584. And make sure I didn't move the wrong one. One 562. Yeah, okay, good. I moved the right one. Come on, Tramp. Do your bouncy bounce. MCon says the RSI is drowning. Yeah, it should get a pretty good bounce off of this when it does bounce. Casey, you have a weird impact on us when you're talking about things going up and down. Okay. I feel like we already hit it, Tom, because I'm looking at the combined price of AMC and Ape, right? And when I talk about a double bottom, I think you should be looking at the overall price of AMC and Ape, not just the what's the word I'm looking for here? Not just one or the other, because I mean it is the total value, right? It's the total value of both, and so when taking into account here, I thought the double bottom it was in here for at around I guess combined 667 ish or whatever it was right here. And so I've kind of got this level of support line here that we're kind of testing right now. I don't know. Maybe I'm really kind of surprised to see it kind of breaking through this. Let me go back down to one minute. I mean, we're right there on it, and I feel like it should be. I feel like it should be holding support there. So I have a feeling we're going to be getting a hard bounce here pretty soon, but we'll see. Well, I'm just saying, Blarkey, that 563 would be the 563 is the next, or 558. 558 is the next level of support that I see. That's what I've got drawn out for my Fibonacci. What material is the trampoline made out of? Your mama's underwear. I don't know. I don't know what kind of material it's made out of. But it's just general tramp. It's just general tramp. I have no idea. It's just regular trampoline, man. Glenn said Adam Aron's tweet pissed off the shorts. Meep says Ivy almost there. Every time that it's around 100, it jumps like crazy. Check the chart at Market Chameleon. Yeah, 100 or 108 to 110 is I think what we're looking. What are we at right now? I don't usually pull that up, but what are we at right now? Mike says materials used to construct the tramp, loose bra in case he's leopard thongs. Fine Corinthian leather. I don't even know what that is. All right, I'm gonna take a break, guys. Let's see if we can get this. Let's see if we can get this bounce off this trampoline here and break through this box on an upwards push. Maybe they closed enough positions for us to be able to see that the upwards drive now. Your mama's underwear. It's classic, right? Like, I mean, you know, it's your mama jokes. They're always the best. No, that's all right, Mike. I'm good. Is that Yucca? It's got a toolbar next to it. It's got to be Yucca. Yucca's going in there, changing up his name constantly. All right, I'm gonna go to break. Let me make sure I've got all these charts set up just the way I want them to be seen on the page.
We need unemployment to account for these changes?
I missed the word you're saying. Gateway?
Sorry, do you think we need to change the way we think about measuring unemployment to account for these changes?
I didn't catch this. You said, what was the word?
Gig, oh, sorry, gig, gig
workers. Gig
Yeah, so I'm sorry,
I didn't
gig workers.
hear that. That's the word I didn't hear. Okay. No, we clearly need to incorporate gig workers both into the labor force and to whether they're working, and they certainly are working. We try to do that. It's not that we're not trying to do that. We may not be doing it perfectly.
Is there a better way to capture them? Just worried that you don't have, the unemployment numbers may not, given we're still using older measurement ways. Are we updating our measurement?
We absolutely try. We're definitely trying to get those people, self-employed people. They do report in the household survey, I believe. I can get more for you on that, but I'm sure we're not doing a perfect job at it because it's a relatively new thing, but they're supposed to be included.
That'd be great. I'd love to talk to you more about that.
Great.
Thank you. As you're also aware, many of us are having discussions about the long-term fiscal health of our country, and like many, I worry that higher interest rates will put upward pressure. CBO already estimates that annual costs will nearly triple for the U.S. over the next decade. You said to the Senate yesterday that interest payments are not a consideration of the Fed, but higher interest really make payments on the debt unsustainable. And they're
underbanked. Fundamentally, that's lack of trust is part of why they don't use our banking system today. In fact, that's part of the appeal of the digital asset space, is the permissionless nature of it. It seems that a lot of people in the financial services space that have grown up in it, that are leading it today, feel threatened by the prospect of change. And if they've maybe reluctantly concluded that you can't ban crypto, they at least want to keep it account-based so that some third party can actually control the assets, which is a polite way of saying we don't actually trust our citizens to control their money or their assets. We'll let somebody else do it for them because we can control those third parties. And in fact, that's what the regulators do, isn't it?
Isn't what?
They control the third parties. I mean, if you don't comply with the regulatory regime, you don't get to operate a financial services business, right?
That's right.
Yeah. And so at the end of the day, I think a lot of people were concerned by your remarks yesterday. I know I was, by saying that permissionless digital assets pose a systemic risk to the financial system.
Well, what we said in our guidance, I think if you read through the digital guidance, which I did getting ready for this hearing, of course I read it before we put it out the first time, but it's pretty careful to say that we don't want regulation to oppose innovation and thus entrench incumbents and things like that. It's pretty balanced, the language, and I think it essentially goes to the question of protecting the safety and soundness of institutions. And there is one, I think what we say about I'll paraphrase it. What we say about permissionless blockchain is that they have been vehicles for fraud.
Yeah,
Vehicles for
0.24%. So if you follow your own report on fraud, it's a fraction of what it is with the U.S. dollar. So speaking of the dollar, is there any real current threat to the dollar's preeminence as the world's reserve currency?
You say you're asking a question. I didn't.
Yes, sir.
Is there a real threat?
Is there a threat?
I think that our status as the world's reserve currency is not under particularly strong threat right now. I think it's a pretty stable equilibrium. It's not a permanent equilibrium, but there isn't really a serious competitor, and that's not because of any of this. It's because of our democratic institutions and the rule of law, and the fact that the dollar's value is pretty stable.
Okay. So quickly on the repo market, just any insight into that, and then I'll have my last comment here and just leave the last word to you, but particularly curious about the repo market. But I'll close by simply saying I'd ask you to turn off the purchase of mortgage-backed securities. As the chairman of Housing and Insurance, I'm particularly concerned about affordable housing, and the artificial prop for the mortgage-backed securities does raise the cost of capital in that space. So whether you own it or occupy it or rent it, it's going to raise the cost there. But I'd just ask if you'd comment on the safety and soundness of the repo market, if you would.
Of the repo market. As far as I know, the repo market is functioning reasonably well these days. Are you talking about the reverse repo facility? Or
yes.
The reverse repo facility is a different thing. We can continue this.
I'd like to follow up with you later, and my time has expired. I yield.
Thanks.
Gentleman from Illinois, Mr. Casson, is recognized for 5 minutes.
Thank you, Mr. Chair. Always a pleasure to see you, and appreciate your time here today. I want to start with this chart in your monetary policy report, which I think is fascinating. Chart 14 on page 17. This is this history of wage growth and job growth. And for those of you who don't have it in front of you, broadly speaking, from 2000 to 2017, we had more workers than jobs. From 17 until the COVID crisis, it was about the same. And since COVID, we've had more jobs than workers. And there's tons of rich stuff in here that I just enjoyed reading. But broadly speaking, if that was the only thing going on in the economy, I would assume that we had 20 years where it was essentially a buyer's market for labor, and the last year and a half where it's been a seller's market for labor, as you look at that. And if I go through and I look at from 2010 to 2020, CPI was up 20% over the period, and real median wages less than 10%. So for half of the economy, they didn't keep up with wages, even though we think of that as a very low inflationary period. Corporate profits were also up strongly, as you would expect. I'm not saying that with judgment, right? If it's a buyer's market for labor, you would expect the gains from labor productivity to flow to consumers and profits, and that looks like what it did.
Which chart are you looking at?
This is chart 14 on page 17 of the monitor. It's the top right corner there.
Got it. Okay, thanks.
In the last year and a half, median wages are up 5%, which is almost as much as they grew during that 10-year period before. And yes, inflation is still a bit higher than that. But what I'm wondering is, as you look at the economy, is wage growth universally bad in your view, or is wage growth good to the extent that it's keeping up with wages? Because historically, wages didn't keep up. And how do you think through that nuance? Because interest rates are a very blunt tool. And if you agree with me that we're now basically in a seller's market for labor, shouldn't we expect and welcome some wage inflation that goes with that?
So I'd say two things. First, we want wages to go up in ways that are consistent over time with the increase in productivity and inflation, and that makes all the sense in the world. The other thing I would say is that in this instance, what we've seen is inflation eating up these very high nominal wage gains have very largely been eaten up by higher inflation. So it's very important that we restore price stability so that we can start to see real wage gains after inflation across the income spectrum.
Yeah, no, and to be clear, we're all opposed to inflation here, but in that 2010 to 2020 period that we all viewed as a very low inflationary period, wages, the gains from productivity did not flow to labor. Wages did not keep up with inflation. And we didn't think about that as a problem for the Fed to fix because overall inflation was down. So, you know, I mean, this gets sort of theoretical, but let's say that we had 6% wage inflation and 5% CPI. There'd be more money in people's pockets, but would we view that as a inflationary period to clamp down on? You know, because we didn't view the inverse as a problem, if you will.
So our job is to restore price stability and keep price stability. It isn't to keep wages down, and it's certainly not to get involved in trying to establish the appropriate level of labor share of profits, for example. That's not the way we think about it at all. We think about price stability, and when we think about price stability, we think about wages as an important input to that. But we're not targeting a particular level of prices, and we would never say that we don't want wages, real wages, to go up. What we're really charged with is price stability, and to do that, we have to think about wages. But in particular, no one at the Fed would be upset to see the labor share go up, but that's not something that our policies affect. That's set by globalization and the advance of technology and educational and skills and aptitude and all those things. That's what drives, and productivity, that's what drives, labor share.
Yeah, and it's hard to have these conversations in 5 minutes, I realize.
Happy to follow up.
You know, I guess what's hard is that, like, you know, also in that 2010 to 2020 period, median home prices went up by 50%.
Yeah.
We didn't view that as inflationary. You know, 401ks went up a lot. We didn't view that as inflationary because those were asset increases. And so as we have shifted the gains from people who had wealth to people who were dependent on wages, there needs to be some correction, and I leave it there because I'm out of time, but how we think about that.
Gentleman's time has
Thank
expired.
you. Yield back.
We'll now go to the gentleman from Tennessee, Mr. Rose, for 5 minutes.
Thank you for being with us today, Chairman Powell. Chair Powell, I just want to echo at the outset some of the concerns that my colleagues have raised about Vice Chair Michael Barr's, quote, holistic review, unquote, of capital markets, and also about the Fed engaging in climate policy, as well as your decision to put Vice Chair Barr in charge of the Community Reinvestment Act rulemaking. With that said, I'm going to dive right into my questions. Chair Powell, I was pleased to see that the U.S. Coin Task Force released their report on the state of coin a few months ago. The report notes that the Federal Reserve and U.S. Mint will be jointly contracting with a third-party consultant to review the coin supply chain and develop recommendations to improve it. Chairman Powell, could you provide us with an update on what the Fed has learned from its review of the coin circulation issues that occurred during the pandemic?
So we know that the flow of coins, the natural flow of coins in the economy slowed down a lot because people were staying home and that kind of thing, and they may have switched to non-coin-based means of payment. And we feel like the evidence is that that's continued now. People are paying electronically and things like that, and coins are sitting in jars and on people's desks and at home, and they're not circulating back into the banks and thus to the retail stores. And so we're working on that. We're working with the Mint. We're working with all the stakeholders in the coin ecosystem to try to address this problem, and we're well aware of it.
So it seems to me that what we learned from that is that it's probably necessary to have a greater reserve of coins if there is such an interruption in the future, so that commerce is not indeed interrupted. Would you share that broad view?
That sounds right. I'm not an expert. I will say it feels like we need more coins now because more of them are sitting in people's homes and pockets, and they're not flowing back to where retailers in particular need the flow of coins. So that sounds right to me.
On a related note, could you speak about the importance of maintaining cash as a viable payment option, particularly for those that lack or don't have access to traditional financial services?
We think it's absolutely critical because there are people who don't have credit cards. Many people don't have credit cards. They don't have good credit, and they need to be paying in cash. And when stores are not dealing with people who don't have cash, it's a serious problem for those people in the economy. We have it at the Board of Governors, and you see it elsewhere because most payments are now taken care of by credit cards, and it's very efficient, but we need to be looking out for people who use cash.
Thank you. I appreciate that perspective. Picking up on Mr. Lukemeyer's concerns that he expressed earlier, as you know, the Consumer Financial Protection Bureau's funding mechanism is intricately linked to the Federal Reserve System. According to Title 10 of Dodd-Frank, each quarter the CFPB director requests an amount that is reasonably necessary to carry out the Bureau's authorities, and the Federal Reserve must transfer that amount so long as it does not exceed 12% of the Federal Reserve's total operating expenses. For the first 5 years of the existence of CFPB, of course, there was a relaxation there with respect to that 12% cap that allowed $200 million annually to be spent beyond that number so long as it was reported, so long as the reported excess was sent to the President and Congressional appropriators. Chair Powell, during your chairmanship, has the Fed ever rejected a CFPB budget request?
I do not believe so.
And could you tell us what policies and procedures are in place at the Fed to ensure that there is no waste, fraud, or abuse, or that these limits are not otherwise exceeded?
So we have no role in engaging with that. It's really what we share a common inspector general who does work on those issues, but we don't in any way, we don't have any governance of any kind over the CFPB. We're just a source to them.
Thank you. I appreciate that insight. In closing, Chair Powell, yesterday Senator Warren asked you what you would say to the 2 million people who may lose their jobs if the Fed keeps raising interest rates. Frankly, Senator Warren should be asking herself the same question when she voted and advocated for the Democrats' reckless spending packages that caused this inflation that we are seeing today, and is the reason the Fed has had to raise interest rates, in my view. Frankly, I would call on Senator Warren, the President, and the Democratic Party, for that matter, to apologize to the American people for causing this kitchen table crisis across the country. With that, Chairman, I yield back.
Now recognize the gentlewoman from Massachusetts, Ms. Presley, for 5 minutes.
Thank you, Chairman Powell, for joining us today and for your testimony. I'm going to focus my comments and my questions on the high costs that families in my district are seeing because of your interest rate hikes. Now, while the Fed has acknowledged that higher interest rates are not the primary driver for the slowdown in price increases, you continue to raise interest rates, risking not only millions of jobs, but also a recession. Based on projections from the Fed, approximately 2 million people will lose their jobs. So that's 2 million families who will struggle to put food on the table, keep a roof over their heads, and to make ends meet. But the economic hardship does not end there. Mr. Chair, I would like to request unanimous consent to submit a recent paper by the Federal Reserve Bank of Cleveland titled Post-COVID Inflation Dynamics into the record.
Without objection.
Chairman Powell, are you familiar with this publication, yes or no?
No, I'm not.
Okay. Well, let me give you some context. In this paper, the Fed's own economists predict that reaching the 2% inflation goal that you have set will be impossible without causing a recession and spiking the unemployment rate to 7.4%, which translates to millions of working people losing their jobs. Now, Chairman Powell, many economists agree with me when I say that engineering a recession to bring inflation under control is not the right strategy, especially at a time when we are seeing inflation cool in real time, independent of your rate hikes. So on behalf of the people of this country, to prevent a recession, yes or no, Chairman Powell, will you pause future interest rate hikes?
We're not seeking to have a recession, and we don't think we need to have a recession to get price stability back.
Will you pause interest rate hikes, yes or no?
I don't do yes or no on will I pause interest rate hikes. Yeah, that's a serious question, and I can't tell you because I don't know all the facts. That's not a
Reclaiming my time. And in fact, it is a very serious question because it has a very serious implications. The people who will bear the brunt of an economic recession are our most vulnerable. We know from past experiences that recessions have catastrophic and deeply inequitable consequences. In fact, while some will catch a cold, others will catch pneumonia. But you know that. An economic cold or pneumonia In fact, in your opening statement, you said, "We will stay the course until the job is done." To conclude, we understand that our actions affect communities, families, and businesses across the country. Could you elaborate, what is this effect to communities, families, and businesses, these interest rate hikes?
Well, right now we're trying to bring down inflation on behalf of all those families. I think high inflation is hurting particularly working families all around the country very badly. And as you know, if you're on a very limited budget and you don't have a lot of excess earnings, when prices start going up, you're in trouble right away. People, middle and upper middle class people have more resources. So we think it's absolutely critical for the working people of this country that we get inflation back under control. And also, while we're at it, we have a dual mandate.
Apologies, Mr. Chair, I'm just reclaiming my time here. Here's the thing. The most devastating impacts will be to our most vulnerable. Veterans to our most vulnerable. Veterans, the elderly, low-income workers, Black and brown workers, those who have often ignored and been neglected in the name of what you refer to as appropriate monetary policy. And yet, you assert that you will stay the course. It's unconscionable, and our most vulnerable workers and families cannot afford to wait for you to realize the harm that you were doing. In my opinion, this sounds more like the assertions of a greedy corporation than someone who has a public mission on behalf of the people of this country. One more question with my remaining time here. Chairman Powell, another consequence of your interest rate hikes has been the increase of the average 30-year fixed mortgage rate to 6.6%, double of what it was 2 years ago. Do you see this widening inequity in the housing market as a problem? And what steps will you take to make housing more affordable? This is putting home ownership further and further out of reach for my constituents, new parents, millennials, people of color, contributing to inequities and the racial wealth gap. So what are your thoughts on that?
Well, our policies do
Gentlemen,
affect.
Gentlelady's time's expired. Chairs can submit for the record or answer.
I'll briefly say that if I can, that interest rate policies affect interest-sensitive spending very directly. When we cut rates, they help housing. When we raise rates, you see the effect on housing. So
thank you.
The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being with us today. We currently have $32 trillion in debt. Our debt-to-GDP ratio is 120%. The highest it's ever been. And yes, we have a debt ceiling fight brewing for this summer. I would argue it's an opportunity to get our fiscal house in order. But sadly, there's no meaningful bipartisan effort to responsibly address our debt. Both sides have even preemptively started political attacks, alleging either side wants to cut Social Security and health care. But politics and talking points will not fix our problem. Our debt is the greatest national security threat. Social Security will be insolvent in 2033, and our healthcare system is fundamentally broken. We spend twice as much as the average country per person, and our obesity rate is 3 times the average. I want to be clear, though, I'm not advocating cuts to Social Security, but my Social Security will have to be different than my father's, and we must change the incentive structures of our healthcare system. Briefly, let's go over some history. Social Security was created in 1937. The retirement age then was 65, and average life expectancy was 60. Easy to see how that math works. In 1960, Congress raised the retirement age to 67. It has not been increased since then. That year, life expectancy was 69. That math still works due to a growing population, but it's getting narrower. I will throw in another few statistics for that year, 1960. 14% of Americans were obese, and our debt-to-GDP ratio was 53%. Let's fast forward to this year. Our retirement age is still 67, but our life expectancy is 77. That math clearly does not work, nor is the program functioning in the purpose for which it was designed. And shockingly, our obesity rate is 37%, and we spend $13,000 per person on health care compared to the global average of $6,000 per person and 13% obesity rate. Clearly, our healthcare system is failing. Our system focuses on managing sickness where we should be facilitating health and wellness. We will only meaningfully be able to address the debt ceiling by focusing on the biggest drivers of our debt. Responsible policymakers should be focused on saving Social Security by reforming it and transforming our healthcare system to facilitate a healthy citizenry capable of working and being contributing members of society. The American people deserve more than the political nonsense. 5 years ago, the #1 issue I ran on was debt. It has been and continues to be our greatest national security risk. I hate to say it, but the last 4 years has gotten way worse. Congress has spent $7 trillion, of which $5 trillion was done mostly on party lines. The Democrat majority has not only spent money we don't have over the last 4 years, but their fiscal policy has caused out-of-control inflation, which caused you to raise interest rates. Last year, I asked you if you ever took into consideration the impact of interest rate increases on the cost of our debt service. You appropriately and adamantly said no. Our debt service cost the next 10 years will be over $10 trillion. I'm going to point out two things. Number one, that is more than all of our debt service since 1940 combined, the last 80 years. And while you did not take interest rate increases impact on our debt service into your decision-making, the best estimate is that those rate increases will increase our debt service cost by $2 trillion in the next 10 years. So basically, the $7 trillion that the Democrats spent in the last 4 years is going to cost us an additional $2 trillion. And that's not factoring in future rate increases as you continue to appropriately try to get inflation under control. As you can tell, this is a huge problem. The $7 trillion in unnecessary spending in the last 4 years has caused inflation. Some of my colleagues across the aisle disagree with that causal relationship. Clinton's Treasury Secretary and Obama's Director of National Economic Council, Larry Summers, wrote an op-ed before they spent the money and said it was going to cause inflation. And he has gone on the I was right tour for the last couple years. We need responsible policymakers to address our debt. Let's talk about what's not serious, and that's minting a $1 trillion coin. Many of my colleagues across the aisle have advocated for this. Luckily, both President Biden and Secretary Yellen have said that this is not a serious proposal, and they have no plans of considering it. Unfortunately, the Biden administration has a bit of a history of doing a 180 when the political winds blow. Most recently, he said he would veto the D.C. crime bill, and now he's adamantly supporting it and plans to sign it. So, Chair Powell, my only question of you is if Biden and Yellen send you a $1 trillion coin, will you accept it?
What I will say to that is that this only winds up one way, and that is with Congress raising the debt ceiling.
So you will not accept a $1 trillion coin and treat it as $1 trillion if it's sent to you?
I'll add there are no rabbits to be pulled out of hats here. This only ends with Congress.
I know you don't like yes or no's, but if you are sent a $1 trillion coin and asked to treat it as $1 trillion, will you treat it as $1 trillion?
That would be a rabbit coming out of a hat.
I'll take that as a no. Thank you. Mr. Chairman, I yield back.
Now recognize the gentlewoman from Michigan, Ms. Tlaib, for 5 minutes.
Thank you so much, Mr. Chairman. Thank you, Chair Powell, for being here. You have a lot of projections, economic projections, various data, various reports that are coming out. How much, and you've studied inflation, right? I mean, obviously, it's your #1 priority right now. How much is inflation impacted by these three things? Corporate profiteering, egregious executive pay, and the use of stock buybacks.
So I don't have numbers, but I would say in the case of executive pay and in the case of share repurchases, I can't think of how it would affect inflation. In the case of executive pay, that would be very small in terms of the broader economy. In terms of profits, though, the way I think about that is profits are high. The places where profits are really high is places where there are shortages and supply chain issues. And as those things get better, as they are, you're going to see inflation come down and even prices come down, and you'll see corporate margins come down there. And that'll be part of how inflation comes down.
So does that corporate profiteering does impact inflation? You don't have any stats of percentage-wise how much of it? Yeah. Because you seem, I really paid attention to your testimony in the Senate hearing yesterday, and there was a lot of conversation about, my neighbors and residents' wages and so forth. They're finally starting to see a little bit more closer to possibly getting fair wages. It's not even far enough, but I don't know if the Feds is paying closer attention to monopolies,
corporate profiteering and executive egregious pay. All of it, even the stock buybacks, you're saying all of that aside, you're focused more on wages and increasing the interest rate than on those other
Our focus
major-
is really on price stability, not so much wages. Wages play into that because they're an important cost for business, but they're not. We're not trying to achieve a particular level of wages. We're trying to achieve 2% inflation.
Yeah, and I think it's really important, Chairman, what we saw during the pandemic is, the wealthy and the corporations continued to profit in large scale and still do buybacks and still do really egregious executive pay and benefits and so forth for those at the top. And then, of course, the communities and such were impacted by it. But what I hear consistently is folks thinking that's the reason. All of a sudden wages are skyrocketing, all this. But all I see is continuation, again, of those that are already getting a huge benefit, the folks at the top, the executives and so forth. My friend Glenn taught me this today, that the feds are actually sitting on, something in Dodd-Frank, Section 956. You all are sitting on the last 12 years on guidance regarding executive compensation and the high risks of it. Like around, there was some sort of proposal done, not implemented. Again, it's been 12 years. Why is that something that you're not concerned about regarding inflation?
Well,
like you guys are sitting, one, you're sitting on it, right? Why?
Well,
it's been 12 years. And then two, why is that you're saying that's not big deal? That's not going to impact the cost of products and so forth for our residents.
It's a multi-agency rule, and there have been repeated attempts to get 5 or 6 or 7, however many it is, agencies to agree. That's one thing.
On disclosures?
No, this is on, it's on policies to.
Yeah, which include disclosures and arrangements regarding executive pay and the risk of it.
There. Anyway, 956 is, you're right, we haven't been able to get agreement among the agencies. But more to the point, there boards long since, this is just for the big banks where we have this authority, long since board of directors are very focused on how executive compensation works and that it not reward, unnecessarily risky behavior and that kinds of things.
Yeah, but in Dodd-Frank, which Congress passed, there should, you're supposed to put something in place, and it's not in place. And look, I'm saying this because so many people in this chamber, and I feel like the feds are more obsessed with wages than they are in regards to the monopolies, the corporate profiteering. There hasn't been any, really, I don't think there is a laser focus on that, and it's really, because I think the feds and Congress can support fair wages and still combat inflation if you are fair in combating egregious executive pay, monopolies, and corporate profiteering.
We don't do competition policy, and we also don't, broadly speaking, regulate corporate wages.
But 956 would have addressed it. 956 addresses it. You should have it's 12 years.
The gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you, Mr. Powell. Appreciate you coming in. I don't have to tell you the fact that so goes the economy. I'm from a state that, from South Carolina, we have people moving in, the population's increasing. And I can tell you housing, not just single-family housing, is in trouble. People are finishing what's in the pipeline. It's now affected multifamily apartments, the high rents that they did get with inflation. That's entirely caused, for the most part, by the policies of this administration with gas, buying it from other countries, with supply chain shortages. There's no reason to start a project when you can't get supplies. And that's what we're facing in the housing industry at all levels. So any increase in interest is just another dagger that's going to kill the housing industry, along with commercial projects that, again, the pipeline's filling up, but the pipeline, once it leaves, you're not going to have any. And I'm from a state that's with people moving in. One of the things that you hear, I think Mr. Davidson mentioned, was regulations. Banks are complaining about being overregulated and the costs associated with it. CRA, I know when Brainerd left, it's in a state of flux. Who's determining that, and when will you have some guidelines out?
That'll be done by the whole Board of Governors when we vote on it, and also by the OCC and the FDIC.
Will they have any input from those who are having to pay the price of implementing CRA? Like, get any input from banks that are having to,
Yes.
having to navigate?
So I know that throughout the multi-year process, there's been a tremendous amount of interaction with banks, tremendous amount, and bank lobby groups and also consumer groups. And then, but yeah, there's been a ton of input and, working with the industry to try to achieve these statutory goals efficiently. I won't say it's perfect, but there's certainly been a lot of interaction.
So they're getting input prior to implementing the requirements for CRA or the guidelines for CRA?
Yes, I think I'm I'm pretty sure there's been quite a bit of interaction with the industry in terms of what to do and how to do it.
Okay. Now, I think you've stated that you don't feel it's the Federal Reserve's policy to get into implementing climate change.
We're not, and we shouldn't be climate policymakers. We do have a small role, focused role to play, principally with the larger banks, to make sure they understand and can manage their climate risks in the long run.
Should it be mandated?
Should what be mandated?
Climate change policies be mandated by the Federal Reserve?
I think, again, climate change is something that's going to affect businesses and people and regions and states and whole countries, and I think that's got to be a job for elected people by and large. I think what we're going to affect is we just want to make sure that banks understand and can manage the risks that they're running, and these are principally longer-term risks.
What's concerning to those of us in the business community who have to borrow for banks, the Federal Reserve is conducting a pilot climate scenario analysis that's being mandated, not asked, it's being mandated for the six largest banks to participate in. That seems to me like a pretty good, when you have to do a scenario and mandate that they do this, is that not the Federal Reserve getting directly involved in mandating?
I think the banks actually want this. They want these six big banks, they have to face this globally, and what they want is uniform approaches and guidance on how to have one set of rules. They're already running, the big six banks that we're talking to, they're already running climate scenarios all the time, multiple climate scenarios.
Most of the banks are well capitalized now. That could change. And this is just another expense that is out there. On the CFPB, the history, I think you said it was 12%. It cannot go above 12% ratio. Has that, that does not seem logical to me. Has it ever been below the 12% from your perspective?
That's someone here quoted the law, and that rang a bell for me. So that is what the law says. Have they been below? I'd have to go back. I'm happy to provide. It's all.
If you could, because it seems to me like that's if you've got that cap, businesses couldn't operate like that because it would be no incentive to reduce the price as long as it's automated.
That's the way the law is set up.
Right.
Man, that is one piss poor trampoline. Geez. Whoever asked what it was made out of. That is a really poor trampoline. It is time to take a look at our numbers here, guys, and I want to see what happened because the trend here was a descending parallel channel, and we continued into a more even decreasing parallel channel, what appears to be a parallel channel down than what we had before. In fact, let me get rid of some of this data here. This is way off. Let's pull this up real quick here and see what this looks like. I want to see if this is an even further decreasing parallel channel that they've got us on here. Let's just see. I'm not even sure where to draw this out at. It's not even that. I mean, it almost looks like maybe kind of sort of, but you can see that the angle of attack on the downwards trend here is way out. It tore right through the middle of that. It's like all those YouTube videos or TikTok videos you ever see with parents jumping on the trampoline. They break right through it. Jeez, ripped right through that thing. Let's see what happened with the market here. Before I go into numbers, I just want to look real quickly at the SPY, kind of see what happened. Starting at about let's see here, it was 11:52. We did have a little bit of a market correction. I wouldn't even call it that because really it's only a couple points. It's only like 2 or 3 points here, so it's just kind of a trend down. Starting at what was it, 11:52ish. Let's go back to AMC. That downwards breakout trend occurred really right around right here at 12:07. So it's probably just a little like 15 minutes after that downwards trend in the market, and you can see that this is probably the start of it right here at 11:57. So a few minutes after the market started tanking, AMC started taking that additional trend down. So is the market down right now? Let's see, what is it? Yeah, it's down 0.23%. I don't know. Kind of interesting. Well, it's not as bad as it looks. I know this looks really, really terrible right here, but 572 is only 4.91% down for the day today. I had us closing at 598, so it's really not that far off from where I kind of was projecting. I was seeing a little bit of a downwards trend, but not this much. But it almost looks worse than it really is, as we haven't even hit SSR for the day yet here. I'm gonna just keep this up here. I'm gonna hold this up. We'll see if this doesn't break out of this more steeper decline. But volume, what's happening with volume? We did get a little bit of additional volume increasing when price started making that additional run down here at about 12:20. So when price is falling and volume starts rising, that's not a good thing because that is indicative of a real sell-off. So it's more than likely, I would have to guess that it's probably institutional selling. But let's take a look at our numbers and see what we can't see what's going on here. See if our off exchange volume is still really high or what's happening. Let's see here. I need some water. I need more water. I'm dehydrated. Let's take a look at what we got happening here. I'm going to take you guys over to the other page. I'm not going to be able to see what it is you guys are writing, so hold those personal thoughts, comments, questions, or concerns until after I get through with these numbers and you see the big tramp back up on the screen again. Let me move a couple pages around here. Two-factor authentication. If you don't have it, you may want to get it, as it could prevent somebody from getting into your account that shouldn't be there. If you have the ability to set up a secondary device in order to receive your codes for that, that'd be best. And I'm also asking people not to post control numbers of their votes, their proxy votes, in case somebody could get a hold of that number and change your vote. So be careful with submitting pictures. If you're proud of voting, that's great. And speaking of voting, I actually just submitted a tweet just a little bit ago, eliciting Charles Payne's help in highlighting the idea or the fact that Canadians are having a difficult time voting. And so I'm hoping maybe he'll pick that up as a story. And then, yeah, so, but yeah, take pictures all you want of your votes and post them if you want to social media, but just make sure you don't put in control numbers in there. The other thing that I'm asking people to do is take pictures of their portfolio daily and basically just kind of making sure that you know what it is that you hold on to, in case your broker just tells you have something different, you've got record of and proof of what you hold. All right, let's take a look at these numbers. Starting with off exchange, by this time of the day, I would expect to see about 63%. Let's see, 63, 64. Yeah, 63% going through off exchange and EDGX combined. On AMC, we've got 61.03%, and EDGX is 12.35, and that's 73.38%. So we're looking at like 10.38% higher than it should be by this time of the day. So we're definitely getting price suppression through those exchanges. CHX volume is only 0.28% of the total daily volume, with a 30-day average of 2.14. So there's not a whole lot actually going through there, especially on low volume. On Ape, we have approximately 52.27% going through off exchange. EDGX is at 9.74. Combined total 62.01%. That's about 1% lower than it should be. So not a whole lot of price discovery happening on being covered up on Ape. CHX pretty non-existent on Ape. And GME has CHX volume of 0.07% of their total daily volume with a 30-day average of 0.33. So that's kind of low. Taking a look at Ortex. As of an hour ago on Ortex, there was approximately 636,000 shares having been returned for the day today. It's now 1.39 million shares. That's going to lower, additionally, the estimated short-term interest of the free float to 24.92%. Cost per borrow minutes at 1.04, average is 255.57, and max is 293.32. Shares on loan for the day-to-day decreased day over day by 6.18 million shares to 183.8 million shares on loan. Ortex is estimating that about 2.06 million of that was in short interest closed out day over day. Taking a look at Ape. Volume for the day-to-day in returns, well, it was 40,000 shares an hour ago at 79.5 thousand shares now. We'll just call it 79. It's not really going to do much to the short-term interest of the free float, which is at 6.15%. There's been no borrowing of any shares on Ape at all today, so we have no CTB report. Shares on loan for the day-to-day is up 6.8 million shares day over day, putting our shares on loan at 31.64 million on Ape. Options. Highest amount of volume an hour ago was for calls was at a $6.50 strike with 11.3 thousand contracts. There's now 16.3 thousand contracts. On puts, highest amount of volume is at a $6 strike. As of an hour ago, there was 12.7 thousand contracts. There's now 21,000 contracts. Market's still suggesting a closing price between $6 and $6.50 before the day's over. So it is suggesting there might be a late run up in the day here. We'll see if that happens or not. But combined price of AMC and Ape is currently at $7.49. It did break the level of support that I had on the 1 minute here. It did try to retest that level of support and then immediately drop down out of that. The next level I see here combined between AMC and Ape is going to be at a $7.35 price point. That is kind of breaking that trend of a double bottom, I think. Let me scroll back out to a 30-minute interval, but where I created it originally. But I think that is kind of breaking that level of support that we had on that double bottom, that rising double bottom. Yeah. I think just kind of looking at this chart right here, I see a lot of historical support at about 744, maybe 738, which is 735 is where the next Fibonacci retracement is. So we should see some kind of support being tallied there. Gonna try and get this back to the way it was. Yeah, I mean there's support at 735. If this is going to continue to move down, we may see a bouncing movement off of 735. But we're at 749 right now, combined. Orders by Fidelity customers, I can guarantee you AMC, Ape, and GME are not going to be on this list here. But we have really low volume, which we'll talk about here in just a second. But I'm going to go ahead and refresh this and see just in case. Yep, not on the list. SSR triggers for the day-to-day for AMC at $5.41, Ape at 1.584. Shares available to borrow is still 950,000 shares. No change in the last hour. couple hours actually, since 12:16 Eastern Standard Time. We have fees at 106.5% and rising. NASDAQ is down 0.04. Dow Jones is down 0.62. The S&P 500 is down 0.26. We have 3,860 decliners to 2,610 advancers. The market is declining over advancing. Ethereum Classic is down 3.66. AMC does tend to follow Ethereum Classic, and you're seeing that downwards trend. So it looks like that's where we're kind of following along with it. DXY, or the US dollar, is currently showing up 0.04. WTI, or oil, is down 0.61. Mortgage-backed securities are down anywhere from 0.16 to 0.17. SPY is down 0.26. And let's check out the volume on the SPY, see what that's looking like. 43.59 million shares traded. It's actually kind of high volume right now with price moving down. That volume should finish probably around at least 80 million shares, I would imagine, by the end of the day today, which is going to be increasing volume. Well, actually, yesterday was 108 million shares, but it's going to be increasing volume from what we saw 2 days ago when we started this downwards trend in price, with only how many shares we have, that 72 million shares traded that day. So volume is starting to kind of pick up a little bit here with price moving down. VIX is up 0.65, VBR is down 0.48, VB is down 0.47, Tesla is down 3.76, Amazon is down 0.63, Cinemark is up 0.04, Doge is down 2.0 or 2.11, Bitcoin is down 0.97 at 21.9 K a coin, GME is down 0.42, HYMC is down 1.19, HOOD is up 1.91, Credit Suisse is down 0.17, Ape is up 0.85, and AMC is down 5.24. Inflow versus outflow for the day-to-day on AMC is roughly almost identical. It's about 250,000, 224,000 dollars less. What am I trying to say here? More inflow than outflow by $240,000 ish. Let's see here. Volume is 13.71 million shares for the day today on AMC after 237 minutes worth of trading, putting us on a pace for 22.56 million shares traded by the end of the day today. That is very low volume. I suggested in pre-market somewhere between 10 and 30 million. It looks like we're going to hit that. On a 4-hour time interval, there is more selling pressure than buying pressure with an RSI of 31.75, which is below average, almost signaling oversold. On a 1-hour time interval, there's more selling pressure than the buying pressure with an RSI of 21.75, which is signaling oversold. On a 30-minute interval, more selling pressure than the buying pressure with an RSI of 17.94, signaling oversold. And on a 5-minute interval, there's more selling pressure than the buying pressure with an RSI of 24.84, which is signaling oversold. So we're getting, ever since the push down of the descending parallel channel is right about where the RSI dropped to between or to the under or oversold territory. So it's almost exactly where it broke out at. Kind of interesting. Taking a look at Ape, there's approximately $400,000 more inflow than outflow. 6.38 million shares traded so far for the day today after 238 minutes worth of trading. That puts us on a pace for 10.45 million shares traded by the end of the day today. In pre-market, I didn't want to go more than 5 to 25 million because I was afraid we would drop under 10 million today in Ape shares being moved. On a 4-hour time interval, there is more selling pressure than buying pressure with an RSI of 41.77, which is below average. On a 1-hour time interval, there is equal amounts of buying and selling pressure with an RSI of 50.84, which is average. On a 30-minute interval, there's more buying pressure than selling pressure with an RSI of 51.51, which is average. And on a 5-minute interval, there's more buying pressure than selling pressure with an RSI of 46.79, which is slightly below average. Get these Bollinger Bands back up. I'm going to delete this here. Leave the tramp on there. The tramp that ripped right through. My goodness, it's so bad. I picked the right spot, but it didn't get the bounce. And let me make sure Ape is set up right. All right, cool. I can see what it is you guys are writing again. Tar Baby says AMC 8. I can't even say that. Correlation. Interesting. Is there a ETH? Sorry, it took me a second to figure out when you put ETH in there. I was trying to read it as it was as ETH. I was going like ETH. Yeah, Ethereum. So correlation. Interesting. Is there a margic logic reason for it, or is it just a coincidence? I am going to Tar Baby. I'm going to keep my nose out of. I think there's a saying in cryptocurrency, not what is it? It's something about not my keys, not my problem. And I'm going to probably stay as far away as I possibly can from that topic matter. I don't know what kind of correlation there may be, but it seems to be pretty strong. And that's probably not how that saying goes. The saying is I probably jacked it way up. It's probably something entirely different. Not my. It's probably something that rhymes with keys. Not my keys, not my something else. But yeah, you know what I meant. Buzzin' Buzzman says, listening at work, dude. Thanks for the tramp, but geez, its max user weight definitely exceeded. You know, it's been a long. I don't really draw the tramps like I used to, Buzzin', and the joke in the past is that the price would always avoid my trampolines, right? Like you'd always see the price move around the trampoline, and then this is a very strong rarity to see a price just rip right through it. Like the max weight was exceeded, like you say. Yeah, I don't know, man. It's a rarity. Maybe I need to practice my tramp drawing. I need to practice my tramps. Tech We Love says we've been undersold under 30 RSI for nearly 2.5 hours. They can't keep a good dog down forever. Aaron says, in terms of markets, there is no such thing as a coincidence. Fury, I don't know. MCon says, are we being attacked hard today? I don't think so. I mean, we've seen attacks way harder than this. Right now, we're only down 5%. We've seen drops, 10% drops that are much quicker in terms of how fast that price drops. So it doesn't. To me, it just part of the problem here is that we've got such low volume over the day, right? So whenever we see this really low volume and we see price moving down like this painfully slow, it kind of generates this idea of like, this is a hard attack, but it's really not a hard attack at all. It's really kind of a soft attack. We're down 5% on 13.96 million in volume. So in the grand scheme of things here, I don't think this is a very hard attack. I wish I could expand on it more, Tar Baby. It's just that I don't want. it's a rabbit hole that I don't want to go down for various reasons. I'll just say that if you want to look and do a cross comparison, and I can show you, I can put them side by side so you can see what they look like in regards to timing. Actually, let me make a new page for this here. So we'll do. I think I can look up Ethereum Classic on here. ETC USD should be. Yeah, Coinbase. Do I have Let me see here. Let me before I put this in, let me make sure that because it is Classic. That's the one. Yeah. Okay, that's right. ETC USD. So yeah, let me show you just because I mean I don't mind showing you the correlation, but I just don't want to price scale. I don't want to talk about why that correlation may be there. So on this page, what you're seeing right now is you're seeing AMC's price since June's run up of 2021. And then I'm going to draw down Ethereum Classic's price from that same time frame. And you'll see that there's some very strong parallels to price movement as I draw this, as I kind of overlap these, I guess. You can see that. So as it stands right now, you can see Ethereum's been trending downwards. The one thing about this is that Ethereum always seems to have like a leading indicator. So in other words, like you can see the run up on Ethereum Classic prior to the run up on AMC. There you can see the run up on Ethereum Classic here and here. Can I draw on this? I can draw on this. So here's your connecting points on price movements. So you have this one here, this one here. This all looks the same right in here. This whole drop right here is all timed almost perfectly. The drop even started a few days in advance. This run up right here started and ended right about the time the AMC's price run up started and ended. This part right here is a little different, right? This is not quite the same right there. This isn't quite entirely the same rate in here, but you can see that the run up and the run up was a little bit leading on Ethereum Classic, and the rundown was early on AMC but late on Ethereum Classic. But they do run down together, and now you see Ethereum Classic making a little jog down here again, a couple days in advance before us, and we're moving down behind it, trailing it just slightly. So I think that's probably the best I can. Son of a gun! I didn't realize I had it on the wrong page. My bad. Sorry. I really need to be better about that. Let's see, can I get rid of these? Yeah, anyways, I mean, it should be pretty obvious. I don't really have to, I shouldn't really need to even kind of like do anything other than, come on, just kind of draw this up and down to kind of display or show you how price movement is very similar to what we experience. So there's a few spots in here that are a little different, but not too much. So I don't want to say why, but strikingly similar. Lisa says, so if all the crypto, including Ethereum, gets banned, what does this mean to AMC? And that's, Lisa, the part that I don't want to talk about. That's exactly where I don't want to go. I don't want to go there. I'm purposefully avoiding that conversation for a very good reason. And that's all I'll say. Blarkey says, Casey, I'm going to a rodeo later today. Nice. Enjoy. Don't get bucked. Tech M12 says, how the hell can they tie these two together? I'll just say 3 letters. I'll say 3 letters and then let you do your own digging and searching and trying to figure out what's maybe going on. But FTX. No random order on no specific order in those letters. Just 3 random letters. FTX. If those have any meaning to you whatsoever, then I don't know. I just kind of made them up. I just picked 3 letters. We are at 5:69. Should we finish? Shall we finish listening to the? We'll do like another 10 minutes of the 20 minutes. 20 minutes of the good old Powell's bells here, and no, it's not that, Tech. It's way more Tech. This is gonna take more than a guessing game, like a 5-minute guessing game for you to figure out, man. You're going to have to get lost in so many different rabbit holes and understanding and trying to learn the correlation to what all this means and why it's tied together, that it will take you hours upon countless hours of trying to piece it all together. And so, it's way more complex than that. Way more. All right. Let's listen to a little bit of I Like Holes. Who doesn't love a good hole? Everybody does. Tell us where to start getting FTX. Those 3 random letters were a great place to get lost starting. That's all I can say. Let's go ahead and let's pull up the good old Powell's bells over here and get them started back up again. Maybe it'll get me all. I feel like a Red Bull. Today's feeling like a Red Bull kind of day today. I feel like if I drink it now, I could probably still drink my toast at the end of the day here. No Vaseline. I'm not going to comment. I'm neither going to confirm or nor deny what you were saying right there. Let's take a look at what the rest of this Powell's bells here.
All right, thank you for being here.
Thank you.
The gentlewoman from Texas, Ms. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being with us today. The end is in sight. I would like to begin by highlighting an issue that has been a concern for the Congressional Hispanic Caucus and others. I know that the chairman has suggested that we're going to weave in the diversity and inclusion issues throughout our hearings, so here goes my concern. There has never been a Latino Federal Reserve president. And further, only about 5% of the Federal Reserve's overall workforce identifies as Hispanic or Latino. As we know, over the past year or so, there have been several presidential vacancies at the Federal Reserve banks, and there has still been consistent failure to appoint a Latino candidate. Chair Powell, are you aware of this trend, and do you agree that it's a problem that our diversity and inclusion numbers are in the Federal Reserve Board are not reflective of the Latino population?
Yes, it's something we've been focusing on.
All right, and can we get a commitment from you that you'll work on the workforce issues internally?
Yes.
Well, thank you so much. And I'd like to now follow up a little bit on some of the questions from Representative Norman, because I too have a concern about housing costs, particularly as it relates to equity and the negative impact on minority communities. I think you said in your paper that activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. As he mentioned, the rates are higher, not only impacting single-family housing, but multifamily housing, and it's also becoming even more and more difficult for people in my district, which is 77% Latino, to be able to buy their first home buyer, the workforce, entry-level kind of housing. As financing homes get harder, as mortgage to find and mortgage rates rise, the population of home buyers is skewing towards older, wealthier, and whiter communities. In many cases, in our suburbs, equity firms are buying out the housing stock. Chair Powell, can you please speak about the relationship between Federal Reserve interest rate hikes and housing inequity, and what needs to change here?
Well, what needs to change is we need to get inflation under control so that interest rates can come back down. In the meantime, they're high because inflation is hurting all of your constituents, not just the housing sector, and all of everybody's constituents. And it's our job under the law to restore price stability and also to keep maximum employment.
Is there anything else that Congress can be doing in this respect?
That would be up to Congress, but there are lots of ways in which Congress can support people in various ways. But that's really in your hands.
Right. Now, I want to move on into the numbers that you mentioned again in your remarks at page 2. You mentioned that of course, we all know there's been a record historic unemployment rate. Is down now to 3.4%, the lowest, I believe, in history. And thank you, Mr. President, for that. But you also mentioned that there's 1.9 job openings for each unemployed individual. I wondered if you could tell me how you define unemployed individual. What does the unemployed individual profile look like?
So that has a very specific meaning. It's someone who is not working but is actively seeking a job. So for example, if you take 6 months off and stop looking for a job, you're no longer unemployed. So that means there's a group of people who are kind of around the edges of the labor force who don't count as unemployed, and those people are marginally attached to the labor force, that kind of thing. But to be actually unemployed, you've got to be looking actively for work in the statistics.
Right, so it does not include people who are perhaps disabled and cannot find accommodations in the workplace to be able to get a job.
Unless they're looking for it. The test is whether you're actively looking, I think, in the last 4
Actively looking regardless of, age,
That's right.
whether or not they're.
It's not a value judgment, it's the way we assess unemployment. We look at the other groups too, but actual unemployment is.
How do you actually have our unemployment insurance?
Sorry?
How do you factor in the people who are on unemployment insurance?
Well, they're unemployed. They've got to be, by definition, we count them as unemployed, or they wouldn't qualify under the state requirements.
All right. Well, I just want to make sure that we clearly understand that there's children, there's people that are older, people that are disabled, people that can't.
Wait, I'm sorry, guys. You're gonna have to put up with my ADD here for just a second. So, being a musician and having gone through music theory in college and taking voice classes and all that kind of stuff, they teach you to never clear your throat, going like you don't want to do this like scratchy kind of things to your voice because it could potentially harm your vocal cords. And so they literally teach you in vocal classes to, if you want to clear your throat, you do something like like that or something like that, right? You do other things other than going like that kind of stuff. So, and so every time I stink and hear Powell go like that, all I can think of is what if he just like suddenly one day was just like that's all I can think of right now is just him like breaking out in like some kind of like falsetto clearing of the throat or something like that. This guy this guy with his like his Beavis little clearing of his throat over here just cracks me up. It's like he's trying to get a lawnmower started or something. I can't help it. These are the crazy things that go through my head.
Daycare, there's so many other reasons why someone is unemployed.
Yes.
All right, thank you. I yield back.
Gentleman from Wisconsin, Mr. Stile, the chair of the House Administration Committee, is recognized for 5 minutes.
Chairman Powell, thank you for being here with us today. Your testimony today has been insightful as we look to tackle inflation, the impact that it's having on families across the United States right now. I want to go back to a comment that was quoted to you as regards to a question from Senator Kennedy yesterday regarding the impact that fiscal policy is having as it relates to inflation. And the quote that was attributed to you was that it wasn't a big factor. As we look at kind of a whole host of policies here on Capitol Hill, from reckless spending that we saw in the previous Congress, a lack of what we just discussed, individuals who are outside the labor market, how do we get these folks back into the labor market, whether or not we have policies that are discouraging folks to come back into work, as we look at high energy costs and opportunity to drive energy prices lower by unleashing American energy. How do you factor in the fiscal policies, or how should policymakers factor in the fiscal policies and their impact that's also having an inflation? Not looking for your advice on the fiscal policies, because I know you want to stay out of that, but how should lawmakers be looking at the fiscal policy and its impact on inflation?
So let's take energy, for example. So remember, inflation is the change in prices. It's not the level, as you well know. So energy prices have been coming down, right? They're still high, but they've been coming down, and they're contributing negatively.
Because you're selling oil.
So when I say it's not contributing to inflation, that's what I mean. In addition, if you look at aggregate spending, it peaked, and then it's been coming down. So the fiscal impulse is actually negative at this point. It's no longer most of the inflation that we now have, something like 2/3 of the contribution of inflation in core PCE inflation comes from the services sector. And that isn't really about fiscal policy. Fiscal policy was important at the very beginning, so was monetary policy, by the way, but now it's more about just inflation is out there, and you have to bring it down. The record is it doesn't come down by itself unless it's driven by transitory factors. For example, in the goods sector, the supply chains have been getting better, and as that's happened, goods inflation has come way down, and sometimes it's negative now. I hope that's helpful.
Yeah, no, thank you. And so to take that one step further, we're waiting on the president's budget. It's over a month late, but we're anticipating receiving that in the near term. And as we look at interest payments on the debt and the cash flow implications that has, not asking for what you're going to do at the next board meeting for obvious reasons, but as you are in those deliberations to future board meetings and potential rate increases, how does the impact of interest on the debt factor into the calculus of you and your colleagues?
So we don't look at that. We're not, if we started to change our monetary policy because we were concerned about the level of debt payments and things like that, that's not something that the United States needs to do, and it's not something we do.
Why would it be something the United States doesn't need to do? Could you elaborate on that?
Yeah, we're going to do our job. Congress has given us the job: maximum employment, price stability, regulate the banks, manage the payment system to some extent. We'll do those jobs. We don't have to worry about the United States budget. That is not our job. And it isn't that the debt today is unsustainable. It's that the path is unsustainable. So we can service our debts. It's just that we're on an unsustainable path, meaning that the debt is growing faster than the economy. So we will never look. If a central bank has to avoid taking actions because it's concerned about the budget. That's called fiscal dominance, and that's a thing you don't see among advanced economies, and it would be something we think we're a long way from that.
Thanks for your feedback on that point. The CBO just released their report showing potential interest payments on the debt accelerating dramatically over the next decade, showing it would be 14% of our fiscal spend. To compare that, right, national defense would be 13, Social Security is also 14, so it's in that level. That's a policymaker issue, but your insights are helpful. I know I only have a few seconds left, and a handful of my colleagues have commented on the ongoing review of bank capital standards. I just want to echo those concerns about what the impact would be of a significant capital level increase. Could you just comment briefly about how you quantify the cost of higher capital in the supposed benefits and how you balance out that risk and reward?
So it's always a balance, exactly as you say. We know that the capital increases that I supported back in 12, 13, 14, 15, 16, earlier in my time at the Fed, they made the banks stronger and they made them more resilient, and you really want that. You want a banking system that can stand up and keep doing its job in times of crisis. So, but the exact balance between that and the availability of capital and the cost of capital is always going to be a matter of judgment.
Thank you very much. I yield back.
The gentlewoman from Georgia, Ms. Williams, is now recognized for 5 minutes.
Thank you, Mr. Chairman. As the member of Congress representing Atlanta, the city with the highest racial wealth gap in the country, I'm focused on creating an economy of inclusion, an economy that works for everyone and brings the most marginalized into our economy. Americans and Atlantans flourish when the economy works for everyone.
I just want to mention, I know I did it yesterday, but I just want to mention how light this, why doesn't it skip? Why doesn't it go back slower? Whatever. I can't get it to
of diverse.
Come on, stop. No.
Groups across the economy.
Well, Chairman Powell, could you...
So it's always a balance, exactly as you say.
Sorry,
we know
one
that,
second. Let me get to the spot again here. But
capital increases that I
But basically, what I'm saying is like,
12,
I mean,
13, 14, 15,
in regards
16,
to like why our economy
earlier in my
sucks so
time at the
bad,
Fed,
maybe it's because
they
our
made the
economy
banks
sucks
stronger and they
because
made them more
our
resilient,
government
and you really
sucks.
want that. You want a banking system that can stand up and keep doing its job in times of crisis.
Our money's disappearing as fast as these
But the exact balance
representatives
between that
disappear
and
out of
availability
the
of capital
out of their
and the cost of
chairs
capital
in
is
important topics
always
like
gonna be a
this.
matter of judgment.
Thank you very much. I yield back.
Watch this. Watch this
The
when it goes.
gentlewoman from Georgia, Ms. Williams,
Here
is now
comes.
recognized for 5 minutes.
Thank you, Mr. Chairman. As the member...
Look how empty that is. You can't. This is the importance seen by our representatives in this topic matter. So yeah. Why do we suck? Because the House is sucking out the members. Okay. All right. I'm done. Sorry. Continue.
Member of Congress representing Atlanta, the city with the highest racial wealth gap in the country, I'm focused on creating an economy of inclusion, an economy that works for everyone and brings the most marginalized into our economy. Americans and Atlantans flourish when the economy works for everyone. The Federal Reserve has a mandate of maximum employment that is measured by analyzing various data points of economic conditions. In 2020, the Federal Reserve updated its approach to fulfilling and measuring this mandate to include job growth that was broad-based and inclusive. Chairman Powell, do you agree that broad-based and inclusive growth means job growth that helps reduce racial, employment, unemployment, and wage disparities?
I think it means what it says. We don't target any particular. We can't really target a particular racial or ethnic group with that, but we like to think that our decisions are informed by an understanding of diverse groups across the economy.
Well, Chairman Powell, could you share examples of how the Fed is including broad-based and inclusive job growth in the maximum employment mandate?
Sure, I'd be glad to. So one thing we do is we always, it's always part of the data that we look at each meeting. We always talk about it. We always mention it. Different unemployment rates and labor force participation rates and wage rates and things like that by racial, ethnic, gender groups and that kind of thing. That's always in the data that we look at and talk about. That's the first thing. So it informs our pursuit of maximum employment. We're trying to take a broader and more inclusive understanding of what that statutory goal means.
Thank you. 2 weeks ago, the Federal Trade Commission released data indicating that Georgians reported the most fraud and scam claims of any other state in 2022, amounting to millions of stolen money. The Federal Reserve's website has resources to help consumers protect themselves from scams where criminals leverage the Federal Reserve's name, including emails claiming potential victims are eligible for lottery winnings, robocalls threatening arrest in exchange for money, and other phishing communications. Chairman Powell, how does the Federal Reserve measure whether its counter-fraud communications are reaching the most vulnerable households and communities, especially those that might not be following the Federal Reserve press releases or your website or have limited access to broadband?
So we do, when those kind of scams happen, particularly when they involve us, we go on social media to try to reach people and tell them that if they're contacted by someone pretending to be a Federal Reserve person, that's not. So we do that. We work with our Inspector General who works with law enforcement to make sure that law enforcement's involved. So we're aware of these scams. I think you're talking about the ones that involve people pretending to be a Federal Reserve person and get in touch with me and we'll send you some money. And so we do what we can to reach out to the public on that.
So is that after the fact, but what happens before so that the general public is aware that this is happening? For those people who are not on social media or tracking is there another way to get this information out to the general public?
We do what we can. We're not an institution that deals with the general public very much. We deal with banks and of course our rate hikes and rate cuts, our monetary policy affects all Americans. But I think when something like that happens, it's a broad program. It's a bunch of people who are perpetuating a fraud on many, many people, and we try to get out there quickly and try to reach people, and again, also alert law enforcement.
Thank you, Chairman. And Chairman McHenry, I yield back the balance of my time.
All right, time for numbers. All right, so if I was Powell, I'm just saying, if I was Powell and I was sitting there and I watched the whole I don't know, at some point if I saw that many representatives just kind of getting up and leaving, at some point I think when it got down to maybe 1/3 of the people left that had originally started there, I would probably ask my own question. I would say are we done here? I feel like nobody really cares about what it is that I'm saying anymore, so we don't really even need to go through the rest of these questions, do we? There's only 1/3 of you left. That's what I would say if I was Powell. It'd be I think we're done here. We've lost 2/3. In a concert, you lost 2/3 of your audience. You might as well just walk off stage. You lost everybody. You lost them all. They don't care what you're saying. I don't know. I don't know what I've been told. But I'm going to take you guys over to the other screen here. We'll go through the numbers real quick and see what we got going on here. I don't have to tell you guys about two-factor authentication speech, but price is starting to kind of move back down again here. We had a nice little run there for a hot second, but we'll take a look at the numbers, see what we got going on. Starting with off exchange, by this time of the day, about 64% combined between AMC as off exchanges and EDGX combined. And right now we've got 60.87% going through off exchanges. EDGX is at 12.34. Very, very high suppression today in contrast to what we have seen for the last couple weeks. We're at 73.21% combined between the two, with 64 being the expectation, so 9.21% higher than it should be. CHX volume is at 0.31% of the total daily volume with a 30-day average of 2.13. Taking a look at Ape, so far for the day-to-day off exchanges, we've got about 53.32% going through those. EDGX is 9.75. That's about 63.07%. It's in the ballhouse park of where it should be for the day. CHX volume is 0.06% of the total daily volume with a 30-day average of 0.06, so it's right on target. We did get a little additional volume there coming through on CHX on Ape. And on GME, CHX volume is 0.1 with a 30-day average of 0.33. Taking a look at Ortex. As of an hour ago, AMC had approximately 1.39 million shares having been returned for the day today. That value is now at 3.05 million shares having been returned. That's going to leave the estimated short share interest of the free float at 24.78%. Cost per minute 1.04, average is 255.6, and max is at 293.32. Shares on loan for the day today is at 183.8 million shares. That is 6.18 million shares less on loan day over day. Ortex is estimating that about 2.06 million of that was in short interest that was closed out day over day. Taking a look at AMC, or Ape rather, I mean. As of an hour ago, there were 79,000 shares in return shares. It's the same. 6.15% is the short share interest of the free float. Still no borrowing of shares today on Ape being reported. Shares on loan did increase by 6.8 million shares to 31.64 million shares in total on loan for Ape. Taking a look at options. Highest amount of call volume is at a $6.50 strike. An hour ago, there were 16.3 thousand contracts. There's now 18.1. And on puts, highest amount of volume was at a $6 strike. There was 21,000 contracts. An hour ago, there's now 22.3. Market still suggesting a closing price between $6 and $6.50 by the end of the day today. Combined price of AMC and Ape is currently at $7.57. We did get a nice little bounce there. Whether or not this continues to rise or not will remain to be seen. But it does definitely look a little bit better than it was. Didn't quite bounce off of 735. Low was 745. Orders by Fidelity customers. AMC, Ape, and GME are the only three that I'm looking for here. I did not see them on the list. SSR triggers at $5.41, $5.41. Ape triggers at 1.584. Shares available to borrow does not look like it's changed in quite a few hours. Fees were last seen at 106.5%. 1 million shares borrowed so far for the day today. NASDAQ is down 0.12, Dow Jones is down 0.61, and S&P 500 is down 0.29. We have 3,923 decliners to 2,530 advancers. It might be improving a little bit more than it was an hour ago, ever so slightly perhaps. And then we've got Ethereum Classic down 3.81%, DXY is up 0.09. WTI is down 0.79. Mortgage-backed securities are down 0.11. And to 0.12, and SPY is down 0.25. Let's see, they got a little note here on SPY. Fed Powell says balance sheet reductions are going well. VIX is up 0.65, VBR is down 0.51, VB is down 0.5, Tesla is down 3.2, Amazon is down 0.44, Cinemark is up 0.49, Doge is down 2.51, Bitcoin is down 0.81, GME is up 1.05, HYMC is down 1.76, Hood is up 1.91, CS is down 0.17, Ape is up 2.75, and AMC is down 4%. Inflow versus outflow, we have approximately $400,000 more inflow than outflow. 15.34 million shares traded so far after 279 minutes worth of trading. putting us on a pace for 21.44 million shares traded by the end of the day today. I suggested somewhere between 10 and 30 million shares. Looks like we're going to hit that. On a 4-hour time interval, there's more selling pressure than buying pressure with an RSI of 34.72, which is below average. On a 1-hour time interval, more buying pressure than selling pressure with an RSI of 29.03, signaling oversold. On a 30-minute interval, there's more buying pressure than selling pressure with an RSI of 30.28, finally coming out of dipping into an oversold territory. On a 5-minute interval, there's more buying pressure than selling pressure with a reversal on this about 25 minutes ago, and our RSI at 47.18, which is slightly below average. On Ape, there is approximately $400,000 more inflow than outflow. 7.42 million shares traded so far after 280 minutes worth of trading, putting us on a pace for 10.33 million shares traded by the end of the day today. I suggested probably somewhere between 5 and 25 million. I really felt like there was a good chance that we might break below 10 million shares, but it looks like they're going to keep it above 10 million shares somehow. On a 4-hour time interval, there's more selling pressure than buying pressure with an RSI of 46.35, which is slightly below average. On a 1-hour time interval, there's more buying pressure than selling pressure with an RSI of 58.55, which is slightly above average. On a 30-minute interval, more buying pressure than selling pressure with an RSI of 62.95, which is slightly above average. And on a 5-minute interval, more actually equal amounts of buying and selling pressure with an RSI of 63.78, which is above average. And I think that's it. That's all I got for you. All right, let's see what you guys are writing. You know, tech we love, if you know that the interest rates are going in the right direction, it's not a bad idea, right? Like, because you know it's just going to get better over time. If you know, for example, this is maybe like for the future. If and when you do see us hitting the bottom of a bear market, at that point in time, if you're going to have to take a loan, wouldn't it be better to be on an adjustable as interest rates are being dropped? Because, you know, if you're going to take on a loan, you might as well reap the benefits from that interest rate dropping, have that better adjustable rate. But see, you're not wrong though. You know, you are taking a pretty big gamble. You just refinance, right? Like if you get to the side to where they start raising interest rates again, then you just move into a new loan and change it. Highway Frog locked his. NC Proud Dad, that's one of the things that I was trying to let people know that, you know, I'm sure that's part of the reason why you're seeing price so low on Ape. They're trying to encourage people to do what it is that you're saying right there. And if you've been a part of this, you know, this play for as long as I think many of us have been, you know better. You know that's not going to help our situation out any. So, but there are definitely going to be people out there who do that. So, And I have a feeling that what's going to end up happening is if there's enough people who do it, we'll probably likely see price start running on AMC when they do so. So, and then they'll probably get locked out, and then they'll be stuck in Ape. And can you imagine if AMC's price started ripping, and then all of a sudden Aron said, "Oh, look at that! AMC's price is ripping, and I know Ape is going to follow here, so I'm gonna take conversion and reverse split off the books. We won't do it. We're still trying to settle it in a lawsuit. Let's just make it a non-issue. We won't go through with it, and we'll just dilute into Ape. And then all those people who made that decision would get absolutely trashed. So I'm kind of counting on something like that, something similar to that happening, to be honest. Originally Papa Mac, yes. But the reason that they're holding it there is because the arbitrage. I would agree with what you're saying right there. They were trying to keep AMC from raising capital, absolutely. But I think the mistake on what they're needing to do now is they need a lot of people to buy AMC or sell AMC shares because they need AMC shares really really bad right now. So what they're having to do is they're having to keep the price the way that it was, low, instead of letting normal arbitrage sort things out. They're keeping it low to try and create a scenario where they can release or get some shares to be released into the marketplace. Paul says, Casey, maybe so. He's taken things off the ballot in the past based on sentiment. Yep. Although, Paul, he said he took it off the ballot because of sentiment, but I don't think that's. I don't know if I necessarily believe that to be true. I don't know. I don't think that's. I don't think that's personally why I think he took it off the ballot, but that's just my opinion, and I can't prove it. So. Pirateborn says we have a vaccine against that scenario. Its name is both. Yep. Andrew, your last name's still getting me. Francis says, are they really going to allow the price gap between Ape and AMC going into the vote? I mean, it looks like it. It shouldn't. They shouldn't, but it does look that way. I don't know. I have a sneaking suspicion that something's going to happen maybe next week, and you see price start jetting up really quickly. Trent says, I have a question, Casey. Bananas or cantaloupe? Only one correct answer. If you fail, you will not be my friend anymore. I'm actually really man, that's tough. I'm gonna assume that you mean straight up. And I prefer obviously bananas because I can't. I mean, I don't know if you know this about me or not, but I have um, really low potassium levels just naturally. So bananas are my best friend ever, but I love cantaloupe too, though. So it's really tough because I grew up. My grandparents actually gave us a lot of cantaloupe when I was younger. So you're kind of putting me in a rough situation because I love cantaloupe, but I mean we're apes here, so I got to go bananas. I've never even had one of those little tiny ones, Mac and Bees. Those really, really tiny ones. I've never had one of those. I don't even know what there's a name for them, and I can't remember what it is, but I've never had one of those. And I won't eat browning bananas. I would rather have bananas that are more green than brown. And and quite frankly, if I'm gonna eat a banana, I'd rather cut it up and put it on peanut butter in a sandwich. And don't knock it till you tried it. If you haven't tried peanut butter banana sandwiches, you ain't lived. There's one side caveat to this. It's got to be heavily layered peanut butter, number one, and it's got to be like super white bread, like I mean like straight up Wonder Bread, because you want that not just the peanut butter to stick to the roof of your mouth, you want the bread to stick to the roof of your mouth. And because the most important part to the entire ingredient of this meal that I'm talking about here is a glass of ice cold milk. If you don't have ice cold milk to go with your peanut butter and banana sandwiches, you have not lived. You have no idea what life is like. I feel like you've gone sleeping through your entire life if you've not tried this. It is something you must try. Try it. Go out there. Thick peanut butter. Creamy. Don't do the nutty peanut butter, guys. Not on this sandwich. You don't put the nuts in with the bananas. you don't put the nuts in with the bananas. It's just straight up bananas only. Bananas only and creamy peanut butter. And Jiffy works too. Jiffy's good. Yeah, I'm Jiffy. Tony smacks his head. Oh man. Got it, Casey. Eat nuts and bananas at the same time. No, don't do it. Oh yeah, Buzzin says, Casey, you have to have it toasted so it's warm. I'm not going to disagree. I'm in agreement with Buzzin on that one. You've got to toast it a little bit. It does add to it, but you don't have to. It's not a mandatory requirement because really it's the ice cold milk that makes the meal the best. And nothing less than 2% milk, guys. If you drink less than 2% milk, don't even do it. Everything I just said is null and void. Everything I just said is completely null and void if you're drinking something less than 2% milk. Let's just not even talk about peanut butter and banana sandwiches if you're not going to at least drink 2% or better. I read what Arthur wrote. Jeff said, hold on a second, I got a cough really bad. Jeff says the wife eats that daily. You don't say. Peanut butter and banana sandwiches on Wonder Bread, or she'll put on peanut butter or just a banana. She eats 2 to 3 bananas a day. I can't stand them. I eat apples. A hint of honey. Let her know. A hint of honey always kind of adds a little bit. It goes a little too far sometimes for some people, adding in the honey in there. But yeah, it's not bad. Have you ever tried a grilled cheese be used in Peterborough jelly and grill in like a grilled cheese? Absolutely. Wait, I gotta read that again. Have you ever tried? I'm gonna take out the like. Have you ever tried a grilled cheese? I'm gonna look it up. Peterborough jelly. I've never. I feel like you're doing like talk to text, and maybe it came through. I think that was supposed to be like peanut butter jelly. I think you did talk to text. I think you did talk to text. Yeah, grilled peanut butter jelly. I looked down further to see if there was another Carl Bowman message, and there it is. Grilled peanut butter jelly. I'm trying to read your message. I'm going like, what the hell is Peterborough jelly? you You might want to get your phone checked out there, Carl, or maybe it sounds like you might have like a little bit of an accent or something. Oh man, that's pretty funny. Peterborough jelly. Yep, love those. Absolutely love them. Mix in some maple syrup and with the peanut butter to die for. That's the honey portion of it that I was talking about. But some people don't like that, so I don't usually tell people to do that. Peterborough jelly. That's pretty funny. I gotta go to break here, guys. Fury says, "Thanks for keeping me from smashing a wall, Casey." You're welcome, man. A smile a day keeps the doctor away. That's what my, well, no, actually, it was my great aunt used to say. She used to say, a hug a day keeps the doctor away. But smiles do the same thing. Smile. I mean, everybody smiles when they get a hug too, so it's the same thing. Smiles and hugs, it's like the same thing. It might as well be. It's so hard not to smile when you get a hug. It's nice. It's just nice getting a hug sometimes. All right, I got to go to break here. And Tech We Left says, "We aim to make you laugh. Enjoy your break." Thanks, man. I appreciate that. I like laughing too. I'm going to go to break. We'll put up a little bit of Powell's bowels here so he can anger you guys a little bit more since we got distracted on the peanut butter and banana sandwiches there. Let me put up hug for 10 seconds or it doesn't count. Yeah, those are special hugs. All right, here we go. We'll put this back up here, and I'll see you guys at 2:10, and we'll toast out the day, do some numbers, and talk about what's our movie for the day today. Our movie for the day today, that's not it. Where's our movie for the day? Hold on a second. I got to get to my notes. Wolf of Wall Street is the movie for the day today for movie trivia. It looks like tomorrow's going to be Goonies. So, all right. I'll see you guys back here at 2:10.
That is very kind and gracious of you. The first of the day. We need to commend that for the record. With that, we'll recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you very much, Chairman McHenry. Thank you, Chairman Powell, for being with us. Chairman, is the Fed's commitment regarding ESG not to force investment banks to renege on their fiduciary responsibilities?
We don't actually have policies in effect in that space. That's not an assignment that we have.
You saw some issuances by heads of some investment banks, not to mention any names, that felt that was the case.
That the Fed was asking them to, we don't.
SEC, Fed, you stated a couple of minutes ago that you feel that some sort of ESG, you stated that banks want it. And
I'm telling you, no, that's different, completely different. It's regulated financial institutions that we regulate and supervise. They're subject to, particularly the big ones, are subject
to
the Fed, climate change.
You agree that
climate
the Fed
change issues all over the country.
won't ask banks to renege on their fiduciary responsibilities. The Fed won't do that.
We don't regulate the investment banks. The SEC does.
Okay, so the answer is no.
What's the question again?
I'll move on. Earlier, some of my colleagues and Chairman McHenry questioned the holistic review of the capital bank holdings. This holistic review, which no one has seen, according to my sources, but there are published reports that it will call for more capital to be held by banks. I understand the deferral to Vice Chair Barr, but do you have any thing that you could add that would warrant a need for large banks' capital increase?
So there isn't a proposal to evaluate or talk about yet. Vice Chair Barr has indicated he was going to take a look. He said he thinks capital is strong, and the question really is it strong enough? And I know he's been working, and there'll be a process when he does arrive at conclusions. He has no authority to enact something himself. It has to go through the Board of Governors, also through the FDIC and the OCC.
Okay, this has
So there'll be
nothing
a
to do with the
transparent
QT,
process.
I'm sorry, with the QT initiative, the tightening of the money supply? They're not related at all?
No, I would say not.
Are you comfortable with the QT reductions which have taken place?
Yes, the balance sheet is, we have the balance sheet moving down at a healthy clip, and it seems to be going pretty well.
Okay,
Very well.
so the Biden administration's fiscal and energy policy has caused trillions in deficit spending, as you well know, very, very excessive trillions. Meanwhile, energy costs for the average American have, from heating oils to gasoline, have increased by over 40%, and businesses, of course, in just over the last 2 years. So high energy obviously affects the cost for manufacturing, wages, general cost of living in almost every aspect of society. Would not such fiscal and energy policy work of the Biden administration working hand in hand with initiatives such as QT and initiatives of the Fed be far more effective than the Fed fighting inflation on your own?
Well, I mean, we are the agency that has the responsibility to restore price stability, and we just have to do it. That's the task we've been given under the law. It's great if Congress helps. It's great if the administration helps, but we have to deliver it, and we will. That's our responsibility, which we fully accept.
We're not risking stagflation if the fiscal policy and monetary policy are working against each other?
Again, we don't comment on fiscal policy. That's for elected people, and we have a job, maximum employment and price stability. We use our tools. We try to stay in our lane, stick to our knitting.
It's just the fear of a number of people that we're going to have high interest rates and higher than 2% inflation if there's not that level of fiscal and monetary cooperation.
Again, fiscal policy does what it's going to do. We take that as exogenous. That's the fiscal policy will be what you and your colleagues do with, and that comes into the economy, and we see it, and we don't have a view. We don't try to comment on the decisions that you make, and we use our tools to restore price stability no matter what happens outside of our building.
Sure. Okay. Mr. Chairman, I'll yield back. Thank you.
Gentleman yields back. We now recognize the ranking member of the Oversight Subcommittee, Mr. Green of Texas, for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Powell, for being with us today. I greatly appreciate your work, but I would like to take just a few moments to talk about how our legislative bodies have legitimized systemic racism. It's been done by having a Fed that has a responsibility to produce maximum employment, knowing that the 2-to-1 black-white wage gap exists traditionally, and also knowing that traditional actions and methodologies will not change that. But yet, we won't give you the authority to make recommendations or to take actions that would directly target that. It's not your fault. It's the legislative body's fault. We perpetuate systemic racism in your mandate of maximum employment. We also perpetuate it in lending because we know that invidious discrimination exists in lending. We know it exists. And there are laws that will prevent and punish persons who cheat banks. You will be prosecuted and you will be fined criminally if you cheat a bank. No such law exists if you cheat a customer. And we know that black people who are more qualified than whites will get less money when they get a loan and pay a higher interest rate. These are all things that are the case. They're true. So legislative bodies continue to legitimize systemic racism. And the bodies have become so bold now, so many of the members, they're so bold now as to say they're sick and tired of hearing about this. They don't want a discussion about racism and systemic discrimination. They believe that all is well as long as all is well in the white world. But many, they won't say it that way, Mr. Powell, but that's the way their actions would lead one to conclude they have positioned themselves. Many of these people are my friends, people that I associate with, talk to regularly. But there comes a time when you just have to be truthful. Systemic racism can be eliminated. It can be dealt with. We know how to, but we don't have the will to do it. So I don't fault you. I don't fault you. Not one scintilla of blame would I cast your way. It's the legislative body. It's the people who sit on this committee who won't allow laws to be passed, making it a crime to deny a person a loan who is qualified to get that loan. People on this committee who will say they don't want to hear anymore and encourage persons who are professionals, experts, encourage them to push back against talk about invidious discrimination. Systemic racism emanates from the legislative body. And you, sir, are in a very awkward position because I genuinely believe that you'd like to do something about it, but you can't. Creates a sad state of affairs. I thank you for the time, Mr. Chairman, and I yield back.
Gentleman's time has expired and yields back. The gentleman from Wisconsin, Mr. Fitzgerald, is recognized for 5 minutes.
Chairman, thanks for being here today. Probably get right under the wire here. I just had one, and some of my colleagues have touched on this today again, that there's certainly, I think we're well aware, I'm well aware, that there's a dynamic back in the district and across this nation. There's a certain segment of adults, 25 to 35-year-olds, many of them dual income, no kids, and they are completely froze out of the housing market right now, either because the cost of a home at a new subdivision in any municipality is $500,000 or more. And as a result of that, it's not only by actions of the Fed, I think, on the interest rates, but certainly the other thing I wanted to bring up, because the balance sheet at the Fed has gone from $4 trillion to $9 trillion post-pandemic, could the Fed, by no longer buying mortgage-backed securities in a smaller universe of the private sector buyers who demand a higher rate of return, right? Is there not another kind of built-in trigger there that mortgage rates are going to continue to go higher, unrelated to what the Fed does? Because I think the concern is that between the dynamics of no new subdivisions, 25 to 35-year-olds unable to get a loan, and then interest rates continuing to climb, all of these factors are just, we're going to lose a generation of adults here that are never going to get home ownership. They're never going to benefit, you know, which we all know is the big wealth builder for any family. So I'm just, if there's anything I take away from what we heard today in the questions asked, I hope that that is something that the Fed is in tune to and is looking at closely.
One thing is that the challenge with supply nationally, and that's zoning, it's people, it's materials, and so the housing stock is constrained to some extent by just harder to find zoning anymore because, things are so built up in so many places. And those are not things that we can control. In terms of our ownership of mortgage-backed securities, what happens with them is they mature, or they're repaid or prepaid, and they run off on their own. That's a passive sort of way to shrink the balance sheet. And of course, they don't run off very quickly when rates are this high because people are not refinancing their mortgages because they have much lower mortgage rates. So, there's no evidence at this point that, that the market's having a hard time absorbing, the supply of mortgages because the supply of new mortgages is very low. It's probably right, it has to be right, that when we're no longer buying mortgages, and we're not buying mortgages now, and I hope we don't have to buy any more mortgage-backed, we don't buy individual, we buy mortgage-backed securities. I hope we're not doing that anytime soon. We only do that in really severe situations. That the fixed income markets are gigantic, and there's a lot of buyers out there, and where there's a yield, there'll be buyers. And I think I expect that'll be the case. It might, not that it wouldn't have some upward pressure on rates for us not to be a buyer anymore, but we weren't a buyer for a very long time. We thought we'd never go back in after the global financial crisis, and we kind of had to after the pandemic financial crisis just to keep the markets working, and now we've stopped again.
Good. Thank you very much, Chair, and I yield back.
Gentleman yields back. Noteworthy. I want to thank, in particular, our members, Mr. Fitzgerald and Ms. Williams, for their additional minutes back to the Fed chair. In a rate environment like this, time is money, and that's much more valuable these days. I'd like to thank the chair for his testimony. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask you, Chair Powell, to please respond as promptly as you're able. And with that, the hearing is adjourned.
Thank you.
I can't take that anymore. I can't take it. It's too much. Too far. Let's see here. What do we got going on here? 209, 210 almost. It's time to take a look at our numbers. We got toasting to do here. Next birthday is going to be tomorrow. I think. Let me just make sure I don't have anybody else on my list here. Yeah, okay. All good. Nobody else. Nobody today. AO says you don't like the Napoleon Dynamite waiting music. I'd have to look it up and see. Is that what that was? Was that what I was just listening to? It's horrible if that's what it is. Mega Hulk says the key to fixing all of your country's problems is ethnic diversity, and it absolutely is. That truly, really will change everything. It allows for a broader range of ideas. Because with more diversity, there becomes more ideas. So that's merit. Merit does not have anything to do with it at all, Megan or Mega. Merit is, or what you've accomplished in life, or your knowledge and your experience means nothing. It really is about just differing ideas. Let's see. For the day today, I had a price closing prediction of 598 for AMC, so we're low by about almost 30 cents, not quite, but almost. And for Ape, I had a I said Megan. Sorry about that, Mega Hulk. I wasn't. I know you were being sarcastic. I was. That's why I came right back at you with more sarcasm. 178 was the closing price that I was suggesting for Ape, and that's pretty close. It's 570 right now for AMC, and Ape is currently 1.795. So I'm a little off here. Our combined price of AMC and Ape combined right now is at 750. I was thinking 776. So I'm about 26 cents higher than I should have been. Yeah. What am I toasting to? To freshmen. To freshman senators, to freshman reps, House reps. Don't lose that hunger for wanting to make changes. Don't allow the system to corrupt you. I'm acting like they're going to hear me. Who am I kidding? They're not going to hear this. I don't know. Maybe I don't know. Maybe one of you guys will end up being a House representative or a senator in the future. I don't know. Maybe I'm speaking to somebody who will hear this in the future. Don't let the system corrupt you. Don't let it. Refuse. Do not let the system turn you into that which it is, and spit you out just as corrupted as it is already. Strive to be better. Strive to make things that you touch better. Interact with people and make life around you better. It's for a good reason. It makes the world a better place. So to the freshmen out there, keep up that excitement. Keep up that energy. Keep up that pace. Cheers. All right. let's see what we got going on here. Numbers, because then I got to do movie trivia. Real quick before I do the numbers, well, actually I'll take you over this page real quick. I just kind of want to see one last time what the CME probability target rate is here. Let me refresh this real quick. See what we got going on. 77.9% chance of seeing a 50 basis points now. It's pretty high. It's not quite as high as Snoop Dogg, but it's high. Let's see what we got going on with these numbers. I'm not going to be able to see what it is you guys are saying until you see the big tramp back up on the screen again, so hold those personal comments, thoughts, questions, or concerns until you see that. Also, two-factor authentication. If you don't have it, please try it out. See if it's something you can live with. You don't want somebody getting into your account and making changes that, to your account. That would be, devastating. When you try it out, if they allow you to put in a secondary device that can receive the code to get into your account, set that up as well, just in case something should happen to your primary. Please do not post your control numbers for your votes. If somebody gets a hold of that, they could potentially get in and change your votes. And please also take pictures of your portfolios, save them in a folder somewhere with a video footage or a file of what it is that you've taken to kind of prove your position in case something happens with your broker and they mess things up and modify it. So try to take those daily. Weekly, if you don't have that active of an account, you could probably get away with it just weekly. Let's see what we got going on here for these numbers. Starting with off exchange. By this time of the day, I would expect about 66% combined between off exchanges and EDGX. At this time, we've got 60.62% for off exchanges on AMC, 12.22% for EDGX, for a grand total 72.84%. That's 6.84% higher than it should be. CHX volume jumping very slightly, maybe since the last hour ago. It's at 0.37% of the total daily volume, with a 30-day average, though, of 2.13, so it's kind of low overall. It's only about 60,000 shares. Off exchange for Ape is at 53.3%, EDGX at 9.52. The combined total on that is 62.82%, or about 3.2% lower than it should be. CHX volume is 0.05 with a 30-day average of 0.06, so it's right on target. GME's CHX volume is 0.1 with a 30-day average of 0.33. And taking a look at Ortex. As of an hour ago, there was approximately 3.05 million shares having been returned. It's now 4.33 million shares for AMC. That's going to have the effect of driving down that short share interest of the free float to 24.73%. Cost to borrow mins at 1.04, average 257 or 251.71. Max 293.32. Shares on loan for the day-to-day decreased day over day by 6.18 million shares, bringing us to 183.8 million shares on loan. Ortex is estimated that about 2.06 million of that was likely short interest that was closed out day over day. On Ape, as of an hour ago, there was approximately 79,000 shares having been returned. It's still the same value, leaving that short share interest of the free float at 6.15. There's been no borrowing of Ape whatsoever. None. Just zero borrowing going on. Shares on loan for the day increased day over day by 6.8 million shares to 31.64 million shares on loan. Taking a look at options. Highest amount of call volume for the day today on AMC has been at a $6.50 strike. That is still the case. It was 18.1 thousand contracts an hour ago. It's now 21.2. On puts, highest amount of volume for the day today is at a $6 strike. There was 22.3 thousand contracts, which is now 22.7 in volume, and so market's still suggesting a closing price between $6 and $6.50. We're probably going to see it on the low side of that if that's going to be the case. Combined price of AMC and Ape is at 751 right now. We are consolidating just a little bit right now after having moved down for a good portion of the day today. Struggling to maintain our value from last week. Orders by Fidelity customers, AMC, Ape, and GME are the only three that I care about on this list here, and I don't think any three of those will be on this list due to low volume for the day today. And nothing. SSR trips for the day today at $5.41. Ape trips at 1.584. Shares available to borrow has not changed in the last, I don't know, since noonish. Actually, before that, I think nothing's really changed since like 10:32 Eastern Standard Time. So we've seen about 1 million shares borrowed so far for the day today with fees at 106.3%. NASDAQ is down 0.06, Dow Jones is down 0.52, S&P 500 is down 0.26. We have 3,867 decliners to 2,619 advancers. The market might be slightly more advancing now than it was an hour ago, but not very much. Ethereum Classic now down 4.02%. DXY, or the US dollar, is currently up 0.06. WTI, or oil, is currently up 0.18. Mortgage-backed securities for Vanguard and BlackRock are down anywhere from 0.03 to 0.07. SPY down 0.25. Taking a look at VIX, it is up 0.65. VBR is down 0.45. VB is down 0.47. Tesla is down 3.59. Amazon is down 0.13. Cinemark is up 1.24. Doge is down 2.77. Bitcoin is down 0.91. GME is up 0.27. HYMC is down 1.93. Hood is up 2.18. CS is breaking even. Ape is up 2.27, and AMC is down 4.74. Inflow versus outflow for the day-to-day on AMC, there's approximately it's pretty close to $20 million more outflow than inflow. I said million. 200,000, sorry. 17.08 million shares traded so far for the day today. After, let's see, 352 minutes worth of trading, putting us on a pace for 18.92 million shares traded by the end of the day today, and that's going to be within that 10 to 30 million shares I suggested in pre-market. On a 4-hour time interval, we have more selling pressure than buying pressure with an RSI of 32.63, which is below average. On a 1-hour time interval, there's more buying pressure than selling pressure with an RSI of 26.82, which is below average, actually signaling oversold. On a 30-minute time interval, there's more selling pressure than buying pressure with an RSI of, let's see, what do we got? 29.06, which is signaling oversold. On a 5-minute interval, there's more buying pressure than selling pressure with an RSI of 47.36, which is just slightly below average. On Ape, there is approximately $400,000 more inflow than outflow for the day today. We have 8.49 million shares traded so far after that 353 minutes worth of trading, putting us on a pace for 9.37 million shares traded by the end of the day today. This is what I was kind of fearing, so I didn't say 10 to 30 million in volume. I actually lowered it to 5 to 25 million because I expected really low volume today. And here we are at 9.37 for a pace for the end of the day. On a 4-hour time interval, there is more selling pressure than buying pressure with an RSI of 45.64, which is slightly below average. On a 1-hour time interval, there's more buying. Actually, it looks equal. Just slightly more buying pressure than selling pressure with an RSI of 56.51, which is slightly above average. On a 30-minute interval, there's more buying pressure than selling pressure with an RSI of 58.31, which is above average. And on a 5-minute interval, equal amounts of buying and selling pressure with an RSI of 47.32. Now it's 53.54. So it's now it's 47.32. It's just going to keep flipping back and forth. It's real close to average. Looks like they're going to trade us out sideways today. All right. We're about 6 minutes out from movie trivia. The movie for the day today is going to be Wolf of Wall Street. Let me transfer over some questions here real quick. All right. Actually, let me read through these questions. I actually hadn't had a chance to read through these questions yet here. Let me read through these questions real quick just to make sure I understand them all. Wow. There's a question in here that I did not know. Very, very interesting. I wonder why. Pantheon, since you're here, I'm reading question number 3. We'll have to talk about that one later. I'm kind of curious why that was. Here's another one I didn't know. Actually, I didn't know most of these, but here's one that I wouldn't have even come close to guessing. I remember. Okay. The best question is, of course, the last one. I just remembered why. It's Pantheon says it's true. When we get done with the quiz today, maybe we can talk about that a little bit. That's kind of interesting. I'm kind of curious why. I didn't know. All right, we got about 3 minutes left here, guys, before we get to the movie trivia for The Wolf of Wall Street. Let's see. I think Goonies is winning by a comfortable margin. I'm going to go ahead and end the poll. There's no sense in even trying to get it changed here. So we'll end that. That way I can write it down. So Goonies will be the movie for tomorrow. I'm hoping I know which question. Pantheon wrote the questions for I'm gonna have him do it for this week, and we'll see how it goes. But he wrote the questions for yesterday and today. So when you get into the mind for the last question, you have to get into the mind of Pantheon today, not necessarily my head, but Pantheon's head. So it's going to be a little bit of a tricky thing to do. Let's see here. I got to copy and paste this down. There. All right. Okay, we're getting really close to movie trivia time. I gotta fix that. All right, here we go. Hit live now for movie trivia. We'll start here in about 1 minute. 1 minute before we start. What is it? Rigged. Rigtheon. Okay, I see where you guys are going with this. Nah, it's not rigged. It's just we're trying something different here. It's And the interesting thing is that the results were amazing yesterday. We had Yucca yesterday answering a question before I even finished reading it off, which made it seem like it was rigged. I think we only had three contestants that actually even scored any points yesterday. So, yep, Pantheon cannot answer. He's bowing out for the week graciously. Pantheon's like, that's rigged. Alrighty, guys, here we go. I need somebody to say ready so that I know you guys are ready to go here. I know that I'm live. I can see that you guys aren't taking too long to hear me. The quicker, the better. Just one. It's the Wolf of Wall Street. All right, Jared Hutto says ready. Here we go. First question for the Wolf of Wall Street. What major event in the finance world was the reason that Jordan Belfort was laid off from LF Rothschild? Blow is not correct. Black Monday by Yucca is correct. All right. Yucca changed his name back here. When Jordan Belfort made his first call for the Investor Center, what penny stock did he push for his client John to buy? Jeffrey says Ape. Aerothine is correct by Yucca Frida. Aerothine International is correct. Yucca's on a rampage today. I don't even think censored content's here today, and he's trying to take advantage of that, I think. All right, next question. Let's see here. How many countries was Wolf of Wall Street movie banned from being shown in theaters? $60. 5 by Frank Lehman is correct. Lehman from the Lehman Brothers. It would make sense you would know. I'm just kidding. I'm teasing Frank. Frank Lehman. Frank's like, you've made that joke like 8 times now. It has not been funny any one of those times except for maybe the first. I'm sorry, Frank. I apologize. I'll try not to do that anymore. Next question, and this is actually an interesting question, right? I thought that was really interesting. It's Kenya, Malaysia, Nepal, Zimbabwe, which they all have a little bit of something in common there, and then India. And India's for whatever reason, I don't know what the reasons for it is, but those 5 particular countries, I think I might know the reason why, but I'm not positive. So it'll be interesting to hear if Pantheon wants to elaborate on that. But hold off, Pantheon. Wait till the end here. We're going on the next question. What is the name of Jordan Belfort's company started after he left the Investor Center? Oh, you went ahead and said it, Nudity. That's what I kind of thought that might be. Yep. Kind of figured it was going to be something along those lines. Yucca Frida didn't spell it right, but that's it. Strastun Eukemont. Yucca Frida had a seizure over there. Yes, Yucca, that is the correct answer. For the correct spelling, I'm gonna go ahead and give it to Pirate Porn on. Oh no, actually you didn't spell it right either. Never mind, Pirate. I was gonna give you a point because you put Stratmont. It's actually Stratton Oakmont. Stratton Oak Oakmont. All right, here's one. This one's gonna be tough. I don't know if you guys are gonna be able to get this one, but how many times is the F word used in the movie? For reference, there's 681 total swears, but the F word is used, obviously a portion of that. Wow, 10Ds plus went with 700. That's not far off. It is closer. 569. Who put that? Pirate Born. That is correct. 569 is right. Dang, Pirate, that was quick. I gave a hint on that one. Even Pantheon gave me a hint on that one because I think he kind of thought that you're going to need it, and so did I. Maybe not though. What 2 3-letter organizations investigated Stratton Oakmont? 2 3-letter organizations. 2. Frank Lehman for the correct answer. FBI and SEC. Yucca only got one of the 2 in. So Frank Lehman for the point. When Jordan Belfort kicks the FBI agents off his boat, what does he call the money that he throws into the air? Fun Coupons by Pirate Born is correct. All right, next one. What year was Jordan Belfort arrested by the FBI? Yucca Frida got it right on the second try. It is 1998. He got the 8 and the 9 backwards. So, but you got it right on the second time, Yucca. So you got it in time, fortunately. Frank Lehman, it was a little bit. I've got down 1998 here. Jordan Belfort pleaded guilty for the pump and dump schemes and was sentenced to prison. How many months did he actually end up serving in prison? 22 by Yucca Frida is correct. Yucca Frida's pulling away here. Look at this guy. All right, here we go. For the final question, for 2 points, guess the answer to the question before I ask it for 2 points. Attendees plus, but Mistress begging. I wanna give you guys a hint, but I think I should probably. I'm gonna give it to Peter Pearson. He said dwarf, and that's probably the most polite way you could probably put it. Quite frankly. Yeah, Peter, you're getting 2 points, man. Peter Pearson, Persson, Person. I don't know how to say the name right. Peter Persson. 2 points. The question was, what was being thrown for a $25,000 bullseye prize? And the answer was little person. So yeah, that is dwarf, close enough. That was the right answer. You got it. Frank Lehman says little person aerial aerobatics. All right, well, let me add up the tally points here for the data, guys, and see what we got going on here. Yucca adding to his additional points that he's already got. Congratulations. Frank Lehman, first day on the board here for this week, so congratulations to your first points of the week, Frank. Pirateborn, congratulations on your points of the week. First points of the week, I should say. And Peter Pearson, getting in Pantheon's head and getting his first 2 points. Those might be his first 2 points ever. Censored content says, "Good afternoon. Guess I'm late." Yeah, you just missed it, buddy. You just missed it. Sorry about that. And I'll tell you why. I'll tell you why. I'm sorry about that because in third place is Berry Electronics with 3 points. In second place is Censored Content with 10 points, and with 11 points in first place is Yucca Frida for the week. Censored Content getting here just too late. Was unable to hold the reign for the week here. So there it is. There you have it. It's 11-10. It is a very close race right now between Yucca Frida and Censored Content. Tomorrow's movie will be Goonies. Be ready. Hey, you guys. That's the most iconic classic. I think is there a better like if there was one quote from Goonies that you guys would put out there as the most memorable quote from the movie, would you say, "Hey, you guys," or would it be something else? What would it be from Goonies? Oh, my wife's saying something. What'd you say, hon? My wife said, "Baby Ruth." It kind of makes me want to go back and see it again. Aron says, "Truffle shuffle." Do the truffle shuffle or shuffle truffle. It was truffle shuffle, not shuffle truffle. I think I told you guys before. I always forget that guy's name. What is his name? Robert something or other. Hold on a second. Robert. It starts with a D, maybe. What is his name? Robert Davi. So Robert Davi was one of the three brothers. And my dad was actually friends with him. And it was the weirdest thing. I don't know if you know who Robert Davi is or not, but he called me. My dad calls me up, and he's got this like loud bar background kind of sound going on. He's like, "Hey, Case, I just wanted to call you up and say hi." And I was like, "Hey, Dad, how's it going?" He's like, "Oh, I'm doing real good. I'm sitting here with Robert Davi, and we're just yucking it up, having a good old time." He's like, "You want to say hi?" And I was like, and I'm sitting there going like, "I don't know who Robert Davi is." And I go, "Dad, I don't know who Robert Davi is." And he goes, "Oh, you don't know who he is?" He's like, he was in Goonies. He was in a James Bond movie. He was like a bad guy in one of the James Bond movies. And like, obviously, Robert Davi is on the other side of this phone call, hearing what my dad's saying. So now Robert Davi knows that I don't know who he is. So, I'm feeling even more awkward at the time. And so I'm like, "Okay, sure. Yeah, let me talk to him." I'm like, "Goonies. Oh, yeah." I'm like, Goonies, 'cause I couldn't remember who he was. I was like, I don't know who he is." So he hands the phone over to Robert Davi, and Robert Davi said hi to me, and we talked for a little bit. Interesting guy. It was kind of one of those weird things, though, when your parents hand the phone over to somebody else. It's always weird. It's always weird when your parents hand over the phone to somebody else to talk real quick, because it's just like you weren't planning on talking to that person, and it's just kind of like, I don't know what to say. Hi, how's it going? How's your life? What you up to? I didn't know what to say to him. So, but yeah, so I had a chance to talk to Robert Davi. That was kind of fun. Yucca said, "I've hired a group of employees from India to answer my trivia questions." Well, today it wouldn't help them. They wouldn't have been able to give you the answers because it was outlawed in their country. Yeah, Ayo says, "Here, son, speak with this stranger." I was an adult at the time, yo, just saying, but it's always awkward. Really nice guy, though. Sam says, "Nothing brings me more anger than watching the party where they rip up the sales contract and throw it in the air, and then it miraculously turns into 100 pieces. Pisses me off every time." there was a movie I was watching with my wife. I want to say like last week, and there was a rain scene, and you could tell by the way the rain was coming down that it was coming down in like a almost an umbrella kind of. You could tell it was coming out of like a shower head, and because it had this like you could see the curvature on the sides of the screen, the rain was coming down in this like arced pattern coming down, and then the rain that was coming down on the actual cast member was like directly over the top of them, was coming straight down, and it was really annoying from my perspective because as I was sitting there watching, I was going like, it just didn't look right. But I know what you mean. I catch those little weird things like that too, Sam, and they annoy me too. You know, you would think, uh, that having the opportunity to talk to Robert Davi, that I would have said something really cool like, "Hey, tell me some cool fun fact about the movie that nobody else knows, or that not very many people know." But did I? No. Oh no, I didn't think to say that. I just was like, "Hey, how's it going?" But yeah, that would have been the perfect thing to ask. Is like, "Hey, tell me a fun fact about the movie that nobody else really seems to know." Pantheon says it was a real ship that they did not let the cast see before they filmed the scene so the kids would react honestly. It was free for anyone to take, but nobody wanted it. It was scrapped. Or, I think he meant scrapped. It put scapped. Food Dog says, I wonder how you all know this info, and then I realize I know fish have molars. Well, we got that end of the day run up on AMC to push it up here. I was looking for 598. Maybe I don't think it's going to get to 598 before the end of the day is over here, but it is getting that extra little push up at the very end. The combined price of AMC and Ape right now is at 765. I was looking for 776. So I'm only off by 11 cents as of right now, but right now it is hitting a Fibonacci retracement at that value at 765. So it might kind of stall out where it's at right now. I've never been one of those people that has to meet like a celebrity. There was a time when I was in Hawaii at the Outriggers club in in Oahu. I almost forgot the island name. In Oahu, and so we were at the Outriggers Club. We had checked out a longboard to go out on, and we were out on a longboard, kind of riding some waves. And Magnum PI, I don't know what that guy's real name is, whatever that guy's name is. He came on with his wife. He had an I don't know if it. I don't know if he's had multiple wives or not, but at the time, his wife, she was Asian and she was really small. It's really weird because Tom Selleck, thank you, I couldn't think of his name. Tom Selleck is like this like 6'4" dude, like 6'5", maybe even 6. I don't know what he's really tall, super tall, and his wife was like maybe like all of like 5'1". And seeing them next to each other was the weirdest thing. It was like I'd never seen like such a height discrepancy between a couple before, and so it was really kind of it was just kind of a weird thing. And then somebody asked me, they said, "Hey, do you want to go meet Tom Selleck?" And they said they would introduce me to him, and I was like, "Nah, I'm okay." And so I had an opportunity to meet Tom Selleck, but I just kind of, I don't know. In my opinion, I always kind of feel like it's rude to kind of like interrupt him because it's like he's there to enjoy his day. He's hanging out at the club. He probably doesn't want people coming over and being like, "Hey, big fan. I don't know what your name is, Tom Selleck." So I've never been one of those kind of people that I get starstruck by. I do. I guess maybe starstruck is probably the wrong word because I do kind of not remember what I should say or say the right thing. But at the same time, though, I really don't feel like I got to meet him either. So it's just kind of, I don't know, it's kind of overrated, I think. I've never been one of those, I got to go meet somebody kind of thing. Well, although I have to say, my wife's listening in the background. She won't hate me for this, but you won't, hopefully. But if I went to like a club someplace and I found out I had an opportunity to meet Halle Berry, I'd probably go say hi. That Halle Berry, on the other hand, I would make an exception for, only because I heard she's really cool, and I don't think she would mind too much, and I would definitely love to just say hi. But that's probably the only one I can think of that I would do that for. Everybody else, meh. Keanu, I wouldn't interrupt him at all. That dude gets interrupted by everybody. And I would not ever even in a million. He seems like the coolest guy in the whole wide world that you could probably meet in public, but I wouldn't bother him. Everybody else does. Sam says Kiana is cool, just a normal dude. Yeah. Were you starstruck with Adam Aron? No, I was pissed off that I broke the mug before I went up to meet him. More than anything, I think I was upset by that. I was really upset by that mug getting broken. You have to pick a dude now to make it right. Oh, all right. So who's the male actor I would want to meet? Jack Black. I think Jack. I would hate to interrupt Jack Black though, because he's such a cool dude that I would hate to interrupt him, because he's kind of one of the guys where he is so cool. I don't know if I'd want to interrupt him. Let me think about that for a second. Maybe. Hmm. Pirateborn says Adam Sandler. My wife would love to meet Adam Sandler. I'd do that. I'd pick Adam Sandler just for my wife. I'd be like, yeah, let's go meet Adam Sandler. It's he's a cool guy. You'll like him. Yeah, let's go with Adam Sandler. That's a good one. I like that one. Although I think he could probably end up being. I think in a pinch, if he wasn't feeling it, he probably could be a little bit maybe upset with being interrupted, and might like treat you as such. Ayo says all for me grog by Barstool Hooligans. Ayo, I'm gonna put it into the Discord, and we'll see what we get. See, Jim says Adam Sandler's a cranky old man now. Yeah, and that's the part that I would really kind of be worried about a little bit. He is a comedian, and he probably knows how to tell people off pretty quickly. He give you that angry, what do I look like now? Like kind of like raise his voice, kind of, what am I gonna sign? It's just, I don't know if it's worth it. Would I like to meet Ron Jeremy? I could care less. Ooh. Yo, I'm not even going to repeat what you wrote there, because them be fighting words for my wife. I'm not even going to repeat it. I'm really trying to think of somebody else, though. Adam Sandler's not bad, but I'm trying to think of somebody else that I would want to meet. Hmm. My wife said Ryan Reynolds. I think if you put me and Ryan Reynolds in a room together, you know, maybe it's a bar and we're drinking, there's gonna be some funny shit that goes down. It will be funny, and I think for sure, um, he would be quite hilarious to hang out with, I think. And he's Canadian, so you know he's got to be a good guy, you know. Tom says Jack Nicholson. Not so much. I'll pass. Tom Hanks, meh, I could care less. Well, see, the thing is, Henry, is that with somebody like Ryan Reynolds, he escalates, right? And I don't have any limits, so I would escalate, and then he would escalate, and then I would escalate, and before you know it, you put somebody like me and Ryan Reynolds together, and you add in drinking into that, and you have no idea what's going to happen by the end of that night. No idea. There could be some streaking going on at a golf club someplace. I don't know. But something crazy will end up happening. I promise. It would turn into somebody being in jail. it would definitely turn into somebody going into jail somewhere. You know, overnight. Streaking with Anthony Hopkins. Oh man. Paul Rudd. I have to look him up because I can't remember who that is. Hold on a second. I know who it is, but I can't. Oh, Ant-Man. Yeah. He's all right. He's all right. What'd you say? Oh, she just said the Between Two Ferns guy from the Bachelor thing. Yeah, that could be problems. There could be problems with that. He doesn't know when to stop either. Zalfanakis. Yes. That Zach. Yes. Thank you guys. I couldn't remember the name. That would be. We probably would go beyond jail. There would be something there beyond jail. With Zach, and that would be too much. That's going too far. You never. It's like crossing streams as the Ghostbusters. You just never do it. Putting me and Zach in the same room. That's just going way too far. You never want to see that happen. That's bad idea. All right, it is that time of the day, guys, and you know what that means. Eat, sleep, drink, get plenty of rest. Tomorrow is another trading day. We've got 2 more to go. Spend time with your family, spend time with your friends, take your pets out for a walk because they like to get outdoors too, and go see a movie, for crying out loud. That is what we're here to do, is support AMC. But above all else, don't have a good night. Have a great night.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, 5, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Okay, you sound good.
Discovery Houston, negative return.
Copy, negative return.
Run away, I need time to figure out. Wide awake, oh wide awake, seeing signs of slowing down. Oh yeah, we wake up in the morning, think about the nights. Every drink we're pouring starts another fight. It's a hazard to our health, but we do it to ourselves every time. Who knew? Nobody can hurt me like you do. Stuck me in the dark like voodoo. Go and make your mark, yeah, I'ma love you from afar. Bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. Wanna love you from afar, baby, bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. I know where is home, or where to go, what to say anymore. Cause I swear that I've done it, I wrote it, and I sang all the same shit that you've heard before. Because we wake up in the morning, think about the night, how we spend $200 on a dinner and we fight. It's a hazard to our health, but we do it to ourselves every time. Who knew? Nobody can hurt me like you do. Stuck me in the dark like voodoo. Go and make your mark, yeah, I'ma love you from afar. Bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. Wanna love you from afar, baby, bless your wicked heart. I know you mean no harm, baby, bless your wicked heart. I wanna love you from afar, baby, bless your wicked heart. used to be so tragic. Let's go back to the way it was. Maybe you can do your quick black magic, bring to life all that's dead with us. Who knew nobody can hurt me like you do? Stuck me in with your voodoo. Gonna make your mom, baby, gonna make your mom cry. I love you from afar. Nobody can hurt me like you do. Stuck me in the dark like voodoo. Go and make your mark, yeah. I might love you from afar. Don't make it hard, don't make it hard, don't make it hard. I know you mean no harm, baby, bless your wicked heart. Don't make it hard, don't make it hard. Wanna love you from afar, baby, bless your wicked heart. Don't make it hard, don't make it hard. I know you mean no harm, baby, bless your wicked heart. Your wicked heart. I wanna love you from afar, baby, bless your wicked heart. Your wicked heart, your wicked heart. Bless your wicked heart.
When the night's getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. So when the night's getting colder, and you're needing that shoulder, these apes got your back. We got each other. All we do is we buy and hold.